Ready, everybody?
Everybody in the world loves RSI.
I do. I do. I do.
Me too. Everybody in the world loves RSI.
He does. She does. We does.
Me does.
And I especially love Iron Brew, even though I used to be a man. Even though I used to be a man.
Hello everybody. The sound was broken. Well, we can take it from the top then in that case. Thank you also for joining me. Great to see you in there, Aaron J. Anderson, and great to see you. It's still broken? Are you sure? I can see it working on my screen. I think it's maybe the delay. I think it's the delay. Is it the delay? Let me know if you can hear me. Great. Excellent. Thanks for letting me know. Hi, TradeSpotting. Hiya, Inferno, Kill7. Hiya, Aaron J. Anderson, #1 in the chat so far today. You were the first person in there. Thanks so much for giving me a comment. And sorry to everybody about the no sound. That was just me a little bit excited to be singing a song about Iron Brew there. It was this band advert that I was singing for Iron Brew. Band Iron Brew advert. Everybody in the world loves Iron Brew. I like this advert and I like this song, and I sing it to myself whenever I've got a bit of that orange magic, which is Iron Brew. Thanks so much to my compatriot TradeSpotting for bringing round a can of it for me this evening. Everybody in the world loves Iron Brew. I do. Me too. In this episode today, we're going to be taking a look at Bitcoin and a lot of altcoins that you suggest, and we'll be looking at Tezos, Chainlink, and Ethereum as well, as we do in every show. So that's going to be exciting. And as we can see, the prices have been skyrocketing. Whoop! And we've gone all the way up quite close into that 2618 Fibonacci retracement point in there at 24,500. And we're well above that 21,500 1618 target that we were talking about before, and various other targets. But just jump over to that Bitcoin USD chart that we've been using recently. You can see well above all of the chat that we had with regards to the price, and we didn't see a pullback and come down to the 236 or any of that sort of stuff. And of course, currently now, what that means is that the 236 is actually coming in at, from, you know, on the coming on a Fibonacci drawn in from the lows on 26th of November up to these recent highs. That particular Fibonacci, the 236, comes in there at 21,969. So let's just call that 22,000, and 22,000 is going to be one of those levels for us at the minute that represents, I suppose, one of those BTFD rebuy zones, I suppose. And we also have this kind of structure that we broke through here, and we were talking about this, kind of trying to figure out what way we would have this in yesterday's show. How would you line this line up, and saying that I don't really know about it and whatnot. And as you can see, you know, we smashed right on through it there, in it around about the time that we were really kind of, you know, thinking about things in at that 20,800 level, as we were talking about yesterday. Well, we managed to see the follow through come in, and of course prices rose towards the top side. And where does that put us in line with this, if we were to think about it as being some sort of measured move type target? Well, there's your full measuring stick there. I'll draw on two just now for the convenience for myself, and this one here, I'd say that's about roughly 60% there. So there's your 60% style move, there's your 100% style move, and you can see that we've come in here and touched off of this 100% measured move off the back of that. So in terms of your first sort of In terms of your first sort of potential profit taking zone off the back of this pattern on the charts here, you're already at or have already achieved your buy target in there with today's high so far at 23,800, and we see the prices now are kicking about 22,999, so we're between those levels, and that's what we're talking about in the range of the volatility that we've got at the minute. Is going to be taking us anywhere between the 22,000 and 24,000 price points, and that's kind of going to have to bracket off what we're looking at with regards to the price action. How have you all been doing there? Has everybody been getting on well? Made in Scotland, Faye Girders, says Lee Chinnick. Yes, that's right, exactly. It is. It's made Faye Girders, that's what it is. By the way, for people who are interested, which I know there'll be very, very, very few, but Iron Brew actually was a drink sold by apothecaries over there on the street facing the university at Portoroe Street, you know, and what do you call it, next to John's, that medicine, herbal medicine company, you know, the oldest one of those herbalistic people in the world, all there back in the invention of medicine. Anyway, we used to sell it in Scotland as a sort of health drink from apothecaries. Then Iron Brew started up, and that's where they got the recipe from. Interesting stuff for people around the world who don't care about Scottish parochial drinks. Here's another one though I'm actually enjoying currently, and that's a nice cup of tea. Nice. Okay, cool. So I see somebody's also talking about a license plate. My Bitcoin vanity license plate should be here any day now. Sell it and buy more Bitcoin. What Bitcoin license plate did you get? What does it say? Made in Scotland, Big Girders. Thanks. Smart thinking on the license plate. Couldn't believe it was available. Yeah, what does it say? Napier's. That's it. John Napier's. Thanks so much, Tradespot. You got it. Great. Yeah, it's great to have you all here, by the way. I hope you're all doing really well, like I was saying. So does this at this point that we're at right now potentially offer up a buying opportunity for us even right now as we're looking at the charts? Well, we're going to have to zoom in a little bit from this 24-hour time frame, I think, or the 4-hour time frame here that we're on at the minute, potentially to put some of this into context. I think we can start off with a nice whack-a-dackles of the old context for us by hiding off all of that junk drawings that we've got on the chart there, and instead just popping on the Bollinger Bands just for the crack. Now, we spoke about the Bollinger Bands in yesterday's in terms of the 4-hour Bollinger Bands here, the chart on the 4-hour chart, the Bollinger Bands yesterday, and saying that this position, you know, was obviously stretching towards the top side, and at any time, you know, we're going to see this pull back down towards the Bollinger Band, and it just keeps on happening, of course, but then striking on up the way after that. Now, over here on the 17th of December, on the 4-hour candle from 8 o'clock in the morning, we saw that we actually had a range that took us all the way up towards our highs, and indeed our lows of today. So the lows of today are 21,230. So you can see that we're well above that currently, and that gives us a little bit of context for us in terms of the recent price action and where we could be going either side of this. So I'm just going to bring the drawings back on here. Pop that line on there so you can see, and also pop this line on here, but it's kind of a bit of a moot point when it comes to this, as we can see the 236 showing us the way already with regards to the price action. So that's kind of handy to see in terms of knowing our areas to be aware of if we do see a retrace down the way. Now, this is the first time we've seen the price move back into the Bollinger Bands since the period when we were over here, and ever since then, of course, they were just stretching towards the top side, and we can expect to see this, you know, continue to go towards the top side while the 20 period moving average is so far below the price, unless the price were of course to go down towards it. But we can see over the next few days how that kind of goes. Does this represent an opportunity for us? Well, I want to say that during phases of markets like this, and we saw the same when it came to Chainlink and other coins that we've looked at in all-time highs over the course of since I started the channel here, but Chainlink perhaps is going to be that best example, since we actually carried it through from breaking through the all-time highs up to where we could go next and looking at various things. And it is more difficult in a sense to assess what could potentially happen with the prices when you're up here in this blue sky thinking territory, right? I know that's not the phrase. I've been corrected on that in the past. It's not that I was saying it for a joke. Anyway, and of course what we need to look to is going to be things like Fibonacci extension points and whatever else. Now we have this one clear area in terms of the 236, and I'm going to remove it, but we can talk about where these other numbers come in at just so we know, so we don't have this Fibonacci on the chart distracting us just now. I'm going to just look at them real quick. You see the 236 comes in at around about where we saw the lows of today, of course, you know, and then as well the 382 comes in at around about where we had this this upward sloping resistance line, which is, you know, potentially flipped as support, and I can remove that now that we've cleared it off. So that's where the 382 is, and that comes in around about 20,859, and that's what we were talking about yesterday. It's all about kind of, you know, the price action where it was 24 hours ago, essentially, with regards to that 382. Now when it comes to the 50%, we know that that's in it around about as well. Well, actually the 20 period basis line of the Bollinger Band here is going to be moving up towards that 382 really rapidly, actually, so that'll be next. But we know the 50% comes in at where we saw our sort of goal line when it came to the bullish case scenario playing out after this period of consolidation that we had in following from our previous all-time high, which is now residing over there on the 1st of December. So we had this consolidation, we had this green line telling us where the breakout territory was, and of course that's where the 50% now resides. And we also had this blue line for profit taking, which we used along the way a couple of times in terms of managing our positions off of these lows, had things turned around and not managed to put in these new higher highs. So that profit taking line now actually lives right in that golden pocket for us. So then the 786, if you want to look at the next area on the Fibonacci, comes in around about where the bottom area of the Bollinger Band is here in the 4-hour time frame, and that subsequent orange line. So I can remove that there, and you see the chart's a lot clearer looking now. With all that stuff gone, and we know where we've come from. Okay, so we've had a measured move outside of a wedge that we were in from the period of when we put in our previous all-time highs up until, you know, breaking past this zone over here on the yesterday and that. So and the day before. So like this is where we've come up to. That happens to be at around about well, no, I'm going to go on and look at Fibonacci extensions in a moment. But I think I already mentioned one already. And then we know where these lines are coming in at a significance point. So this is where the 236 is. This is where the 50% line is. You know, so we're talking 236 is in there at 21,000-ish area, 21 or 22,000 area. Sorry. Then the 50%'s in it around about the 20,000 area. Then the 618. Was in around about the 17,692 area. So if we were to see any of this happen, just in case, you know, just in case, now I'm just getting all of this out of the way, then I'm going to go out and talk about the bullish case scenario stuff. But say we saw a retracement back down towards that 17,000 area, what would that look like? And that would look like 25% off the price, and that's the measuring stick thing that I've dragged out there. Which you can't actually see properly, probably because I forgot that I was supposed to line up the charts like this. Oh gosh. Faux pas all the way through the start of this episode. Hope you're all doing all right. Whoops. Bang Manny says, loving the stream. Good to have you here, Bang Manny. Lovely to see you. By the way, if audio isn't working, I can read ASL. Nice to see you here, Ruby. Thanks for tuning in. Nice to have you here. Nice to see you, Zoner, as well. As ever, one of the regulars on the streams here. Navan Ethan, hello, everybody. And it's nice to have Todd Schultz here as well. And there's a guy here called IYXRP, I guess. IY. And he says, XRPTA, please. Thanks. Cool. By the way, simple rules in the channel. Everybody's getting used to them. If you want to request a coin, which isn't part of the sort of the core 4 that we look at on a daily basis, on the channel, then you're going to have to stick in a donation. But of course, as well, we're not going to be completely sort of, you know, hard on people and make everybody have to pay for analysis of other coins. But that's kind of the accepted. We'll get round to doing that later on. However, when people do donations and ask for a coin to be done, then we can slot that in earlier on in the stream, you know. So if you're sort of looking to kind of get on with your day and whatever else, then feel free to drop a donation in, or of course become a member of the channel. And that's the way that we run things over here. Drinking tea as well. Cheers, Inferno. Cheers. It's good to have all the tea drinkers here. Sean Kennedy, nice to have you here. Chat box covering chart. Yeah, I know. That was my second faux pas. Fixed that one. Whoops. Yeah. You can make a donation of whatever you think it's worth, and he will take a look, says Tracebot in there. So, this is what we'd be looking at if we saw a drop down to that 618 area. It'd be 25% knock off the price. And overall as well, what does that look like with regards to our previous lows, okay? So this is kind of crucial for us to remember, as indeed I didn't fix it. I thought I'd fixed it, but I'm sorry, now I've fixed it. Right, let me just check on Never rains, but it pours. Yeah, now I've fixed it. Okay, I think we're happy enough now. Cool, so that's your 25% drop off there if we were to go down towards that 618. Okay, that would take us all the way down to the 17,600 area. That would be a measurement of 25%, and that would be okay, because when we hide everything off the charts again, just to look at market structure, which is of course important, then you see down here, this was the you know, our major recent low. This was the next sort of higher low after that one. So, you know, a movement down towards that 17,600 area doesn't actually take out this other low that we saw along the way. So that would obviously be a really fantastic buy area with really easy to manage risk in terms of your trading, if you were looking to try and catch a knife on this one, of course, as well, if we see any sort of pullback now, right? I want to be very, very clear with things when it comes to this, and this is what I was trying to get at before I got distracted by the faux pas when I was talking about Chainlink and how it was in breakout territory. When things move into these all-time high territories where we've never got any historical price action to compare things against, it is difficult to find areas of support and resistance, because history can't be relied upon to give us an indication of where that would be. As well, other things start to be kind of rubbish for us. You know, for instance, the VPVR, we know that there's going to be very little historical trading activity having happened in here, since it's just a series of green candles lifting us up through all-time highs. There's been no trade in here historically ever, so you get different sort of issues there when it comes to all-time high stuff, and we can kind of then think back to how did we handle things then in that sense when we were looking at Chainlink as an example. So one of the things that we did, for instance, was we drew a big old parallel channel around the price action and kind of laid out the growth that we've been looking at in terms of the upside. Now, this chart is on log, right? If I just take it off log for a second, let me rearrange this slightly so I can so you can see. Oh yeah, you can see now that I've moved the donator box whether on log. See, this is linear. Obviously that looks a lot harder to fit your sort of channels and whatnot around. When you're talking about log though, you can see that there is this idea that perhaps, you know, we're in a channel along those sorts of lines. I think maybe it's worth doing one of them and then just changing the settings on the parallel channel so that the right line is extended, and that will give us a sort of future potential prediction, not prediction. Oh, back off, Rocky. But projection as to potential areas of support and resistance for us looking forwards. Okay, if I pop the drawings back on, you can see that we have all of those lines on there, and I don't think this is necessarily the chart to do this on right now, because I want to leave this portion of the chat that we've had separate. So I'll go over to a different Bitcoin chart here. A different Bitcoin chart, and take a look at things here. So over here where we've got a lot less at the minute blocking stuff off, there's Kenny Flatten's chat from before. It was a head and shoulders so strong you'd think it had dandruff, turned out to be breaking towards the top side. As you can see here as well, that we did actually get the, if you want to call it the KDOC measured move. We were looking for different measured moves to satisfy KDOC's need for 24 grand and all this sort of stuff as we were looking back through the price history. Nice to see you here, KDOC. And yeah, we obviously got this particular one in full as we broke up past this zone. Now, this wasn't laid out perfectly, and we've already spoken about this on the other chart with that pizza slice that we had on there before, and this is kind of the same sort of chat. So I can go ahead and remove this as well from here, and then we'll do another couple of things. We'll look towards Fibonacci extensions, stuff like that, and try and get a little bit of context for us with regards to what areas might be worth looking at. Now, what's the point in doing this sort of thing, you might ask? And of course, that's a reasonable question. One of the big points in doing this sort of thing is that you are going to be able to try and find areas where other people are looking at the charts in the meantime, right? And if more eyeballs are on it, then maybe that's an area, and at least that gives you something to kind of put context on what you're looking at. Hey, I wasn't far off 24k, just a week too early, says KDoc. Yes, exactly, you were just a week too early. That's the thing as well. People talk about timing being important. Of course. If we want to look back, by the way, there's yesterday's technical analysis episode, while I didn't sit in it and say, hey, go long right this minute, I did talk about all of the sort of what was kind of going on with the charting, and it was really high level stuff at times. I'm going to try and scale it down a little bit and not be too extremely complicated with regards to the technical analysis that we're doing here, and go for that. On Monday it was beginner. On Wednesday, wait, is today Wednesday? Yeah. Today's Thursday. Yeah, good. Yeah. On Wednesday, it was expert level. Right, today, okay, so yesterday's one, if you want to see some of that, go ahead and watch it. Go back in time. But today's one, we'll try and go for somewhere in between, shall we? But before we do that, I want to just bring up this thing that we talked about before, because it's staring me in the face here. Swing failure point on the RSI down below. If I just make this full screen, you can see that we drew in this swing failure point and we didn't go down past it. This was the swing failure point. We didn't swing fail. We didn't fail on the swing. It wasn't a swing failure. It actually was success. We managed to move on up the way. Worth pointing that out before removing it off the charts, just for anybody who obviously has been watching along and saw that get put on there. I don't want to get rid of that and then and regret not having pointed it out, to be clear. Okay, cool. So let's just do some of this let's do some of this forward thinking stuff here, and there is the potential to kind of look at this area here where we came up to the right hand shoulder as connecting up a little bit here with these two tops, or you could look at it from going up this way. What would be preferable to do between these two? Well, it'd be preferable to use points along this rise up, because this is kind of almost like a different phase in the market in a sense, when we had this big retracement down here, this pullback. So let's just pop one of these on for now, just here. Now what I'm going to do here is just draw it in with two lines, and then I'm going to use the actual parallel channel tool. You can see here, starting off from an arbitrary point wasn't a very good idea, but if I just move this up a little bit, then we have what looks like more of a parallel channel towards the top side, right? Suddenly the future doesn't seem quite so unclear, certainly at least in terms of broad stroke things to look at, and this is certainly a broad stroke look at things. Okay, so what I'm going to do now is grab a parallel channel. If you want to do this at home, you can absolutely follow along. I suppose I could maybe aim to make this show more of a cooking, like a cooking show, a show for telling you how to cook the food. I'm going to pop a parallel channel in there, but I'm going to just remove that bottom line to make it easier for myself to actually fit this thing on. Actually, I don't remove the top line as well. That's the idea that we're going for. Let's stick a nice goldy blue colored parallel channel on this geezer over here and straddle the price nicely. Now, I'll just leave this here as it is and then draw the contrast again for educational purposes with regards to how this looks on linear. And I'll move, and you can see obviously the chart doesn't line up anymore with that parallel channel, so you'd have to moving it around to kind of capture the price. You can see it doesn't really work. But it is worth pointing out that from a linear type perspective, if this was a bit of a parallel channel between this area where the mouse is flinging around at here, after we came up towards the highs there on the 23rd November, dropped back down, up towards the 1st December all-time high, back down again, then up again, etc., etc. If you're drawing a parallel channel just in this section, we'd be right in there at the point where we could break it out and look for continuation towards the top side. Obviously over here on long, just use the undo button to satisfy me there. Then that's obviously not quite the way that looks. So this does give us a couple of areas if we were to see a turnaround to look to. And we can obviously tie these back in with the ones that we were looking at before towards the downside for confluence. And then, of course, in terms of in the future, of course, it looks like we're at the very top end of this right at the minute. In the future, where we could see the pricing going if it was to range within this parallel channel towards the top side. Okay, so the median line of this thing comes in at around about that 21,000 area just there for now. The lower line comes in at around about 19,000 just now, and as we go up the way, you can see that rapidly goes up in price. So if we were to pull back and hit the median line at around about 21,000, for instance, as has happened so often in or 22,000, sorry, somewhere between 21 and 22, as you can see, this rapidly increases in price. Then went on up again, then you'd be looking at potentially a retrace down to the sort of 21k and then on up to 24,900. That's 25,000 actually here, and that is of course the 22nd of December. So what would Xmas be at on this one? Let's just stick in a vertical line to mark off Xmas just for the crack, since we all love a bit of the old Xmas. There's Xmas Day there. So what does this give us in terms of our highs and low prices with potential on the Xmas Day if we were to just be operating inside of this thing? Well, maybe we're looking up to 25,324 on Xmas Day. That's and with a potential low at 19,838. So somewhere between 25 and 20k could be your range on the roundabout Xmas, looking at that way. But this does give us a bit of a handle for the future in terms of just this chunk of price action. Okay, it's nothing special. It's simply looking at encapsulating the entire move of the price since the 4th of September right up until the 16th of December. So we're looking at a few months of price action here inside a parallel channel. So it is relevant for us, and we can see the different touches that we've had there. There's various other things that I would like to do when I look at a parallel channel being on the charts, and one of them is that I like to look and say, well, could we maybe fit in a pitchfork here and get a bit more context for us and then be able to extend it out and give ourselves upper side targets? Maybe that's something that I should look to just now. If I grab the pitchfork tool, and maybe the pitchfork tool as well might work even nicer in terms of doing it on linear. So instead what I'll do is I'll hide this for now, and then I'll go back over to linear just for the crack, and I'll zoom in around about these areas here and see if there's something to be said about the potential for an upward sloping pitchfork using the swing points in and around about this inflection zone that took us throughout the summer towards autumn in the price action. So if I go in from one of the lows over here, perhaps this low where we had our biggest, our deepest move down the way, and I got towards this area here, which is perhaps where our high is. Now, I've not actually done this in advance, so I can't tell you if this is going to look good or not, in advance. I just don't actually have don't actually know. This is going to be a process of discovery for us together, and pop it onto the original pitchfork format. So what I've done here, and this is not, I don't know how this is going to look. It might just be way outside of it, maybe completely wrong. I don't know this in advance. This is us doing technical analysis together and me trying to educate you. By the way, actually, can you see the size of the window that I'm using here? Now I have multiple monitors and stuff like that for when I'm trading as well, but you can actually do complete professional level technical analysis using not only just one monitor, but like half of one monitor. As you can see, that's the way I need to have this box laid out so that it looks nice on the video stream for you guys, which means actually I suppose I can move this over a little bit on the whatever. Anyway, this is what we're looking at. So this came in from this low. Now, why am I choosing those particular points for it? Well, we could do it in a variety of different ways, of course, and you could choose it from different areas. But if I just chose this significant low, which is the last low in around about May, then I also know a couple of other things about this area. For instance, from just my own knowledge, and you all know it too. For instance, this is where we saw significant crosses on the moving averages in around about this area here on, say, the 24-hour time frame. See over here we had a golden cross on the time frame right after that low, for instance. So there's various reasons why we don't do it. Let's now go ahead and spoil the party by seeing how far outside of that zone we are. Yeah, this pitchfork doesn't work. Okay, so that was educational for people, but it doesn't work. But we have it on the bigger screen now, so we can see at least if we want to move this around and choose a more significant and maybe appropriate area for it. For instance, the start of this bull run towards the top side here, and then we've got this pitchfork drawn in like that. And where are we? Well, we're way outside of all the extensions of it as well. In order to get this to actually work, we'd need to have had a more time space between these highs, etc. We need to have had more time, so we don't have that. So I'm going to just ditch this and go back to to looking at other things as well. But that was for educational purposes. Now, of course, this isn't me covering off all the potential options with pitchforks. It's nowhere near it. It was just a quick example for how you might go through this process of discovery yourself. Of course, as well, I could probably have done it the other way around. Anyway, whatever. That's all good. I mean, I could have used an inside pitchfork, perhaps. I'll just show you what I mean here. Actually, I can't be bothered. Alright, cool. So that's good. Put it back on log, and I'll bring up that hidden. No, leave it off log. Keep it on linear for now, and just use and get a couple of Fibonacci extension points for us. So there's a couple of different options for Fibonacci extensions at this point here. By the way, the thumbnail for this episode, riding the wave, you know, the bull wave. That's what this is. This is what I'm trying to do. I'm trying to introduce some ideas about how we can ride this wave, okay? Because obviously it's very bullish and all the rest of it and blah blah blah. So that's what this process is. If you're curious, I am actually curious about doing something like this, you know, just out of interest, just to see what it looks like. Oh, interesting. But it's already beyond those zones as well. So anyway, so there's plenty of other things that you can do. But I wanted to then do some Fibonacci retracement areas. So we can actually take it from our previous, you know, the previous so-called 20,000 all-time high, which of course wasn't 20,000 all-time high. In fact, I'll use the magnet here just to make sure I'm not messing around with my points that I'm dropping this in on. Somewhere up there. Down to somewhere down there. Okay, so maybe that wasn't even all that useful, but let me just then change the settings on this to make it so it extends over to the right, and I'll pop the numbers of the thingy over on the right as well. Okay, so the values can be over there on the right above the line, and I'll extend the lines to the right. Okay, cool. So that's how you would do something like this. And what do we see then with regards to these Fibonacci extensions? Okay, so we've already come up to and so far found a degree of resistance in around about this area here where we have the 1.272. Now this pertains to the title of the video, okay? So the title of the video is when's, you know, a good time to sell, and you never know, right? You never know, and I'm never the type to profit shame anybody, but if you're sat in a position right now that's got a degree of profit with it, then this is one of those clear areas that people would have been looking to in terms of if we were to go into all-time high territories. Let's draw a Fibonacci retracement from our all-time high down to the major low following that all-time high and see where the Fibonacci extension points are. And here we are, lo and behold, right at this one just now with the price action. Now, of course, we have come above it and whatnot as well with this wick that we've had, but we can see quite clearly in this 24-hour time frame that this is obviously a rejection from this area currently, boah, you know, not like the trend has reversed or anything like that. This is just, you know, the initial rejection on the first pass, as we expect to see so often. And I'll put a little bit more context as well in here with regards to putting the, you know, like for instance this trend with the Bollinger Band, and you can see that, of course, like we spoke about on the 4-hour time frame already at the start of the show here. By the way, if you just joined us, thanks very much for joining us. I've been doing technical analysis for Bitcoin almost since the start of this video, so if you're just joining us and you want to see all of that, it's all totally relevant to right now. You're not missing anything. You can watch all of that and come back and catch up and whatever else, and you'll see me talking about the Bollinger Bands on the 4-hour time frame and how we moved up the way, and we've not come back within them yet, you know, but we're still tracing them towards the top side so far, and that's very good. Now, what we see in the 4-hour time frame, to put a bit of context in terms of just for people who do want to go back, is we saw this kind of, you know, stair step in the whole way up here, just constantly going up, but always every single one of these having a touch on the lower side. Now, of course, the Bollinger Band are constructed using a 20-period simple moving average and then going a couple of deviations, standard deviations away from that point in order to give us our upper and lower band, right? So that's just a 20-period simple moving average. Therefore, it changes all the time. And on the daily time frame, it uses the current market price as opposed to the close. And all the previous time frames, it uses the close. So what we have here, you know, until then, obviously this will close, and that'll be using the close, and then it'll continue on using the current time. So if we see the price action actually push towards the top side, as we saw in this string of 4-hour candles here, then what it does is in the subsequent candle gets printed on, then it's pulled the Bollinger Band up yet another point. And obviously with this larger price movements is pushing towards the top side, i.e. going past where the average price was by more than 2 standard deviations compared to the relative average prices over the last 20 periods, so in this case 20 days, then you're looking at pulling this up even more rapidly with that standard deviation calculation changing, right? So this is how this works, and we're seeing this go up, and then of course a couple of here and it turns around a little bit. So on the 24-hour time frame, if we were to see something similar, right? If we were to see something similar, what would that look like? And it isn't too hard to imagine, you know, if something were to go similar. This is basically going at a 45-degree angle there on the 4-hour time frame. Over here in the 4-hour time frame, we're going at that basically 45-degree angle. You can just kind of imagine it just really easy crazy style by thinking like, what if it did something like this over the next wee while, and where would that bring us in at, and how could we look at this? So that's something to bear in mind as we're going forwards with the relation to the price and the Bollinger Bands. But we can also see then as well that towards the downside, if we did want to go back in, where is our support and resistance line? Well, is that what we're talking about as a potential profit taking target yesterday at 20,000 whatever, 21,200 areas where the Bollinger Band resides currently. So that's kind of interesting as well. It's kind of interesting. Then we can stick that on there as an point of interest. But so that would be, staying above this line though, very, 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 very much positive for the price action, not closing below it, because then of course this would change around the structure of the Bollinger Band there, right? So not closing below this currently is the point, and as each day goes by we can kind of think about it along those lines as well if that were to happen. And then we'd be looking up towards the next target, and the next target afterwards is the 1414 at 26,000, and the next target thereafter is the 1618, and that comes in at 29,268. So we'll just call that 29,000, 26,000, 24,000 in terms of these numbers. So we've had the 24,001 hit today, more or less. Well, yes, hit, and the 1414 is your next target, 26,000, and your next target is at 29,000. Downside targets then, just as a quick reminder, because we always want to do things without bias here, is 21,200. Thereafter, just in terms of this thing and looking at this in terms of the Fibonacci from the past, then we have to admit then of course the all-time high area previously in and around about that 19 to 20k area is kind of going to be your next target, or sub 20k. If we do go down, then you're looking towards whether or not we find support in our previous all-time high zone over there. Okay, so that's currently there it is. Now, like I said, with it comes to the intermediate stuff and all the rest of it, I'm not going to go on about finding tops in trending markets too much right now, really, although that is the title of the episode slightly, because mostly it's about riding the bull wave, okay? But there are episodes I've done in the past, plenty of them, and you can find them, I suppose, by looking in my old archives around about previous tops, where I explain it in quite good detail anyway. For instance, on in the August highs, when we saw that happen, and I explained how you would do this process back then, for instance. Right now I'm not too interested in it, but I will point out the fact that obviously we're coming in here with the potential for on this daily time frame, the bearish divergence here on the RSI. Let me just bring this up full screen and point it out. We had these three peaks in here in the overbought territory, and that was of course in the 27th of October, the 6th of November, and then the 21st November. And then we saw the oscillator reset a lot and us kind of come back up here, while the price action itself has moved towards the top side rather dramatically. So this is something to keep in our back pocket, okay? It's not something to have front and center in our minds, in our cerebellum. It is something to keep in our back pocket. I'm not addicted to Bollinger. Jamie, TradeSpawn, watch out. I'm not addicted to Bollinger. Yeah, but what this means is that we don't want to keep this in the front and center of our minds, because obviously that's counter trend, and what we're doing is in all-time highs areas, and there's something that mitigates this. Now, as we're looking towards the top side, it takes a lot less money to move the price whenever there's not the liquidity there to suppress it, and then that changes the dynamic with time, and that changes the dynamic between the volatility and where you're going to have your average true range at, etc, 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 and it changes things with regards to the oscillators. However, should we see the prices in a market structure way first off come in and give us an idea that perhaps we're in an area where we could see a turnaround of some sort, whether that's just a pullback or indeed a trend reversal, then we can employ those spidey senses. And let me just put that into context for you real quick by going back over to where we drew this in first. Our previous all-time high thing over there in 2017, when things were obviously all doolally, right? I just want to put things into context here. So along the way we saw various pullbacks, yada yada, 30% here and there, etc, etc. We came upside, we pushed way outside the Bollinger Band, came back in, but overall still traced it towards the top side, came in here and put in a high. Now this high that we put in, which was ultimately the all-time high, was of course bearishly divergent. And then what happened? Then what did you see happen? And we can use the Bollinger Band that we've drawn in here for this, not what we've drawn in here, we can use, sorry, the Bollinger Band, whatever. I'm going to hide the Bollinger Band actually. actually, because it's annoying me looking at it right now. We can use a Fibonacci retracement from the past to give us a couple of ideas. Now, market structure wise is much easier to see simply when we took out this low here. Obviously that changed the story around, and that bearish divergence then became very, very, very important to be aware of. Now, the fact is that the majority, 90% of the market, wasn't aware of that and still believed in all-time highs coming in thereafter and any subsequent moves up the way. Now, of course, this is very similar to the situation we saw just now in terms of December, the first highs, then we get a pullback, and then we moved up the way. And at this point here, you could be thinking either way, okay, and it's fair enough to, but we could have gone on and burnt off that divergence had we moved towards the top side, as we have done in this most recent rise, or maybe we couldn't. Right, and ultimately we couldn't here, and then on the other chart, on the most recent time frame, we have done. But if we wanted to take in a Fibonacci retracement just to give us an idea, it's harder on this rise up here to find the area given the scaling issues. I can put it on a log and that'll help. So there we have a low over here, which is worth drawing in for on that one. I'm going to have to move this quite a bit as I'm doing this, make it full screen to make it slightly easier myself. So yeah, anyway, by the way, if you're just joining us, this is us looking at how to ride the wave. Okay, this is us looking at trying to find out any areas when you know that it was the best time to sell. So two things: how to be bullish in a bull market in the face of potential pullbacks, and of course how to assess things, whatever, right? That's what we're doing here. That's what we're up to. All the way up here then, and zooming on in, I'll just hide this Fibonacci for now, so we can see where the 236 is. So the 236 there was at 14,000, and that's to put this into context of that bullish, the bearish divergence that I saw there. We cracked the 236, came back in here, and then moved towards the top side. So at that point then, when you're saying, look, we've gone in, we put in a low which is lower than our previous low on the way up here. We have the bearish divergence, and at this point, we've also taken it to 236. If we can't sustain moves above the 236, I would become very bearish on this and expect to move towards the 618 at the least. And we can then see that ultimately that drew in at around about the 6,000 area, and that's where we saw the prices going down to having been at near enough 20 grand beforehand, right? So that's how we can do the same thing over here on the right, right? I'm going to hide this one. About 10 minutes ago I says I wasn't going to tell people exactly how to do this. I did it back in August. I've ended up kind of doing it. It's the same thing. It's all good. It's all good. I'm glad. I could go into a lot more detail as I did back then, but this is good. This is what people need to know right now, okay? Because it's easy to say it's a bull trend. I've been saying that for over 6 months. I've been saying that since March. Now we're getting to the point where it's like maybe it's worth actually trying to educate people beyond that. Before it was kind of like noise suppression. I wanted to tell everybody how to manage your risk and deal with the markets in a bull market and to stay on side of trend, yada yada, all that stuff. I did that for a long time. Today I've kind of decided that I'm wanting to tell people, look, we're riding the wave here. It's bull market, we're riding the wave. That's what we're doing, okay? The other people in the world will tell you at the minute there's no point in looking towards the downside at all, and that is fair. That's fair. But when there does become a point in looking towards the downside, I want you to know how to do that, and that's what I'm doing right now. And then we'll talk about other crap. I've already gone through, by the way, in terms of if you've just tuned in, about 5 minutes ago I went through, or 10 minutes ago I went through the targets towards the top side, and I've been through the targets towards the downside anyway, in terms of doing all this anyway, right? So we're covered with that. But let's just do the same thing again that we did there before. And what features did we have on the chart to make this possible? We had two Fibonacci's, we had one really in terms of the movement up the way and talking about the movements down. So what's the equivalent of the Fibonacci that we drew in from down here at $143 up to that high in there at 20 grand? What's the equivalent currently? Well, the equivalent would be between these two zones that we've had, our current price and over here. Now we can obviously see without much looking at this that we're miles away in a sense in terms of what this did for the price action in terms of percent towards the top side. So the bull run, if you want to say it started over here with that low, if that's what you want to say in terms of movement towards the top side and where that came in, it moved the price up 12,698%. And what we see currently in terms of where we've come since this low over here, now that's not fair. It'd probably be better to draw in from here, so that's in fact what I will do. is we've seen the prices coming up so far 483%. So that's good and everything, but it's a strong, a long way off of that sort of thing. Now, over time, what we can expect is for these things to actually shrink down. So it's not going to be 12,000% that you get every single time into the future, because it doesn't take a maths genius to work out that would put the price of Bitcoin into the trillions, many trillions, without too much time going by. But so we can expect this to sort of go, shrink down a bit. Anyway, what do we have? And I can draw this in. I'm going to have to zoom in to find the actual point to anchor it on with. We can draw this in here and it'll give us that little bit of context in terms of the big movement. So we know so long as the prices stay above 19k at the minute, for instance, right, then they'll have done a couple of things. They'll have been outside of the 236. What we can also say is that if they stay above the 236, if they move down below the 236, they wouldn't have been taking out that previous low over here, okay? So we wouldn't have 2 for 1 in that sense. Maybe just to put in the whole 2 for 1 context on things, I should take it from the March lows instead, and that's not even going to happen either. Oh, why did I think that would? It'd have to have been lower to have happened. Right, anyway, so we're still some ways away from doing that quite yet, okay? But if we do see prices dropping down below these areas and taking out this last significant lows, these two here, I suppose, but especially this one here, and the 12th of December at 17,855, and we see the bearish divergence coming in, then maybe we know that things are a problem, because that would confirm the bearish divergence on the chart for us, and we'd have taken out the 236, and we'd be looking at having, come in, put in several closes below it, and potentially with the movements towards the downside, and that would take the price down as far currently, looking at the charts, as far down potentially as this 10,828 number. So I suppose if you were to say that the end of the trend were to come in now, that the equivalent of this 6,000 number over here, where would that come in now we've had this more recent all-time highs? Well, the equivalent of that number would come in at around about 10,000 perhaps. Or perhaps you'd want to consider it coming in at around about, 10,000. It works out more or less the same. So that's what we would find with that one. Fibonacci extensions we did towards the top side. So we've done Fibonacci extensions towards the top side. We've come in with some numbers. We've also got a parallel channel that gave us some targets towards the top side. And we have so far also looked at mitigating factors in case the trend turns against us. Therefore, we've covered both topics from the thumbnail, riding the wave, and the other one, when to sell. Okay, cool. We've covered both of them. If there's any further questions, chuck them in the chat for me and I'll try and take a look at it in a wee bit. I see Artie Pyle in there saying Bitcoin seems to like the 61.8. It certainly does. It certainly does. Certainly does. Well, that's what you would expect to find in a market which is more susceptible to manipulation of the price, isn't it? Right, because of that sort of thing. And it does also what you'd expect to find in a market which is far more heavily dominated by arbitrage bots than other markets are. I mean, if you think about things like Forex, for instance, where you might have Onanda doing their FX crap, and then other FX brokers, right, whatever, right, you know that if you go and search for some FX thing, that there's arbitrage that happens between these different exchanges offering these Forex things, and there's a whole bunch of them out there, like as you can see on the screen right now. So you know that arbitrage bots are floating around doing that, but you also know that it's the most liquid market. It's not the most, because oil's most commodity. Is the the euro dollar perhaps the most liquid, the most traded pairing of anything in the world? Not sure. Anyway, it's way up there, that's for sure. And that kind of takes away from that edge. But can you imagine how volatile those markets could be if there was far less interest, like we have in cryptocurrency, for instance, and then if there was also far more of these exchanges, and also if everybody involved in it was far more technically savvy and also far more engaged in doing arbitrage between exchanges, and also if all the exchanges were allowed to do wash trading because it's not essentially illegal in cryptocurrency, and if all of the exchange and all of this all together, then you're going to find that that's more likely to operate along these lines of 618 Fibonacci retracements and whatnot, especially when you consider the wash trading aspect of things, which happens in these markets. Okay, so I tell you, I can tell anybody in the world that cryptocurrency trading has got a lot of this sort of stuff that happens in the markets, right? It's fine. I accept that. Right? There's a lot of people out there who just don't accept it. That's their problem. Cool. So we're kind of done here in a sense. Looking at this one, I mean, are there other areas to look to put in to negate what we said here with the RSI? Well, there absolutely is. I mean, you can see the MACD, of course, is still moving towards the top side. Here it's not bearishly divergent, and we have hidden bullish divergence between these two lows on the MACD, as we can see here. Okay, so not bearishly divergent and hidden bullish divergence on this area towards the top side. Okay, so that's bullish confirmation, if you like, in that sense. And what do we have over here? Well, we have the DM, the positive DM moving towards the top side very hungrily, and of course actually so far coming in just you know, it wouldn't take much more movements towards the top side to come in without divergence here between these two peaks on the DMI. Obviously currently, as it stands, it would have that divergence, right? But as it stands, but it's not there at the minute. And we can see that that the ADX is in here in the blue territory, having only dipped below 25 for a briefest of seconds here in this territory where we saw the BTFD area, if you like. Right, cool. So sorry, what that means to people who don't understand. Although I am kind of going to start to move, I think, towards having a slight split in how I do the technique. You know, I don't need to explain this every single time to every single person, and because it's one of the more complicated oscillators and whatever, I find myself having to explain it all the time. I would rather that, again, this whole idea of having 1,000 good traders around me, and then occasionally me putting out educational materials and linking back so that people can understand them, and me just like work through in a quicker flow. I think that's probably a good idea. But anyhow, you can see the ADX way up here. The ADX is in blue, so it's got that strength of trend moving towards the top side, and that of course is very positive. And we had this cross over here, and the cross happened when it was blue. We waited in a sense until the 15th of December, if you like, before sort of seeing this turn blue again. And then of course the 15th of December we saw the prices from this point then just fire up the way, and that's why it turned blue, and that's why it sprung up the way, and that's why it looks positive, because the price action itself is positive and all that sort of stuff. Not uncommon to have $8 trillion traded daily on USD pairs. See, that's what I mean. You know, so while there's going to be manipulation that occurs across markets, in every single sense, all the time, in every single market, there always is. And while there's going to be factors that mitigate price differential between exchanges, like high frequency trading bots, for instance, that in the cryptocurrency land, there's also like this algorithmic trading thing and the quant type trading analysis and whatever else, and they use these sorts of numbers, and it does like it more than your other assets out there. So for the whole fundamental, what do they call them? There's these phrases like gap boys, right? Gap boys, you know, there's like that. So for like all the people that love gaps and stuff like that, right? So for those fundamental boys, so the fundy boys, right? So if you're a fundy boy, then you're going to like things like looking at, for fundies here, fundamentals on the old cryptocurrencies and trying to say that they mean something. Whereas, you know, the difference with stocks and stuff like that is because the fundamentals actually can change in a stock, and then it's less likely to respect these areas, because, you know, what's the 618 going to do in terms of a turnaround whenever you're Exxon or Enron and you've just ruined everything? And what's the 618 going to do, or the 786 or the 886 in terms of potential turnaround whenever you're RBS and you've got more toxic mortgages than the entire wealth of continents out there combined, and you've completely ruined your balance sheet, etc. What's going to do, you know, what's going to help with that? I mean, what's going to what sort of thing in terms of fundamental, like, you know, for the fundy boys out there, whenever Tesla is trending towards the top side and it's putting in highs, and then the owner of the company comes on and says my stock price of Tesla is too high, right? How's that? You know, whereas with crypto you don't have these fundies, right? Anyway, the fundamental idea of fundamental analysis when it comes to trading in the cryptocurrency space is fundamentally misunderstood by, if you forgive me for using the word again, fundamentally everyone. Rocky, if we see the 24% drop on Bitcoin, will that be the catalyst for Link U double bottom? Will the catalyst be for Link U double bottom? Link, I'm thinking you've got a couple of the old auto typing, yeah, the auto typing errors in there. You fixed that first one, B. Would that be for, are you talking about in terms of chain link, by the way? So do you mean in terms of chain link with a double bottom? Are we looking here for the Link BTC pair? There is no double bottom here currently. Oh, by the way, look at that. Yesterday's technical analysis. This is a bit of a preview for the episode today. The liquidity zone, the orange line, where the body is right now. Look at that. Technical analysis works slightly much more than it does for those fundy boys, eh? How about the fundy boys? Fundy boys wouldn't have been able to do something like that, I don't think, with their fundies. What did you mean? Maybe you're talking about Link USD, double bottom. No double bottom there. Have I read you wrong? Catalyst for... Rocky, if we see the 24% drop on Bitcoin, will that be the catalyst for Link USD double bottom? Cool. Here we are on Link USD 24-hour time frame. What double bottom are you looking for exactly? If we saw you talking like, would that be a catalyst for us to come down all the way down to the $7.04 area and put in a double bottom over here at this point, and then perhaps move towards the top side, for instance? Is that what you mean? Or do you mean it in terms of, I'm just wondering what would be your double bottom for you in terms of what you're looking at, and what would it, it's a really good question, right? It's a really good question. If we see that happen, well, I suppose that's going to kind of come down to certain other things as well, like is there a money flow aspect towards this? And if we see the money flow if we see that 24% happen, right, while we're looking over here on the total chart, and we're seeing that the total chart is also dropping 24% or perhaps more, no, actually more. If we see the total chart drop more than 24% as Bitcoin drops 24%, cool. If we see the total chart drop less than 24% when Bitcoin drops 24%, possibly not. And if we see it go the same amount, then who knows at that point? And then you'd have to compare it with the Bitcoin dominance chart, and will we see certain things happen? Will we see certain things happen? So if we see a big drop off in the price action in the price of Bitcoin, how will this affect this? So if the money is actually flowing out of the industry altogether, and the total market cap of cryptocurrency in general drops, then yeah. If we see the total staying similar and Bitcoin pricing dropping 24%, and Bitcoin dominance also dropping and fast, coming right the way back down and perhaps coming down to the 618 zone over here, then yeah, then you're looking at an alt season happening, at that point as well. So alt seasons, what do they look like? There isn't really very good examples in terms of the Bitcoin dominance chart and whatnot in terms of alt seasons and stuff, because this thing doesn't go back far enough to give us that sort of information and whatever else. I can't really draw an example on it. It's kind of speculative at this point in terms of talking about that. I mean, maybe I could if I spent more time looking into it, but I think so. Fundy analysis in crypto isn't a thing, but some people are great at on-chain analysis. Yeah, on-chain analysis, that's totally different. It's not fundamental analysis, unless you want to redefine fundamental analysis, and just to sort of make it so that you can make some sort of argument that exists in the traditional world and apply it to crypto, and you're doing the whole square peg round hole, just shoving your argument in people's faces thing. Okay, cool, I'll go with that. But when people who present debates on that front, I prefer it when they offer up the transparency at the outset that's what their intentions are, and then I'm okay with that. But if they try and pull the wool over your eyes and pretend that something exists which it doesn't, and call it a square peg round hole thing, then I'm quite dismissive of them and think that they're stupid. Da-da. Right, so we're going to go on and take a look at Ethereum USD. Now, there's a big difference here between Ethereum USD and Bitcoin in terms of the all-time highs. First off, we're not past our January 26 all-time highs. And, of course, then that means that in terms of the Ethereum Bitcoin pairing, we're also looking at, how we've seen in general that we've not done that great. Looking up here in the weekly chart, for instance, the weekly chart, hide all the drawings, the weekly chart shows this is a really kind of crappy chart, really. It's not done that great. Really, that's really not done that great. And obviously this all-time, the peak in here came in at the all-time highs. So what we're looking to as well is in terms of like that third, if you've got the total chart, the Bitcoin dominance chart, and the Bitcoin price itself, and it dropping 24% and blah blah blah, one good area to look to in terms of alt season is going to be Ethereum, right? Because when people talk about alt season, it really was Ethereum that and Ripple, a couple of others that people were talking about at the time. But Ethereum working so much in lockstep with it, you'd hope that it would, with Bitcoin, you'd hope that it would lead the way, be on the vanguard of any alt season. no guarantees on that front. But we can look towards the Ethereum Bitcoin pairing over here to give us any sort of ideas about that in advance, you know. And one thing that we can look to, for instance, over here is, are we going to respect the 50 simple moving average here on the weekly time frame? 50 simple, obviously 50 weeks, you're talking nearly a year. So on average or whatever, in terms of the Bitcoin pairing, in terms of the we've moved up and away in terms, and we've had good growth for Ethereum versus Bitcoin. But as you can see here with this 50 simple moving average, that for a long time we were having this negative growth. Then in and around about February 2020, we had positive growth against Bitcoin, followed up by real negative growth against Bitcoin in around March, then positive growth against Bitcoin in April, negative growth in May, and then since May we've been operating above the 50 period simple moving average, but really as well since August, if you want to be honest about things. So you got May, June, July, and then in August we saw the prices actually going negative against Bitcoin. It's been flowing that way ever since. What we want to do is actually maintain above this yearly average here essentially, and go towards the top side on this chart, you know, in terms of what we're looking at just there. If we want to go down to something else and talk about other ideas, then of course, you know, the fact that we've got this death cross having just happened here on the Ethereum Bitcoin pairing isn't exactly good in terms of the whole sniffing out an alt season idea. But if we then come back in, retest the 50 simple, as we so often do after death crosses, yada yada, you know, we had the death cross here, we tested the 200, tested the 50, but you'd expect that in the face of a death cross, wouldn't you? But then maybe we come back up, test it, and we see some turnaround. This is something to look to in the January, February, March, April area in terms of if we see some pullback or whatever else, right? But that was just like that was me kind of segueing over to just take a look at the Ethereum USD pairing technical analysis, right? Hide off this menu here so we've got a bit more space to operate with. Sticker drawings back on and acknowledge a couple of things here. We've got this line that we've been kind of talking about for a while, not moved above that yet overall, and this is a similar sort of construct to what we see with regards to the Bitcoin pairing. Now if you want to have a quick contrast here, this is the logarithmic chart, right? And this is clearly a wedge here. Let me just bring up Bitcoin again on that other chart. Oh gosh, what was the other one that I did it on? It was my pink label. Oh, this pink label here. And where's my parallel channel? Parallel channel visible. We're in a parallel channel with this one. On the broader scale in terms of Ethereum, actually it's not a different story. You're still in a huge wedge essentially with regards to this price action, if you want to draw it in numerous different ways. So if we take our February highs and our March lows, God, the anchor sometimes really annoys me, our March lows, and come on up the way here, then you could make the same sort of case quite easily, but there's only one touch. And it's easier to look at this, and if we go back as far as this in terms of a parallel channel as well. Maybe that's more wise even than the parallel channel I already drew in. I could stick them both on. I'll stick them both on. Just out of interest. This is as much for my own sake as it is for anybody else's. I'll use the bottom. So there's our two sort of concepts there, so I can come back and visit that again in the future. Just mostly did that for myself, if I'm perfectly honest. Just for context. So yeah, over on the thing, what am I trying to say here? Right, you could look at this as being a wedge. You suppose you could also do the same thing then with regards to the channel. It doesn't really fit into that ideally with regards to, if we look at this on linear, maybe it looks better. On log it didn't look so good for it because of this tiny movement, this huge movement. Would it be possible? I mean, I suppose there's only one way to find out, right? Nah, it's crap. It's crap that. However, I'll just get rid of that wedge. We all saw the wedge. We all saw it. We all saw the wedge. Remove that. Leave that bottom line on there. It must have been done on this chart anyway. Take off our measuring stick and pop on a parallel channel in this general zone here. So I think that looks pretty sweet overall in terms of just giving us a bit of context. It's in no way perfect. at all, but just a bit of context for us. You know, if we were to see a turnaround here at this these 600-700s areas, maybe we see it dropping down to 500 and then coming back up into this plus 700s at the turn of the year. You know, maybe that's what we see happening. So there's that difference, but anyway, we've got many different differences. The main difference really in terms of the Ethereum pair and all that is the fact that we have this historical price action here, which allows us to put a lot of context onto what we're seeing. So I'll hide this and we can do that same sort of idea. So in terms of our all-time highs down to our subsequent lows, I think it was this later one that's lower. They're about the same, whatever. Then we're above the 382 over here, and that's good. So if we see support coming in at about the 602 level, 600 area or so, as we knew about, we've talked about all these things loads of times, then we're looking towards 50% as being the next target. That's $762, and then the next target after that for our golden pocket comes in at around about $923 up to $966 in that zone right there. Oops, hide that off for you. It's a bit more real estate. So these areas are what we were looking at in terms of movements. Now we don't need to kind of go into sort of all-time highs, crazy mode, what Fibonacci extensions, etc. could we have with any of this, because we have it all laid out for us so clearly, and that's handy. The 236, if we did come back in for a test of that, is down at where we'll find the 200 simple coming in at over the period of the next wee while. So towards the end of towards the turn of the year, this is where the 200 simple is going to be. If we come in for a test of 200 simple, having not done it since the golden cross over there, then we'd be looking down towards the 236 in there at $403. I'm using the actual literal values, by the way. If you're looking at this in a fib, look at this on log scale, and you want to have the log thingies, then let me just check I've got this right. It changes things quite a bit, you see. Then in terms of the log scale movements, we've actually had the 618 pocket already, and we're moving up towards the 786 next. Now that's more interesting in terms of visually here in the log scale. We're already past that point. That's interesting, isn't it? Fibonacci extensions off the back of that February-March thing might actually be decent though, for context. .618s line up between the two of them. Well, the 1618 lines up, sorry, the 1618 lines up with the 618 golden pocket zone, which is kind of note. And we're past that. And we're looking up towards the 2618. I suppose I'll have to put on the 1414 or something. I'll have them on apparently. Let me just make this visible to myself. Where is it? Oh, they're all below. Oh, sorry. Yeah, of course. It's been a bit moronic there. I meant to put on the 2.27. There's 2.22. There we go. So then I suppose your next target could be, after all of the craziness is done, would be up towards that zone. I don't know. I don't really like what I'm doing here with this sort of stuff. To be honest with you, I'd rather just go back to doing normal, regular TA on this. We're not in all-time highs and all the rest of it. I'll just go do regular TA on this. Thanks very much. We're in this area here. There's potential for that to start looking a bit wedgy if we do see things pull back the way. But at this point here, God, the magnet pisses me off, so I'm going to turn the magnet off, especially for this type of chat. I never like having them drawn in precisely anyway. So this is obviously looking a bit wedgy in its structure. I'd rather see this breaking towards the top side. It's a bull market, so we've seen these things breaking out towards the top side more often than they've broken towards the downside. To be aware of. So I'd rather see that happen. If we got a measured move off the back of this, it would take us up towards that 762 area. That would be nice to see. If we see it breaking out towards the downside, it'll take us down towards that 402 area. So I'd look towards structure as well. Fake outs from this thing are going to be coming in at around about this zone here of 531 towards the downside. I think that's a more realistic target in terms of trading. Is this measured move that I was talking about accurate there? Yeah, I mean, I would rather aim towards the 50% than to take the full measured move off of that and come in at 762. So there'd be my two targets with that one, and we're obviously bearishly divergent throughout this wedge, you know, but we've got this bullish stance over here on the DMI. So these two aspects are similar, you know, to Bitcoin. This is similar to Bitcoin, positive and all that good stuff. This is similar to Bitcoin, potential for divergence, haven't had divergence previously, but also, you know, we've reset the oscillators, and we could just keep trending up the way and putting in highs, looking back and saying, well, you know, if the price comes up and does this target, then by that stage, then the divergence that exists between these two highs currently would be gone, you know. And then of course we have this high here, but maybe that would also be gone and be back up and everything would be fine, and we could come and put a lower high in and not even take out our previous highs. But what is different though is this here, is that we see that there's this divergence here on the highs on the MACD, and there is the divergence there, and of course there's the hidden bullish divergence too between these two lows. So you can see this is the hidden bullish divergence there on the low side, so there's that hidden bullish divergence, and it's taking us up here, but there is a slight difference in the sense that it's also bearishly divergent should we see prices pull back the way. And we've had a red day so far on Ethereum USD pair, and let's not ignore facts. We've had a red day so far, while we've also gone in and put in all-time highs on Bitcoin. So, you know, there's a slight decoupling happening just there, and this doesn't bode well for the immediacy of any sort of turnaround with regards to the Ethereum Bitcoin pairing, as we see measured move having come in here off the back of this crap performance that we've had today on this triangle. Now we haven't had the full thing, so maybe we're going to see some more downside, and maybe that means that we see the Bitcoin pricing, you know, moving further away from the Ethereum pricing in the meantime. Now, will that actually come in and give us any sort of positivity? Well, it certainly could, because we're not a million miles away from getting bullish divergence here, or hidden bullish divergence in terms of these lows, this low coming in, and this potential turnaround with the Ethereum pairing. So that could be good, and of course it lines up with everything else we've already said as well. Let's go jump on over on over to the Link and Tezos pairings. What do you want to look at first? Let's look at Link first, because I looked at Tezos first yesterday. Oh, Link. Oh, isn't it nice to see you again, pal? You're just doing everything we really spoke about. Going to bring back your attention to the fact that, again, this is like this whole the parallel channel on log, but is broadening wedge on linear construct. The ideas we've already had here are still in play perfectly. So that's cool. That's all good. You know, we're moving towards the top side. The next target, if we take out our areas just here, which we haven't done so far, we moved up past the $14, up to $14.40 today. You can see the current price of Link is down there at $13.38. That's a fairly significant pullback that we've seen on the day. Bringing up the thingy here, I can see the highs today $14.50, the lows $13. So we've had a range of $1.50 today, and from our highs that we've had to where we find ourselves right now, we're down 7.8%. Now, of course, that means we're only down fractionally in terms of the pairing today, 0.5% there, you know, versus the dollar. But we're actually, you know, in terms of the range of what we've moved, if you had got in here, you know, and then ridden it up towards the top side, you were at 13.5% in profit, but then before seeing it coming back down the way. And indeed as well, if you were to look down, you know, we saw the prices drop down that 5% here already, and we're only down 0.5%, putting in a doji candle. Doji is the Japanese word for mistake. Over here we call it indecision. What do you want to think about that? Because you're welcome to, you know, you're allowed to, over the period of the next 10, 20 years, 30 years, 40 years, when you're being a trader yourself, you're allowed to think that maybe one day you'll be the next Paul Tudor Jones, or, you know, maybe you'll be the next Soros or the next whomever, and you'll be able to say things that become textbook, you know. So what do you want to call it? Do you want to call it an indecision candle, or a doji candle, or a mistake candle, or what do you want to call it? Feel free to think about your future as a trader, and how indeed in the future you could be the person people write textbooks about, and by all means start making up crap today for that. We've already come in and touched off the 618 with today's movement towards the top side and come back down the way. Big rejection on this candle. What are we seeing in terms of how we've done this? You know, we came in and put in a higher high over there, but we've actually, as a result, you know, the RSI's moved up because of the true range on the prices. The DMI, sorry, has moved up because of the true range on the prices, which means that it's come in here and it's kind of giving you a sense of hidden bearish divergence there. Let's just sanitize our thoughts by looking at the RSI. This is our high right now. These are our previous highs. We've not actually got hidden bearish divergence on the RSI, so we can kind of disregard that slightly. I would give the RSI precedence over the two of them if I was looking towards them. We've got this upward trend, you could say, with a high here, a low here, and a high here, and this is just kind of along the way. We've seen extreme volatility on this pair recently with these moves and these wicks. Got way too many Fibonacci's in the background here. I'll be the first to admit that. Don't worry about it. At this point here, if we take out, and this is what it is. I mean, this is, look, let me make this 236 nice and visible for everybody. There's this yellow line here, right? This yellow line is the 236 on a Fibonacci retracement that we've got drawn in, that starts off down here at the lows down there and goes all the way up toward, or sorry, starts in at the highs up here and comes all the way down towards the lows. So our 20 buck down to our $7.40 area, where that potential double bottom in the future could be. Now, by the way, I'm going to come back to answering your question again with another point. Should have said this earlier on. Who was it that said it to me again? Was it Sean? Was it Sean or somebody else? Good to see you here, Damo. Nice to have you here, Spidey Monkey. Great to see you. Great to see you here as well. To everybody else who's not had a shout out so far from me as well. Like, if that includes you, then I apologize for that so far. RT Pile, you're here as well. It's good to see you. It's good to have you here, Dragon Master. It's good to have everybody here, by the way. Really do appreciate it. Please cover ZEC. I see an additional target of around $140. The daily signal line is about to turn up. Cool. Okay, we'll take a look at ZEC later on. I'm interested in that one as well. It's one of those interesting ones, isn't it? Yeah, somebody asked me about this earlier on. I'm going to come back and answer in terms of this here. I'll just answer it real brief. If this is an ascending broadening wedge, the target off of it puts us down there towards the $7.40 area for that double bottom that you'd be looking at anyway. So if we do see breakdowns below it, I'd be more interested really than looking and saying that the impetus for this is going to come from the other side of the market. Although I would be looking at that, but my first thing that I'll look to will be the chart itself for this one itself, right? So while I acknowledge that, of course, there are areas in the industry where, you know, you look for divergence between, or convergence, I would say, from the sort of Dow Jones or Dow theory, when you're looking at convergence within a market or across industries. What Dow meant when he said divergence and convergence, right? So you're looking for Dow's convergence between Bitcoin and Link. Sure you are, that's cool, but actually as well, I'm kind of not, to be honest with you. And my first support call will be towards this chart, and if we do break down below these areas significantly, then I'd look towards fake out territories, as in taking out our previous lows and the 200 simple, and then I'd be looking down towards that target, and that would be the kind of the catalyst for me, really, more than the other stuff. But I attempted to answer your question at face value earlier on anyhow. Link then, yeah, so as soon as we take out this yellow line here, then the Fibonacci, which is on the charts here cluttering up at the minute, will become invalid. Okay, so that line there I'm going to replace with a horizontal line so that we don't have to have that Fibonacci on here. Okay, so I'm going to replace that with a horizontal line, and then if we did, you know, fail to take that out again or whatever, what kind of other targets towards the downside would be interesting to look out for? Well, we have this area between the 200 simple, the 200 simple comes in at around about where the golden pocket is kind of at the minute, and the 50%. So we could look we could just kind of say that there's this zone down here which we'll look out for if we do see movements outside of it in this area over here, and then I'll take away that Fibonacci retracement. Okay, so we have these areas and we know what those two things mean. Movements up above that horizontal blue line, very good. This at the minute at 1352, does it potentially operate as a potential rebuy zone? Well, it certainly does, you know, because like I said, the divergence isn't hidden bearish divergence isn't there currently. This is just a doji candle, you know, we're not necessarily making any mistakes or any, you know, that maybe you think about this as indecision in the face of a key area where we're taking out historical support and resistance and whatever else, and we can also see how these things line up with a Fibonacci that's drawn in from our lows over here up to our highs up here, and you see the 236 that's there. This is what enables us being below this line, at having come up towards these highs, to remain looking at these targets down below. What do we see? This is that same 236. This is that same Fibonacci. Sorry, that's why that lines up so perfectly. Gosh, confused myself for a second there. Sorry about that. That's the old joys of live streaming for you. In terms of the lows and the highs, we're up here, and this lines up perfectly with the 618, however, right? Okay, so if we see a turnaround from this point, well, you know, that's kind of one of these zones where you see these things happening at. But then, of course, we could be looking down the way. I would like to see, though, instead of all of these other numbers, which are of, you know, nominal consequence at this stage, having already gone past them, what numbers we're looking at. Well, I'll leave the 1 on, and I'll take off the 236. I want to see the 786. I want to see the 1414 and the 1618. So if we do move past these points, then what could be taken into consideration? Well, if this was an ascending Broadening wedge and we got a measured move off the back of it, it's going to look the same regardless of the logarithmic or linear chart. This amount of dollars is the same on either side. So if we broke out of it at these areas, then where could it take us to? It doesn't take us up to any of those targets. What about the 1, 2? It won't, but, you know, stick it in there and see. No, it doesn't. Those would be our 3 extended targets past this point if we did move up the way. Stick this on linear. Did I change this option here to be fib based on logs? Yeah, cool. So then in linear sense, we're looking up towards $23 as being the next target towards the top side. Should we get a breakout? Of this thing. That's not the way that those things work, though. I mean, it isn't the way that they work. In fact, you know, the way that the better way of doing this would really, I think what Bulkowski would say would be like more along these sorts of lines, but we're not going to do any of that crap. Cool, yeah. Do I want to put the Bollinger Bands on or anything like this? No, I've already been told I'm addicted to the Bollinger Bands in this episode. I'm going to just keep going without them. I think this doji here is my mood on Link right now. It's obviously experiencing a degree of indecision. Moving above that line, very, very positive. Failure to do so, not necessarily negative, because we could find support at this upward sloping trend line, or indeed our previous lows, or this area here we find the 200 simple, yada yada. The fact is as well that we have the 50 simple down below us, and that's where the low came in for today, and we've tested that again on the 24-hour time frame and found it to be support. And on the 4-hour time frame, we're up here living above the 200, dragging that 50 towards the top side with the ability to undo a death cross, come in with a golden cross with the price action relatively close to where this is. This has got significance in terms of crosses when the price action is near them. If you want to know more about that, check out my education playlist where I have a video where I took snippets from a stream where I was talking about it, where I explain all of that in detail for you. But let's just be aware of the fact that this price action operating in here at the 200 while the 50 is coming up towards the top side, in a sense, you know, it's not fantastically bullish that we haven't broken above it, but we're doing well to be operating in amongst this area just above in terms of this, looking at this line really just now and dragging this towards the top side. Everything's positioned fairly well for this to be a rather tasty higher low overall, if that were to be the case. Now, breaking down below these points means you rapidly look towards the left and say, well, you know, this is just us on the way towards putting in a higher low. It could come in anywhere, and the next target clearly is down there at 1256. So there's areas for us to be trading around this thing right now, and we're probably below the 236 on this move just there as well. Looking at this thing, let's just kind of draw this out for ourselves. Why? Oh yeah, I removed them myself. There's the 236 there. Yes, we are below it and we're finding resistance at it. So this puts us in a bit more context. There's a big chance now that we come in at this area, the 382, and there's a big chance then after we come in at the 50 and the 618. And then where do these come in at? Well, the 618 golden pocket, or the 618 Fibonacci, if I just make this a nice yellow for us as well, so that stands out, is coming in here right on that 50 simple. And I think that kind of means that I've covered all the bases and found the confluence here right now with regards to the chain link pricing. Now, I'm not going to give you a directional move on this one right now or anything like that, but suffice it to say that if we do take out our previous highs, we're taking out this, and this would be a double top pattern here. We have twin peak with regards to the 1st of December high, and then of course where we found our high at today. Taking that out would be very good, and I would look structurally, just simply put, I would look towards the next upward side target coming in here on this horizontal line, perhaps where those wicks are, but I'm just going to stick it in where the body is here, and I would say that $15.85 would be a reasonable profit taking target, for instance, for you on any move that you had if you're playing it between these zones towards the top side. And then of course the profit taking target down there at 12.50 is your other one. That's $1 down or $2 up in terms of that thing. So I suppose that is enough harmony with the bullish sentiment that's in the overall market right now to do that, to be done with that. Right, cool. Let's go on to Tezos, my Tezos. Obviously this move with regards to the Tezos Bitcoin pairing is proved to be rubbish. sorry, and that is now again our latest lows, with the results of the Bitcoin price going up so much, putting in the 236 on this one at 1262, so 12,620 satoshis. Now there's a big problem here with this thing, and that is, of course, we're a strong bullish market for Bitcoin, yada yada. This has been the case for months and months and months as we've gone towards the downside. We've had various bullish patterns come in here to, questionable, but we've had them, and they haven't played out towards the top side sufficiently for us. For instance, this wedge that we had on the charts over here that I'm going to remove now, for instance, various things that we've had, when we've come for the breakout, we've just simply put in lower and lower and lower lows. In terms of these the oscillators down below, you can see bullish divergence on the go with the RSI between these last two lows. Is that necessarily going to mean anything? Well, not really. We're at the mercy of other factors currently. Death cross over here, yada yada yada. We're at the mercy of other factors. Let's just look at the dollar pair instead, because this is obviously where the story really is, and we can see there's a few things haven't happened here with regards to our recent price chat. We've come in, we've retested. This is a 4-hour time frame, the 200 simple period moving average on the 4-hour time frame here, and this orange line. Stick up to the 24-hour time frame. You can see this is, with the context of what we were talking about yesterday. Came back up, we retouched this. This is why I left this line on here, and we can look towards this in the future in terms of our upward sloping trend line. We never really got the head and shoulders style move. Well, we did actually with this wick down the way, so we got our fulfillment of that target. It just happened so quickly, it doesn't really show up as much on the charts, and we've managed to continue to trend towards the top side overall with regards to this pair. Now what it means is that the opening and closing today, we didn't actually manage to do anything in that 240 zone, and we've come down as low as 227 today before finding our way back up, and we're at 230 at the moment, and that's really is the key for us. Back down towards the 4-hour time frame and stretching this out a wee bit. Make it full screen. We're in again, ding dong. How do you want this to be? If I stick it on log, it's even easier to get these things to line up a bit more just right now. Stick on a trend line on the top side and say, well, maybe it's not easier. Do we want to look at it like we don't want to. We want to look at it like that. So we're going to let our bias kind of influence us in terms of this. We've only got 2 touches there. That's crap. I'm going to remove it. In fact, that's not worth it. Was this any sort of cup with handle? And we got the measured move off the back of that. We have had that measured move off that cup with handle, but we're at another stage here, another twin peak pattern. Let's put in the horizontal here. We want to get above these. We want to get above that area there. That's it, 245, 250 really actually is where we're looking towards the top side. Things could get quite good if that's the case. As you can see here as well, we did talk about the potential for this is on the larger time frames as being as our inverted head and shoulders here. This is still very much possible for us. The 200 simple period coming in here and giving this handy analog for a neckline is also really quite beautiful. Taking out those two things at once gives you that natural confluence. If you were to look at this in terms of any sort of if you were to look at this as having any sort of potential movement towards the top side of any played pattern, this would be your profit taking line coming in there at the 260s area, as we've been speaking about for a wee while. So obviously that's another sort of 10-15% up the way, depending on when you get in on today's price action, and and then we could expect to see potentially for something to happen. I want to push on past, because as we can see here, our previous high was in at that area, so this is going to be key for us if we want to just look at it from a structure point of view. I'll hide the moving averages to not distract you. I'll hide the drawings too. If we don't manage to take out this high over here, and there's a big wick on it too, but I want to see us closing above 267, then of course things aren't so great really, because we've put in a lower high at that point, and we'd be looking down the way, but we've got this overall upward trend in this section here, and I want to see this continue since we had this potential bottom. This bottom did come in with nice bullish divergence. Everything's looking good enough in this pair, and overall the market's pretty bullish, so there's that to be considered, I suppose. Overall, I suppose also we can see, this is clear area for inflection where the prices are right now. Here with this horizontal line, I'll just show you, put a horizontal line in around this zone here. You can see here so easily how this has been important for us. So our first port of call is clearly moving up above, where we are now. Finding support if we need to, in fact, as well, would be the better way of saying that. Finding support here, not needing to drop down below that area, is very, very much key for us right now. 228, so the key areas for us, if you want to look around the micro, are going to be 228, 222, and then 210 and $2. If you're looking at it a bit broader, then obviously you're talking like 226, $2, and towards the downside. Towards the upside, you're looking here between 231, then up towards 2, where we are now, up towards 2 up towards 240, 250, 260. Key area for us if we're going to continue the trend up the way is 270. We can cope with any pullbacks from any area if we stay below 260, so long as we stay above $2.07. If we make it above 260, then we can cope with any pullbacks on anything. So then we're going to look out for the divergences and whatever in the structure on things. At that point, I think we want to make sure that we don't get a triple peak coming in here and we get the boost move up from the inverted head and shoulders, and that would give us a nice big movement up towards the top side, coming in for these areas here before in the $3.40 area for us. Cool. So there was a couple of things that people wanted me to look at. One of them was a suggestion of XRP. That was the first one I saw that was thrown in there. So I'll go take a look at that, and then I'll go and jump over to look at ZEC as suggested by Dragon Master. He's done BTC, ETH, now Link. Next up XTZ, ZEC, possibly Link ETH if it perks his interest. Link ETH, you want to look at Link ETH as well? I mean, it's right here in this chart just now. This is interesting for us in a sense. Oh, look at that as well. I mean, if this was actually horizontal, I drew it in squiggly because it's me we're talking about here. You can see this is a key area for us. We obviously don't want to see that capitulate there. Oof. You don't want to have a rank head and shoulders on here as well, because that's kind of like a neckline for you with this head shoulder type idea, but that's not great. Got it burning off quite a good degree there. Touch of bullish divergence on the end of this phase. Movements towards the top side, taking out where that previous 236 was. Pop that in just down there. Yeah, so we want to take out this the 236 there, sorry, at 0.022. I'm pretty sure that there's 282 was like a key number for us in terms of this thing. 28282828282828 when I was talking about this before. Obviously the long didn't work, but the short idea was fantastic. Yeah, we want to go past 2.2 or 2.3 actually. Let's call it 2.3. Gonna have to. I can't find a funny number where this one's going to be 2.3 towards the top side until such times we've moved above 2.3 on this one. I'm not particularly bothered about it, but of course Link USDT is going to be leading the show for this one. It's everything else is at the mercy of the big daddies, and there's just too much liquidity, too much interest in Link in Ethereum and Bitcoin for you to be talking about something like the potential of a Link Ethereum pairing or a Link Bitcoin pairing really having any influence over the headline price. The thing that's missing from the Link USD technical analysis I did earlier on is that this is an inverted head and shoulders on the RSI as we find support at our swing failure point, and there's also and that's not showing up here on the charts, but you could look at this as being, it doesn't even work in terms of an inverted head and shoulders, but in terms of the RSI, you've got this type of idea anyway, and that could see us getting the impetus to go past these zones. When we go past these zones, are the type of zones that you go past and then you don't look back at for a wee while, and you think maybe if we do, then these would be where we find support at, by the way. Just in the same way that we're looking down at 1250 now, having been there recently when we were looking down at 11 before, etc, etc, etc. Going to jump on over to ZEC first. The reason I'm doing that, by the way, to whoever it was that suggested that we take a look at XRP is because Dragon Master is currently the top donator on the channel, so I'm going to give him the benefit of the doubt here in terms of what we're looking at here. I wonder what pairing it was that he wanted to look at, though. There was something he said specifically about it. How about I just do some technical analysis on this one just now, and then I go back and try and figure out what it was that you were saying or whatever, and see if I've covered it, coincidentally, so to speak. This is key area in the market, though, right? I mean, you've clearly identified something here. This is a ZEC USDT chart, and just drawing in a horizontal line right at where the price is, just so it's more obvious to everybody. You can see inflecting here, came back, found support. When we broke down past it here, we never looked back, came down all the way back up, only retraced as far as that line, down again, all-time lows, came up here, everything's going along here, shot through it, came down, found support at it, then of course bounced and then broke it down underneath, came back up, found its resistance, came back up again, went up towards the top side, broke down below it, and so far then right now we're right on that line. How fantastic is that? I wonder if that was the point that you were trying to make. So obviously here there's kind of opportunity, saying there's opportunity for us, right? What we can see here is that we've got is that there was this upward trend here, right? This lasted until August. move down, retrace against it. We're still in the upward trend. We didn't really take out any structural points here as we find, you know, this other area. If there's going to be another area where you can see as well, which is obviously significant for us, then it's right here where we found our support as well. So that's great to see. The next target towards the top side has to be our previous high overall in terms of this trend. So there's going to be another area for us to bear in mind. This is obviously the crucial zone right now. How are these highs looking compared to each other? Nice. No divergence between these 2 points just here. That's good to see. No hidden bearish divergence should we fail at this point and move down the way. That's good to see. From the low to the high here, there was a retracement down the way. Am I as interested in that as I am in the other side of things? Maybe not so much right now. First point I want to look at in terms of these concepts is how far we've come in at 786, got an 886. No doubt that's where the 886 is coming in at as well. Yeah, bang on there where that blue line is. It's of no coincidence to me that that's where that was. So, of course, that's where we see the prices having found inflection points at in the past. Cool. So everything structurally makes sense, right? Everything's making sense here on this one. We saw a turnaround at that point. How far down did we come then in terms of you know, from this wick to the high that was in there? Took out the 236, came down 382, bang on it, found support, moved towards the top side. So this thing's working along there perfectly. Those arbitrage bots and algorithmic traders and everything else out there, you know, doing that great job that you'd want to see them do in terms of just operating along these simple lines in terms of where they're going to stop out and take profits and everything else. So how about we then look between the next area? So this significant area, which is our next area to take out, is that previous high in here at this blue line. And of course, this is where we found our significant area of support. And we know that there's this medium line in between. And this obviously operates as a sort of range for us, giving us our median point, our low point, our high point. The easiest trading to be done on this thing is obviously between all these zones. So, you know, so I'm going to say that the best buy point on this is down there at $50 and that the best sell point is 105. And the fact that we're in here right in the middle of that in around 75 zone obviously puts you in that no man's land territory. If you're trading this off the back of this thing, then I would manage my risk personally in at this line. You know, just take it easy. Just say I'm going to just be strict on this one. If I was wanting to do it any more so than that, and I had this as a profit taking target up there, and I wanted to go for that move, I'd have to be stricter on how I manage. I'd have to be looser on how I manage my risk and think about that zone down there in terms of being the area to stop out at where you had your previous high. And does that give you a decent enough one? That's only a 2.5 to 1 risk to reward ratio. Maybe in here is a bit better, but I'd be looking along. That's obviously your next opportunity should we continue to trend towards the top side. That's clearly where that next opportunity lies at. But of course, taking out this area below is showing a structural trend change, because what you can see here in this area, if I zoom right in, is over the past week we've been in a downtrend, and this will be much more visible in the 4-hour time frame. Well, you know, in terms of its, yeah, it's more visible in terms of its high, low, high, low, and then lower high so far. So, you know, we have to look down. This is a better entry point. Currently, you know, this is how we're looking in terms of the structure of things. You know, we've come back up and touched the 618 perfectly at that yellow line just there. Movements down below the 236 would, you know, clearly signal to you that you could be coming in for a retest of our previous low in there at 62. So if you're looking for numbers on this thing where you'd be buying at or whatever, you've got things like 62. You've got things like the 236 coming in there at 67. So the 236, gosh, 236 at $67 or so is one entry area. The previous low over there as well at 62.5 is another entry area. Previous low at, and these are all risk management areas and profit taking lines, and if you're shorting it towards downside profit taking lines, really it's the fact that you have to kind of put a label on things as a human being growing up in the Western world means that that because of the lack of imagination and inventiveness in the world of trading, you end up having to kind of overlap constantly. Anyway, whatever. Previous low at 62.25 25 is another good entry for you. This line here, your key pivot area, is going to be at 73 bucks. Right where we are now. It's no coincidence. It's probably why you asked for the chart to be looked at. Key pivot is 73 bucks. We previously touched in there at 78.18. That's where the 618 is. These are the key areas for us, and then of course, you know, your profit taking targets then start kicking in, and you're looking at a solid 90 bucks would be your next level after that. Then 99 bucks, where the 1.212 is your next one after that. You wouldn't necessarily be as greedy as to wait until you know, the risk in this zone here. The risk in this zone here is much greater. The risk in this zone here is much greater than the risk in the run up to this zone, so I would sooner take profits there, wait and see how things go, and jump back in it again at a successful break of the 1414 than I would to be trading between those zones. I mean, I think that makes a hell of a lot of sense. And then I'd be going and looking at the sort of the 1414 up to 113 area. That's near enough another 10% profit. What you're missing out on in between times is you're saying, I'm not going to take 4.3% profit on a move in which I've already taken, if we get past the 618, I've already taken 25% profit. I'm going to leave this particular 4 to 5% profit on the table, and then perhaps jump in for another 10% between these two moves, or else not. That's what I'd be looking at for this one as well over here. I really want to know what it was that you asked me about first off, and if you want me to look at anything else. Obviously in this I've not looked at Bollinger Bands, I've not looked at moving averages or whatever, but let me know if you want to look at anything else. I've also not looked at the MACD, which is got class B. It's got hidden bearish divergence on it in a sense, right? Because this is a downward trend in this chunk here, this little chunk on this time frame, the 4-hour time frame, and we've not broken it yet. So until such times as we break 75, we've got hidden bearish divergence. I'm not rushing into a move on this one. I'd be so tempted to stop out so quickly right here at this median area, you know, having arrived up here. This is a profit taking line. It's a bad idea to enter into a trade right at a profit taking line when you know that people are taking profits before you kind of wait for a resolution from those accounts first off. So that's kind of happened, you know, or happening, and then I would look to get into around about those areas. Yeah, stick a comment back in the box if you're still watching along, by the way, Dragon Master. Daily MACD signal line is now headed up, right? Okay, finally reached bottom. Okay. Continuation pattern leading to 140 bucks. Okay, cool. Shielding is required for bank adoption. Wait. Right, that was you helping me out, lifting Burkers. Yeah. Cool. So you're talking about some continuation pattern looking for 140 bucks. What particular continuation pattern are you talking about here? Are you talking about this wedge here? Are you talking about this? Now this is obviously going to, a degree of interpretation is required here on this one when it comes to looking at out for continuation patterns here. But what you could be talking about, if I just hide off this thing here, is that this would be like a wedge, and you can see this low here, and this one and this movement down the way gives you that potential. So maybe you're talking about that as a sort of descending wedge here with only 2 touches towards the downside. Well, let's give it 3. Bing, 3. Nice. And then of course the breakout coming in here. Not got the volume on the chart. This is another thing I've not talked about for like a couple of days. So there it is. Oh, increase in volume as we were breaking through. Yeah, cool. Finding support at this point here is obviously key for us. If we don't, coming back down and retesting this zone here at 662 would be no surprise. How does that line up with everything we talked about anyway? It's 236 at 67 bucks. Yeah, so if you came back down and retested this, you're looking at a retest of the 236 as well. Then the continuation pattern, you know, this isn't going to be enough of a measured move to get you up to what you were talking about. So it must be something else that you were thinking of. But sure, let's just look at it. That takes us up towards 89, so that gets us some way of the way so far. I'll leave that drawing on the chart. What other continuation? Cup with handle, perhaps? Have we got a 50% retrace on this one? Let me just double check that if we got that or not. because there's plenty of ways of looking at this, but it's going to have to go for the most typical ones. Yeah, we got 50%. We went past it down to the 618, so I'm not, pleased about that, but at least we didn't go past the 618. So then we've moved towards the top side, so that's pretty nifty. It's not ideal, but it's pretty nifty. Here's your sort of your rim area. Here's your basin. So then in terms of measured moves on this one, that takes you as high as 115. Still not there. Still not there yet. In terms of which continuation pattern you were looking at, I wonder if I can discover it, or if you'll just do me the favor of telling me what one it was. Correct, that's what I saw. Oh, we're looking at the same. Oh, we're looking at the same stuff anyway. Cool. So I mean, and then the next target then comes in as opposed to the measured move off the back of the thingy, I guess is what you're saying. Cool. Let's just jump up to the 24-hour time frame. Obviously, you have the same effect on the go. If we did come up and twin peak out here and drop down for a retrace back down to this line, then you'd have your natural cup with handle operating within the range here. So you'd have that structural confluence with what you were looking at if this were to be the case. I don't want that. I wouldn't want that to be the case. If I did trade this myself, I would be disgusted at looking at a move down at 25% drop off in price and trying to say, oh, I'll just live with it because I've got a cup with handle coming up. I would be disgusted with that, so I wouldn't trade it that way myself, but that's what you'd be looking to. And then the next high thereafter, we could be talking about it could be anything as simple as if we did this measured move. Now this is speculative beyond fucking belief, but if we were to do that measured move, what you would see is you'd get your third touch on that thing, and then of course you'd have this on the go, and this can take you up to any of those targets just in terms of being a bigger, broader pattern. That's highly speculative. It's not on there, it's not visible yet, but that's what you would see if we saw, just undo here, if you saw it turning around doing a twin peak, coming back in and retesting here, then it leads again with you'd have a cup with handle within a range as a continuation pattern, which would then play out, and of course then your measured move off the back of that would be this, and ding, $157, and I guess that brings me in close enough to your 140 for us to say that we made it there in the end. There's so many ways that you can approach looking at a chart, and obviously throughout every episode I kind of scattergun approach to a variety of different ones for educational purposes. Obviously for yourself at home trading, it's best to kind of choose a system and stick with it, iteratively improve on it, go through the system of doing what, like the Michael Douglas type idea of trading 20 times, seeing how well you did over those 20 trades, then revising your system only after you've done that, so you can at least get a decent sample size, and then tweak things here and there and go with it, develop your own style, everything else. And leave things like this sort of like speculative, what if this move happens, what would happen next move. But obviously everybody knows that you want to become like the equivalent of a grandmaster at chess when it comes to trading, and obviously that means looking 2-3 moves down the line and just having ideas in advance. Now it takes a bit of a decent sized cache in the old memory RAM brain section of the old cerebellum there, so obviously you want to keep things as simple as whatever fits for you in terms of what you're doing at home. And I'm capable of doing this. It's not blowing smoke up my or whatever. I'm just saying, it's like, don't overcomplicate things for yourself. Find your groove where you get comfortable with, and experience will make it so you can absorb more of this, because you develop mental frameworks to actually mental representations of what these things are, and that lends to being able to kind of more rapidly discover them and whatever else. I wouldn't do this sort of thing. This isn't like the broadly educational type thing, but this is obviously an aspirational type thing to think about in terms of how you would approach charts. Bang Manny's a way off. Bang Manny, I missed you. Bang Manny, was it Bang Manny that asked earlier on for XRP? Because I've obviously been slow about coming around to doing that, but I'm just about to do it now. So if it was measured from the start of the rise up from the double bottom to the last high, double bottom, the last high. Well, yeah, because that's exactly the same thing that we're talking about. It's just layer upon layer upon layer, right? You've just said it in another way. We're not talking cross purposes here. We're definitely, converging on the same concepts. But whether I take the high road and you take the low road, as long as we both get to the same destination in the end, it's all gravy, baby. And yeah, what you've essentially described there is that if we saw this move, and as you can see the logarithmic chart making it so animated, which is lovely, then what I just discussed is exactly what you just said there. Lovely jubbly, isn't that great? Fib extension via double bottom. Do you want to see that as well? There's a suggestion before we move away from the charts. So we've got did I already do this? There's me talking about having enough cash in my head to be able to. Yeah, I already. Oh, look at that. Well, yeah, the 1414 comes in there, $137. I mean, you've got the three key areas towards the top side of the 1272, the 1414, the 1618 coming in there, and if you were to average those three numbers out, then you would come up with $140, right? 124, 137, 158. It's going to be in around about that zone that we talked about exactly as well. Perfect stuff there. Perfect. All great. Loved it. Thanks very much for bringing up this chart, by the way. I enjoyed looking at this one, right? I enjoyed this process. This was a good one, so cheers for that, Dragon. Tass says the average past percent increase from last several all-time highs to the next in the last bull markets. I averaged the. I'm going to have to read back up to find what your chat is here. I'm going to just read back up quickly. Sorry if you feel like I'm sort of overlooking your chat in the live chat, just and that or whatever. But I don't mean to be so. I'm going to come back. I have a section where we do the whole chilling out bit together, and that's coming up after I look at XRP in a minute here. So anyway, Tass says, and that's Tass to anybody who doesn't know what I'm talking about. That Tass chap, Tass says, if these moves don't blow a happy wind up your kilt, you're dead. Yeah, big time. What did you say? Don't look to take profits until at least September. Oh, that's quite a ways. That's September. You know, we're talking. Yeah, this is a long-term uptrend. You who day trade excluded. Yeah, cool. Okay, right. So if you're in a hodling mode or whatever, you're going to want to wait till the broader market structure has played itself out, right? And we can see that quite. We can sort of look at that and allow people to sort of let that idea settle into their heads. And it's probably a good idea because I've been talking about things in such a degree of specifics that really, you know, it might be worth just kind of popping on the old monthly chart, hiding all my drawings, reminding folk then in terms of the logarithmic chart. Do we want to even look at it on this one? Well, this is good enough for us, whatever. If we want to look at it in this one, that in terms of you could be looking up the way and finding that there's big retraces. You could be. If you're then, you know, and like looking down to where previous zones are on this chart, all of them are a million miles away from where the price is right now. But then, you know, looking at these candles and seeing that there's this upward potential. Now this chart's not old enough. Yeah, this is more like it, right? Okay, cool. So like we do get big drawdowns in the price, but if we were to go into continuing on the overall upward trend, which we've been in for ever, right? Then you're looking to kind of not take profits till September. Cool. If I take this off log, by the way, you can see that you get the whole snake rising cobra thing there on the go. That's not what people refer to when they talk about the cobra, but look at this. Look at the way that these lines are because of it being so big. You know, like it doesn't take long to get into these crazy numbers, right? Well, it does in terms of our lifetimes as human beings, but not in terms of planetary movements. If you look here towards that's ironic. That's funny, isn't it? Clearly, what I was trying to do with that trend line is draw this up towards the top side and saying that what you'd be waiting for would be a break of this in terms of the major moves. Now, every time you get a new one of these lower moves in, it gives you the flexibility of kind of choosing another line to give you that sort of impression as if nothing ever has been broken. In fact, I suppose I can undo that. I can ditch everything and then use the undo button to bring it back in a second. So, you know, you could have been looking at this at one point and saying, right, you know, this is how this is. And then, of course, you can look at it now and say, no, this is how this is, or whatever. You know, it doesn't, it just in terms of the long, broad term perspective, we're looking for major breaks in terms of if you're looking at things. And I guess what Tass is maybe saying there is that you'd be holding on to things until like for quite a period of time, because what we've got here in terms of this upward movement and everything else is just this little bit. And if you want to take a sort of comparison point of view between how long these things tend to last, you can just do it by dragging the stick up. Now, I know this is the log chart, so it's going to shrink as I move it, you see, so that you know, like look at that for magic. However, what we're seeing here is I can't use that tool, but what I can use is the measuring stick, and I can say that there you've got this 24 bars. This is the monthly chart, so that's 2 years. Drop down, got this up here. This is 32 bars, you know, over a year. So then we've got this drop down. Where do we want to take it from? I suppose we ought to take it from down there, right? Because we've not broken that low yet, and so far we're into this 25 bars. So let's quick comparison here. 25 bars. If we don't see things dropping down now and completely shitting themselves and whatever else, what Tass says is correct. day trading, I think, can kind of, you can find your feet in between those two mentalities if you want to. Bear in mind, this one 25 months, right? Okay, this one over here, you could say from where do we want to draw it in from? Do you want to draw in from here? And there you get the 35 sort of thing. So what you're looking at here is either perhaps, historically, maybe we shit it from here, or maybe we've got another 10 months to go, which would bring you up towards what Tass is talking about, right? Which is coolly schmooly to me. But then I guess I missed what you were actually talking about. How you can really have a target? It's blue sky price discovery right now. Yeah. Blue sky price discovery, by the way, just so everybody knows when it comes down to the actual language, because I'm not a stickler for language. I'm not really a pedant. I really amn't, as I proved by saying that. But price discovery is what constantly happens all the time in the markets. This here is a representation. The movements in the market are the price discovery. We're always in price discovery mode. That is what everything always is. If you think about it from that point of view, it may or may not help your thinking, but for some people watching along, that might be enough to give you an adequate readjustment to how you could think about things when you're in so-called price discovery mode, because of course this period here, as we were moving towards the downside, all within previous price action was price discovery mode. By the way, on the monthly time frame, you can see that this was an all-time low sort of on this chart for its monthly low over here, compared to there, obviously, but whatever. And then movements towards the top side, all of this when we went up towards the highs in July 2019, that was price discovery. Then we discovered the price all the way back down towards our lows in 3,700, and then we've discovered our price discovery the whole way up here as well. That's really what happens, and all of these things that come into play are the same. What's the biggest difference between blue sky thinking territory and previous stuff when you're not doing that? It's historical support and resistance zones, and we did kind of cover that at the top of the show, saying that now there are none of that to be able to do. That's the difference when you're talking about sort of the price discovery mode. There isn't a way to choose a top. You're very, very right in that. There's only ways, and what I've been trying to say to people, and maybe it hasn't been clear enough, by the way. What I've been saying for the last 9 months is that we're in an uptrend. I've said it since March the 13th, literally on the day of the when the prices turned around over here on the charts, right here. I did a video the next day. I started off with the song by Nina Simone, going on about it's a new day, it's a new dawn, and I'm feeling good. So I talked about how it's a new day, new dawn, and this was the start of the bull trend, right? This was the start of it. Then we went up towards these other areas. All that happened. It's all historical and that along the way. But and the whole time I've been saying, look to market structure. If we take out significant previous lows and put in lower lows, then maybe things have changed. Until then, they haven't, and that's still the case, and it will always be the case. Now, what's the difference between that first 9 months when we weren't in all-time highs and where we are now? Literally nothing. There isn't any difference about it. It feels so much more like that because we don't have the ability to look back in the charts and say, oh look, well, we have a top over here, so that's where we're going to find a profit taking coming in at, and that's it. And I don't try to impress people by looking at some overly simplistic things like where our previous tops were and saying, well, that's it, and hope for it to be impressive. But of course, in terms of what people will be talking about now, it seems like you have to do some sort of black magic to figure out where tops would be. You don't really. It's the same as absolutely everything always has been, and always will be. It's just exactly the same. You just don't have a Fibonacci that you can draw in from your previous all-time high and say, oh look, we're at the 618. If we don't find support at the 618 here and drop on down the way after having had this wedge here at the top of the charts and got a measured move off of it, and not find support there, then of course we'd be looking down to these other zones. And the reason why you'd be saying that is because you'd be taking out your previous lows and you'd be able to jump in here and stick on a Fibonacci going this direction and point towards the fact that if you're taking out these areas, you're taking out the 236 at 409. And then of course, if you move past that, now of course this would be the turnaround zone at 409 for 75% of cases. But in that other 25%, if you go down past this and close out here a couple of candles down below, then there's a solid 80% chance that you'll see the prices going down to $242 thereafter. That's $150 with a 80% chance of getting there. All right, okay. So obviously in the run up to it, there's a 75% chance that it won't happen. As soon as it gets past that point, there's an 80% chance it will happen, right? And that would be $150 move, and then you'd be like, say, and then people would say, oh yeah, do you remember that guy Rocky? He called the tops here, and then he told us exactly where the prices were going to. And you know, people do that and they build their whole careers off of it. Just check out DaVinci J17, the guy that called 20,000 as being the top in Bitcoin, and the guy that called 3,000 as being the bottom in Bitcoin. That's DaVinci J17. This is his entire mythos around that guy is built up off of that during the 2017 bear market and 2018 bear market. That was, the whole thing was built around that, you know, and it's bullshit. But somewhere along the way, I'll get some of those accolades as well. I mean, I give them to myself all the time. I am the guy, like I just did at the start of this whole rant, that called the bottom here. Is it bullshit to do that? Yes, it is. I'm one of the ones who's done that. I've done it. You know, I've lived that. I've got the t-shirt for it, and I'm telling you it's bullshit. So DaVinci, he's not going to tell you it's bullshit, but it is, right? Because I did it, and it's bullshit. And not only did I do it there, I did it in August, I did it in February, I did it lots of times. It's always bullshit. DaVinci's built this whole thing off of it, though. What do we want to look at now? I want to talk to the chat. I want to see everybody. You're welcome, by the way, Dragon Master. I see your chat coming in there saying thanks for that. They will look fine on the USD chart. Oh, I was supposed to go over to XRP. There you go. That's the problem. I didn't do that deliberately to annoy that guy. I genuinely didn't. It's just that I didn't think, because, you know, and I'm a human being, so I forget things from time to time, and I've had to do an awful lot of talking and thinking here. What a month that was, huh? That was the month for the airdrop coming up. In this period of time, XRP sold. First time ever XRP bought some, put it towards the price up, airdrop coming in, prices dropped down subsequently. That's the story there, in the most obvious sense. But we can also talk about this in a more neutral way and not be negative about this coin just because of its historical manipulation. 75% of the time you're going to turn around at the 236. If we had gone past this 236 and closed out a number of days here, a couple of days, you know, below this price point, there was an 80% chance it would have gone from 48 all the way down to 36. There was an you know, that you would have got this 25% drop off in price in that move. It's not happened yet. What would change things? Taking out this high over here at 75 cents. Where do we find ourselves now? Well, we find ourselves at a point where we're actually putting currently a lower high. What do we need to take out? First off is going to have to zoom in here and jump down to the 4-hour time frame and look at this downward trend that we've been in on this at this point. This is low is lower than this low. This high is higher than all of the subsequent lows. At this point here, we're coming in and having a little bit of thought process going on, having unable to close out a high. Well, it's higher than this one. That's good. That's our first positive sign. At this point here, we've done everything we need to do to be able to go back down, in fact, and retest this zone and simply put in a higher low. Good buy price for XRP is going to be 48 cents off the top of my head. You know, just in terms of looking at this. Have we missed the move here? Yes, we have. If you bought in here and it went towards the top side, you'd be lucky, right? If you bought in here and it went towards the downside, you'd look back and say, I bought the top. That's how these things work. How do you avoid that phrase of I sold the bottom and I bought the top? You know that thing that noob traders do and they lose out on. How do you avoid that? How do you avoid that at any given time? How do you do it? Simple. You wait for a retrace. Then if the prices were to come down here, you'd be able to look back over and say, well, at least I didn't buy the top, right? There you go. They can go from if that's what you're experiencing in your own trading at the minute, you can change your entire trading life simply by just saying to yourself, why do I always buy the tops and why do I always sell the bottoms? Well, here you go. Stop buying the tops. Stop selling the bottoms. Problem solved. And you would do that by not trading right now. But of course, as well, we're in this zone here where we've had this nice upward movement, and we're actually finding the prices actually finding support here above the 236 right now, and they're at 56 cents. 56 cents is obviously your clear buying price if you want to go bullish off the back of taking out this previous high over here, which was a lower high along the way towards this low. This low that came in here, did it do it with divergence? Well, it certainly didn't. You know, between these 2 points, between these points, well, it didn't do it. There was divergence between these 2 points just here where we could have seen a turn around at 236, and it didn't happen. We failed it and came down the way. Then we didn't actually close. We didn't actually go on and do it. Take out the 80%. You know, that 80% of the time these things happen. Looking here, you know, 4-hour time frame, not enough. 24-hour time frame, didn't open and close below that price. So there's a little dynamic for you to be aware of when you're looking at price action. We're above that, 56 cents, decent enough price to get in at, easy to manage your risk around that area. That's what I'd be looking at for that one. Obviously that's happened within the last 4 hours, so you know, this is how I would have been looking at it had I been looking at this 4 hours ago with a view to trade in it. I wasn't, so I didn't, so it didn't happen. But I would have looked at that and I would have said, easy to manage my risk if I want to in these zones. I actually took it body to body the first time I did this. I don't usually do body to body, but that's, you know, there you go. Given the wick here and the two bodies here being so flat and the real key area of confluence in there. Now, if you are looking up towards this zone and you're looking at it from the 236 point of view and going wick to wick and saying that there's volatility in here and I want to actually base my trading off the back of that, the time to what you could do is you could easily manage a short in around about this area and indeed manage a long as well. So here's a couple of examples for you in terms of just simple things. There you go. If you were to be taking out this area, you're looking towards this as being your sort of profit taking targets up towards the top side. Now, of course, we could go even higher up and all the rest of it. This is short-term trading type of idea if you're day trading and whatever else. Likewise as well, you could be looking at this along these sorts of lines, as you know, in terms of managing your risk. Anything like this, you know, for instance, as being a decent enough trade, you can get 5 to 1 on this really easily without it going down any further than this 50% line. And if we didn't down to this 50% line, that wouldn't be too weird, whatever, right? So there's all of that. Right though, so is there a potential for this to be good? Yes, there is. Quite clearly, you know, it comes in here at movements up past where we are right now, and that's obviously not happened as yet. And movements towards the downside in terms of things being, you know, getting really bad, would be closing out days below this, you know, down into the mid to lower 40s. What we're seeing over here is that we've got this movement towards the top side, giving you a nice V, you know, a nice V for Vendetta here. So you've got that V for Vendetta on the go there. And what's our Vendetta currently? Well, we're going to have to look towards our previous highs over there and in terms of the RSI and push up the way. We've got that moving average coming in here, giving us that little bit of thinking about things. You know, obviously as well, looking to the left, this zone, this general zone that we're at, it's obviously another sort of little kind of RSI style inflection area for us in the market. A pivot point pushing past here would obviously then carry us on towards the top side, and that would be good. But this nice jump up towards there, coming into the moving average, is nice to see. Is there the potential to be positive on the back of this? There absolutely is. This movement towards the top side has done wonders for XRP. This has saved the day. Otherwise, this was very much looking like it was rolling over and doomed towards further downside price action. Looking all right on this one. Right, cool. Let me just check in with the chat here and see how everybody's going on, because I hope everybody's doing really well. We've covered all the coins that people wanted to talk about. I'll put on the Bitcoin price chart again here, 22,930. This is obviously this is the story of the day for us. Is going to be 23,000 is the story of the day. That's what we're experiencing right now. Put a bit more context on here for people. 22,000 here is obviously where the 236 comes in at. If you're looking for that, 22,170. If you're looking at that as being an idea, I don't know. I don't really know. I'm going to just catch up with the chat. I've been looking forward to catch up with the chat for ages. And ages. Right, cool. Can put my legs up on top of the computer, pull this over towards me. It's relaxing time. I've done my hard work now, and we'll check in if anybody wants to sort of, you know, ask me to do more hard work or whatever. That's cool. I'll do it for them in a minute, but donations accepted. Otherwise, I'm relaxing and chilling out with you guys for a minute. 59 XRP now. Yeah, we're right on there with that. We're right in there at that level. It's easy enough to manage your risk in these zones. You know, obviously there's a good chance you get stopped out. Obviously there is. You'd have to accept that, but you know, but it's easy enough because you can at least choose a couple of key pivots where you say, well, I think I'm wrong, and it's obviously based on what you're saying. So if you think that moving past the 236 invalidates that Fibonacci and we can move towards the top side, or indeed, you know, gives us the chance to go up the way, then cool, and you can manage it, but I would then do it fairly tightly. If I was looking to be patient and wait to get in on a trade, then I would acknowledge that we're in the middle of a range right now, that potentially if the prices went down, I'd feel like I'd bought the top in terms of a pullback, in terms of what ultimately turned out to be a lower high along the way towards lower prices, and instead I'd I'd rather get in at 48 cents, you know, and that's really, really cool because that's like 10-20% down from where we are now easily, and that if you've got the patience for it. Otherwise, you know, that was actually the other day that move happened, and that was when to do that instead of now, you know, so, or whatever, but it's cool. What have we got here? If I scrolled all the way back up and I see whenever you said cheerio to Bang Manny, that's cool. We need them balls. I'm sorry, I didn't see you saying that, trade spotting. Wonder if Susie is still locked in the closet or if she got wrecked. Hope she didn't. She seemed sensible. Ha, says Zoner, laughing at that one. She's probably selling Turkish delight with the Snow Queen while hunting Aslan. That's so fucking funny. Sorry. Anyway, poor Tezzy's, so much potential. Yeah. Let's check out Tesla. Yeah, let's stick on Teslas for a second. So much potential, poor Tezzy's. It's not done it yet though, has it? Link and Tezzy's, tinky tinky tink tink tink. You know, so much potential. They have this passion, this blue line for us here, you know. If we find support at this and we don't crack down the way and we continue to go up the way, you know, then this could be, that would then, you know, this would be our high or low in there at $2. We got a retest of it there at 2.8 for giving a nice tasty buy entry for anybody who caught that. And then of course moving towards the top side, and at 260 comes in, 270, and we've got the and percentage price targets come in, you know, like the previous high 16% up from where we are in terms of the body close, the previous wick 30% up from where we are. The next real inflection point in the market after there, because we've got clear space up above, 50% up from where we are. And if we actually do continue the overall trend which we have here on the weekly time frame towards the top side, if we find this as an inverted head and shoulders after this movement down the way and go towards the top side, and actually, you know, it operates in terms of a trend changing move for us, and we take out the $3 zone there where that move comes in at and move up the way, then the next high comes in somewhere above $4. You know, the previous high is in there at $4.19. So if you just go up from here to the previous high, you're talking 76%, and then of course where you're at after that is huge. There's potential there. Poor Tezzies. I like the fact that at least it has that different chart, you know, and poor chain linkies as well, if you like, as well, with this recent price action. But we're there. That's Link versus Bitcoin. It's the same deal, by the way, with that big wedge, the really between the two. And yeah, if we can see this, what are we at? 1360. Nice. We're up 30 cents from where we were when I was doing the TA earlier on. We're just above this zone, the sort of crucial line here for this one. We're not above the 236. 1372 is where the 236 is coming in at. Obviously, want to see just taking out that zone, then we can go on up and try those $14 again. Check out the volatility. If you're prepared to trade on an intraday basis and day trade, then there's great opportunity for you. In fact, I was talking to TradeSpotting about one of these earlier on. These sorts of opportunities that you have. Just jump down towards the 4-hour time frame and hide everything off here. So it's just a big old jobby. Hide my gizmo there and get another old indicator out. There's millions of indicators in the world, but you've got certain ones like, for instance, the VWAP. And if you're in the mood for trading, I'm in the mood for trading, day trading, then what you're wanting to see is regression to the mean of the VWAP. Let me just change the this is a classic regression to mean indicator thing. It's not an indicator, it was so much or whatever. This is calculated based on the average price paid during the day's trading or whatever. Maybe not 4 hour, 15 minute would be much better for this in terms of looking at it. The price will always stay in more or less the same place on this one because it's calculated given the day's price action. You can use other things as well, by the way, if you want to. You can add on like an anchored VWAP. Where's that? You know, so this calculates it differently, as you can see. Anchored VWAP's pretty cool to use as well. But if you're trading this intraday, then simply buying and selling with an expectation of regression towards the mean is fair enough. So there we'd be looking at this and saying, well, on this small term time frame with the 15-minute charts, I'm going to take a long off the back of this. I'm going to manage my risk going around these sorts of levels. This is how you do this, by the way. A lot of people don't know how to trade in any way at all, and I demonstrate in every episode numerous ways how to trade, right? For instance, I'm in the mood. I'm in the mood. Do, do, do. Here's an example of a sort of intraday VWAP trade based around this line here as having been important. So, you know, an hour ago, back when I started the stream off and we were below this line, you know, and then when we came up above it, you could have said, right, I'm going to take a move if we come anywhere near that line again, and I'm going to try and get it towards the VWAP. As an example. Therefore, this is the move that you made, and you can see right now it's already in open P&L. There you go, 0.065 or 0.05. So that's your open P&L. There is that 5 cents or whatever that is. Your the risk to reward ratio is 5 to 1 ish, right? There we go. There's 5 to 1 again. You know, which is more than you need. By the way, I always use 5 to 1 because that's more than you need when I'm talking about things. That means you only need to be right 20% of the time to not actually, you know, you can be wrong 8 times out of 10 and still break even if you're using a 5 to 1 risk reward ratio. And the expectation is that you would be able to go through a period of 20 trades, iteratively improve, and get to the point where you're able to say, well, of those 20 trades, I didn't lose 16 of them. You know, I lost less than 16 of those 20 trades, and I've broken even overall, etc., etc. That's how you trade. You don't really need a course on trading necessarily, although I do intend on making one. But there you go. Like that's how you trade, and that's an example of intraday trading, and that would be your profit taking target, and you'd be doing all right. And by the way, you can also do other things to enhance this overall, like, because obviously right now you're in profit, so then you'd be able to say, well, I'm going to actually stop out in profit if I wanted to. So I'm now looking at a trade which is like, if that's where I'm stopping out at there, then in terms of my risk to reward ratio from this point on, and it's a free trade, is 10 to 1, and you could take that out of your 20 trades. You say, I'm going to have 20 trades where I do it like this, and in between times, occasionally I'm going to have other trades where I have, you know, I stop it in profit. And either you stop it in profit, so it's not part of your 20 trades, or you've got a 10 to 1 trade, so it's not part of your 5 to 1 risk to reward ratio. Suddenly it's a 10 to 1, and you could discount that as well if you wanted to. Obviously, that's bending the rules, and you know, you have to do a little bit of the old cognitive dissonance to get away with that, but you can do it. I'm going to catch up with the recent chat there and see what everybody's chatting about. In Batas, Bitcoin goes further in Greece for sure. The Maldives for vacation from there. I guess you're talking about having. I'm going to scroll up a wee bit and see what you're saying. So I expect Teslas to hit all-time high in February. Cool, nice one. That's cool to have a bit of chat there. Purely hypothetical here, Rocky. 420 Bitcoin and 12,200 Ethereum. What's your first move? 420 Bitcoin and 12,1200 Ethereum. Did you get the numbers right way round there with that? Dragon Master, retire. There you go, retire. My first move, the Maldives, whatever. No, my first move would be to go into the Discord and chat with friends or whatever. I don't really know. My first move, I'm not sure I perfectly understand your question, to be honest with you, because $420 Bitcoin, we're so far away from that, and 12,200 Ethereum, we're so far away from that. I've got to assume that you've messed those two up. So say we went to 420 Ethereum and 12,200 Bitcoin, which is what you must be talking about. What's your first move? My first move is to open up the charts and do a bit of charting, right? I've said this a million times as one of the phrases. There's always time for technical analysis. There always is. You might open up the charts, and I'm sure if you've traded for a while, you've definitely, almost certainly, if you're a human being and you've traded for a while, if those two things are true about you, you've almost certainly experienced the feeling of opening up your laptop or your phone or your desktop computer and saying, oh look, the prices are right there, I need to buy it right now, and thinking that somehow there isn't time to do the technical analysis. So you're looking at the charts like, no, this is happening right now, I need to do it right now, right? I've proved on several occasions on the show and the live streams and everything else that that's just simply not the case, and that there is always time for technical analysis. So my answer to that would be I would do some technical analysis, right? So that's not necessarily the right answer. Instead, we have to make a couple of assumptions on that. So say I do the technical analysis and I'm looking at it and I'm seeing that there's a real strong momentum towards the downside. We're down there at 420. I'm going to look for a bounce area and then see if that bounce can take us up above a 236 Fibonacci between those 2 points and structurally take out our previous lower high on the way down the way. Okay, if we can do that, then I'll start to change my opinion about things. Otherwise, we're going to continue to go towards the downside, and that's the same for both of those parents, really. You know, that's what I would do. That's what I would look to. Just a couple of interesting things, you know, and I would also then look and see how are we structured wise with regards to divergences, and how are we going in terms of the moving averages. So say we saw some things like hidden bearish divergence, no bullish divergence. We've taken out the 50 simple period moving average in a golden cross conditions, but the 200 simple staring us in the face is just below us. We're going to go in and retest it, yada, you know, this sort of thing. Then, and that's what I'm thinking. First move or second move or fifth move by this stage might then be to open up a leverage trading platform and stick on a big fat short, right? Even though we've already cascaded so far down the way. Now, it could also be the case that my next move after that is to open up a leverage trading platform and stick on a big fat long. I mean, who knows, right? It really depends, and it has to go with context. From a sort of squint my eyes and look at it point of view, I would say that at 12,200 we're looking at a 50% drop off from the highs that we've had today, because we're up at 24k already today, remember that, and we're in a bull market as well. So if the context is that we've gone up even higher than 24,000 by that stage, we're looking at more than 50% being knocked off the price at that, you know, and I'd have to be realistic about things. I'd have to at that stage say that, of course, you know, that it's at that point that I need to stop out of my long, right? Whatever. Okay. I mean, it depends on so many. Okay, that's enough. There's too many moving parts to that thing to really say. I can't give you an answer. I'm too much of one of these overanalyze. I overanalyzed your question. I gave you a stupid answer. You wanted to ask a simple question, get a complicated answer. It's not what you wanted. Link is annoying me right now. I am still expecting $1,200 link by the end of this price cycle. The fundamentals and use cases are just too strong. Are you looking at this? Are you looking at Link with a price cycle in terms of like some sort of 4-year long basis for it? I don't know if I've got the history on this chart for it. I don't think I do. This one here, maybe I've got. I don't know how far back does this go. 19. Yeah, no, I don't have enough for that. What are you talking about in terms of cycles? There's cycles in everything in life. I don't disagree with that. It's just that some people are like well over the top when they talk about cycles, as if it isn't a coincidence that there's a 4-year presidential term in America, and that you've got, you know, as if there isn't a million layers to go in there and to force these cycles to be the issue, you know, as if there isn't, as if it's just some sort of weird coincidence or weird thing that happens in the world. Oh my god, it's a cycle and it's its own thing. No, it's not. It's influenced by the world, and that's why it's 4 years. I mean, these are the way people want it. Anyhow, if we want to get up to $1,200, I mean, you're talking massively far away. But then again, you know, we were down here at 36 cents, and a rise up to $21 from 36 cents in terms of movement up the way is 5,600%. Could we do another 5,600% before any major drawdowns afterwards? Yeah, we totally could. So yeah, you're sure it's good enough for you to think that, and it is a good coin, right? It is a good coin. I talk about it from the point of view of being able to provide the insurance needs that companies that operate inside the crypto space really need if they're going to go ahead and liquidate people, and then, you know, base that off of something. They need to have to be able to rely on something to say, look, our price data came from this area, and then for that to all feed back the way. If there was a problem there, then the Chainlink people get the oracles that were providing that data, those nodes get punished, they get some of their amount slashed. The same sort of thing with Ethereum, right? So it feeds back up the way, and it's essentially an insurance mechanism against faux pas in terms of fucking people over during your wash trading in the crypto sphere, so that you can say, when you've taken the money out of other people's pocket, that's still my money, baby. It's always going to be. Yeah, massive. That's the main use case for it in my mind. Really good one. That's a great answer to a slightly different question, said Thingy. Trace one earlier on. I wonder what it was. Spend on self and family. Enjoy life while trading to keep it going until self-driving flying cars. or the wheels come off. That's it. I like your answers, Dragon Master. Couldn't agree more, Trade Spotting. I'm here for the knowledge. I've done a pretty good job accumulating, but I don't know much about making smart moves. Yeah, the first thing to do when it comes to making smart moves is to say to yourself, you don't know much about making smart moves. I mean, having self-awareness and self-knowledge like that is a good thing to have, you know. And if you look at a lot of psychology books about trading, you'll find that often the people who represent the most ideal attitude to have when trading are new traders, right? It's only whenever you develop the bad habits that you become a shit trader, or develop the good habits which put you into that mindset you had when you first got involved with trading, that get you back to that point that you started off with that confidence. And you know, obviously it's a false confidence based without any substance, and it's unrealistic and all that at the start when you start trading. But it's closer to the mentality that you need to have to be a winner than it is after doing sort of 6 months of stupid mistakes and losing 50 grand, you know? And that's the sort of thing that, of course, takes time and effort. So the first way to get there is to acknowledge to yourself that you don't know the answers, you don't have the smart moves, and that you're looking to learn them, and then you just take your time about it. Patience, belief in yourself, self-reliance, and iteratively improving across time is really where it is. At flying car, but I would turn blah blah blah. I mean, I want a flying car. Rather give to my friends than half my family, says K-Doc. You become a millionaire, give to me, buddy. And that's all good. I'll appreciate that one. I'll be your friend. I'll be your friend. Yeah, I answered this sort of question, by the way, recently as well inside the Discord. Somebody asked me what would I do if I got like a whole massive amount of money and everything else. And one of the things that I would do would be to give to charity. I already am a charitable enough person, but I would do more of that, you know, as well. I would definitely do various other things like sort of, you know, that give money to family, certainly pay off everybody's debts that I love, you know. It's really, when people talk about friends and family, it's about, do you love them or do you not love them? And you know, you're totally entitled to love your friends if you want to, in platonic ways and all the rest of it. I've never had a problem saying to my friends, male or female, that I love them. So, and if that's true, then you'd give them money, right? I'll be a regular as much as possible, says Dragon Master. That's cool that you're going to be a regular here. Navin Ethan says, I'm more or less a total noob at trading, but I can get off some decent ones with the support info from the lads. Nice one. Listening to Rocky, Crown, TS, etc. Yep, absolutely. You're going to find some, you know, there are really good. I'm not a YouTube monogamist. I've said this a lot of times, and I guess I should probably reiterate it just for anybody who's new or joining us here today. I'm not a YouTube monogamist. I think that there's plenty of good people out there in the world to watch, and it's for loads of different reasons. You know, if you're looking for the friendliest guy in crypto, go watch Crypto. You know, he's a bit panicky sometimes in the way he talks or whatever, but he's definitely a really friendly guy. If you want to know more about programming and the sort of and all that sort of side of things, go watch Ivan on Tech. You know, if you want to know more about trading and stuff like that, then yeah, Crown, he's a good trader. He's a really good trader. He's good, you know. And you've got other people out there who are good traders as well. You've got Chart Champions, the guy Daniel. He's probably the biggest on the face of it asshole on YouTube. I think he's probably a really nice guy. I've said this a lot of times. If he ever watches me say that it's one of my videos and sees me saying that, I hope he gets that that you know, he says things that are, he's the type of guy who has no problem being cruel to be kind, if you know what I mean. But he's a really nice guy, and he's also a really effective trader. And I think that in terms of just straight up efficacy, you know, and adaptability to just, I'll take this trade based on this. It's not my pattern. I don't do this every single time, but this is the trade I'm doing here today because of this. And it being effective, he's really good. Then you've got like people like Mitch Ray, who I think probably plays more poker than he actually trades these days, to be perfectly honest with you. But that's cool because he's having a good life, and he's definitely a good trader, and he knows what he's talking about, and that's really useful. You know, he doesn't need to. I mean, he says things that are wrong, like we all do. I mean, I do it as well. I'm not going to say I'd hold my hands up. I'm a human being too, by the way. But like he says, like backtesting, when backtesting is what you do when you're testing a strategy against the market, and when the prices go down to test a level again, that's called a retest. But he calls it a backtest. You know, obviously the taxonomy is wrong there. Doesn't matter. Who cares? He's a really good trader. And equally, when I make these incorrect statements with taxonomy, it doesn't matter. You know. But also, I want to encourage you to know that it doesn't matter what the words are, or the shape, or how you line up your patterns, or how you line up everything. What it matters is that you develop a skill one core skill, and that skill is relying on yourself. Okay, and I'm here to do that with you, which obviously undermines somewhat the point in this YouTube channel. But and I think as well, a lot of long-term people who've watched along for a long time now, you know, don't necessarily feel the need to watch every episode, and that's fine as well, because that's just a sign of success. Okay, it means that it's working, it's good, and that's what I want for people. Somewhat philanthropic. I would be better off if I just said crap, just talked crap all the time. I'd be a much wealthier man if what I decided to do was focus exclusively on my own trading and then just talk crap onto YouTube. That would be quality of life and money wise much better for me. But yeah, I'm philanthropic, I suppose you could say, in that sense. AB Lopez, good to have you here. Cat's out the bag with the I love yous now, Rocky, lol. Learn to trade and sustain. That's right, Artie Pyle. That's why I'm asking. I've got quite the stash. I just don't know how to move it around intelligently. I've bought Christmas for numerous families in need, and I feel good doing it. I just need to learn to trade and sustain. Artie, you've come to the right place, and I really do appreciate you doing that. You know what? I'm not in this here to try and meet 1,000 good traders who already exist in the world. When I say to people that I believe in you, I thoroughly do. I believe in the likes of yourself, Artie, that you will become one of the 1,000 good traders that are around me. Nav and Ethan, yeah, I know that you're relatively new to trading, right? I know you are. But I know as well that you're an intelligent person, that you've come to the right place, that you've got a good sense of a good judgment skills there. So, you know, that's good. But these things take time, okay? And the more that you rush it, the slower you go. More haste, less pace, as my mum likes to say, or more haste, less paste, as I like to say, because I don't like things that don't rhyme. And yeah, you're better off taking your time with it. Give yourself. In fact, one of the first episodes. I mean, I remember back in February, I think, or was it January? It was January. So I'd only started the YouTube channel a few weeks. I only had like the likes of Peter Ewer and Etienne and my family and that signed up to be subscribers and a few random folk. Like 25 subscribers, and I remember sitting there and talking about how you need to less than 50 subscribers, for sure it was back then, how you should probably give yourself 12 years if you want to give yourself a amount of time to learn to trade. So say you're 30 right now, you should say to yourself, I want to be a good trader when I'm 42. That's what my target is. Along the way, I'll know, you know, it'll take me a few years to know how to know what I'm doing and everything else, and then another numerous years to get to the point where I don't make mistakes and whatever else. That's fine, and then some more years thereafter that, just so that you know that you've got that indelible confidence. And I'm not there yet either. I've not been trading enough to have got to that point yet. So I'm still on my way to that 12-year target. The reason I said that is because that's what Peter Brandt said. Peter Brandt, the man who was consistently profitable for something like 40 years consistently or whatever. The guy's mega old now. How long did it take him to become profitable? About 12 years of trading. He blew up numerous accounts. He was a shit trader for a long time. He learned under somebody else's coattails, and then because he'd hitched his horse to that guy's wagon, that's a verbatim quote from Peter Brandt, it took him about 4 years to unlearn the mistakes he'd learned from somebody else, which is one of the key tenets which I don't talk about often on the channel. But what I do talk about is how you need to rely on yourself, those are the things I talk about. The subtext there and the motivation for saying that is along the same lines as what Peter's saying. I know that if you rely on me personally, it might take you an additional 4 years, no matter how good or bad a trader I am personally. That's irrelevant, because the guy that Peter Brandt was learning from was really freaking good, right? But it might take you an additional number of years to just actually get back into being able to do your own thing. Which is why right from day one, for every single person that's watched this channel, I've said the number one skill that you can have as a trader is relying on yourself. And I'm here to help you get that confidence and to know the roadmap to being able to do that. And then after that, skill number 2, surround yourself with good traders. So hopefully that means that after the point that you become a good trader, you still come back to the channel, but, and you surround me with yourself, like to the you plural there, that all of you out there surround yourselves around me. That would be ideal, because then we have a community, and that means that none of you need to go out and set up your own YouTube channel where you don't get paid, where you make where you put in more than a full-time job's worth of work over a period of a year for like a sum total of $500. You don't have to go through that shite. Sign up this YouTube channel. Not worth it, by the way. If somebody came to me and says, is it a good idea to set up a technical analysis trading channel, I'd say, well, do you want to do good technical analysis? If they said yes, I'd say don't do it. I'd say, do you want to just put out crap there and just have a laugh? Go for it. Do you want right, whatever. Anyway, not worth it. But if you're part of this community, hopefully you get that same effect, for free, and that's cool, and that's what we're building here. So that's why I hope people really take that on board. That's why I'm here. I hear the others. I listen to you. I like your style. RT, you. That's really lovely to hear you say that. Thanks so much for that, by the way. Indeed, I'm a slow learner too, but it tends to stick better this way. Yeah, again, right? People who I've met people in life who've been very, very, very successful, and they're up there with some of the thickest people I've ever met. Okay, they are, right? I've done this. I've been to conferences where I've stood in entrepreneurial conferences, talking to hundreds and hundreds of people in a big auditorium and everything else, and the other people on the stage and whatever, mega successful people, and they're thick as fuck, and that makes no difference at all. I've met people who are so smart, so smart, failed every exam they ever did in their life, failed every single exam, and I would say, oh, he's one of the smarter. If I had to draw out a list of 20 people, I'd stick him on that list in terms of intelligence. Probably failed everything. I've met people that are the fastest learners in the world, and they're a complete waste. I've met people that are the slowest learners in the world, and they're the smart, and the actual, the speed that you learn at has got fuck all to do with how successful you'll ever be in life. Fuck all to do with it, and it's also got fuck all to do with how smart I would think that you are. So I've met people at university when I was doing my master's degree who I think, fuck, that person's thick. That's the thickest. That guy's thick. I don't want to be in a group with that guy. If that guy's in my group, I'm just going to just get chucked out of the group. I'll just say I hate white people. I hate white people, and then they'll say I can't be in a group with you because you're a racist, and I'd be like, oh, thank God, and get out of it, because despite the fact that they're in doing a fucking course at university level and all the rest of it, they're still thick. It really has got nothing to do with that. I believe in every single person who tunes into the channel. I genuinely believe that what the difference between somebody who's successful is and somebody who's not successful is not how quick your brain works, not how quickly you understand information, not any of these things, not any of them at all. It's got nothing to do with it. It's to do with application of it's to do with how hard you're willing to work, how consistently you're willing to do it. Are you going to put the time in? Whether that for you is 5 minutes or 5 hours makes no difference. Are you going to put that time in or not? I can talk about myself in this regard. I started learning Chinese, as you know, watching the channel like a month ago, and then I worked on it really hard for like a week. I learned loads of Chinese. I must have learned about 500 characters, and I could say a whole bunch of stuff, Then I just stopped doing it, and I've not done it for like 3 weeks now, and I feel kind of bad about that. And all my Duolingo things, stats have gone to pot, and that's application, right? If I'd kept doing it, I'd be really good at Chinese. If I was learning slower, right, but I'd done it consistently, I'd still be doing it now, and I'd be as good as I was then, but now, and it would be fresh, it'd be in my mind, I'd be better, and as well, the techniques you need to, whatever. There's another interesting thing, by the way. If you want to look into this sort of style of thinking about what it actually means to be successful and intelligent and all the rest of it, as well as if you look at stroke victims who've learned a foreign language, that actually they are able to remember at post-stroke the how to speak in the foreign language better than they could in the language that they learned growing up in whatever their indigenous language, okay, their vernacular. And why is that? Well, it's because the effort that you put in when you're doing that to learn that, it costs you so much more, right, to learn a language as an adult than it does to learn a language as a baby. It costs you so much more. Well, that cost is directly attributable to your success. So is it how quick you do it? No, it's not. It's about the consistency, the application, the hard work you put in. Those things far more important. Besides, I know you're not thick anyway, man. I've spoken to you a bunch of times. You're actually pretty smart. Anyway, so that's like, I don't care how fast or slow you learn. Besides, as well, it's a confidence issue. I've sat quietly for years. I've never made any move outside or buy or lower sell high. I know that I don't know enough to trust my judgment on the smart plays from day to day. Yeah, okay, so that's a good place to be in. I mean, you're quite cautious and prudent, and that's a good thing to do. You're in a good place there. It means that you can do this tentatively. Compared to the guy who's really confident about this sort of thing and then loses all their money, just prudence and caution, good attributes. Risk aversion, by the way, is like, I think, like anybody who, if you're, people talk about things about like risk aversion, your appetite for risk and all the rest of it. What's that got to do with trading? Risk is is day in, day out. I mean, it's got a lot to do with trading in terms that you buy and sell risk as a trader, right? But your ability, your willingness to take a risk, I mean, that's a given, you know, like that's a binary thing. You're in here, you're thinking about it, you're willing to do it. Being successful at it comes down the line, you know, and doing it consistently comes down the line. Why do I always go all in, says Demo. I can't answer that one. I guess because you're funny. Who orders tea at the Chinese? Tell you what, I don't order tea at the Chinese, but if you go to Wagamama, you get green tea for free with your meal. You might not even know that. That's actually quite common in Chinese and Japanese restaurants and stuff like that, is that you get tea for free. So if you want to drink, and by the way, green tea tastes so much better. If you ever drank green tea before and thought, it's kind of crap, eat some Asian food, like things like sesame seeds and soy sauce and chili and all the rest of it, and wasabi, all that crap. All that section of flavor makes green tea taste amazing. It's well better. It's better than anything you buy off the menu. It's free. So yeah, I order green tea when I'm getting it, I suppose, but I've got green tea at home. Rather an elephant than a scabby horse, as the saying goes. A serious answer, Demos, perhaps that you've not experienced the massive gains you can get from a small position well managed. There you go. That's a brilliant answer, TradeSpotting, by the way. Brilliant answer. Yes. Also, this concept of all in. If you were to use leverage as well, and I'm not recommending that you use leverage, but you can get that feeling of going all in. If you think, I've got $1,000 to spend here, you could use leverage at 10x with $100. Keep $900 safe. It's not touched. Trade with that $100 instead at 10x, and you've got $1,000. Then you're all in, right? You're all in, but you're not really all in. There's various different ways of doing it. I think that you probably that's saying, like, what we're seeing, what TradeSpotting said there is that that you can get massive gains from well managed small positions is good. Combine that with patience, understanding the trend, you know, stuff like that. That's good. I changed my portfolio to be well balanced and diversified, then changed my mind and go all in again on BTC. Yeah, like that served you fairly well over the last wee while. Let me just get up my Binance BTC pairing chart here, sort it by profits. So you can see here that the worst today in terms of Bitcoin is yo-yo. It's been doing crap there. Scroll on down the way, and it's an awful long way you need to go with these altcoins before you see anything green. Look at that. Now, how many green ones are there? 1, 2, 3, 4, 5, 6, 7. 7 coins have performed well against Bitcoin today. One of which happens to be Hotcoin. So of course it changes by 1 Satoshi, and it's gone up by 50%. So as soon as this goes down by 1 Satoshi, then of course that's a 0%. So you can discount that off there. REC is up by less than 1%. So, you know, who knows where that'll be by the end of the day. There's one that's just turned green. That's VET, by the way. Maybe I should look at these coins, because at least this is interesting in a market which is 90% red. What we're seeing is a few good performing coins. So maybe this is interesting. But yeah, so there's not very many that have done well. So you've obviously done fairly well by just going fuck it and ditching it all into Bitcoin. So good on you. Maybe the reason you go all in is because something in your head is telling you that this would be the case. Like maybe you have a way of discovering this information without fully articulating it to yourself. So instead of being able to say, well, because I noticed that this thing happened on these charts at this time, and that means I think that everything's going to go down and blah blah blah. Maybe you just saw it and didn't articulate it to yourself. You want to be able to operate in a way that you can articulate the reasons why you make any trade to yourself. And a really good way of doing that, by the way, and a tip for every single trader in the world, no matter what your experience level, is to set up a trading journal of some sorts. Now, I'm lucky in a sense that this year, while I've dedicated so much more of my time to doing this community building thing and trying to find 1,000 good traders out there, and starting by saying that I'd sooner take a nice person and teach them how to be a good trader than take a good trader and try and teach them how to be a nice person, right? That's a massive deal for me. And I'm finding that with this community as well, that everybody in it's really nice person suits me down to the ground. I don't care about your trading level yet. That'll sort itself out with time. I'd sooner take a good one. It's the whole classic thing that it's easier to teach an abseiler to clean windows than it is to teach a window cleaner to abseil. So who cleans windows outside buildings? Not professional window cleaners, but abseilers, that type of thing. So yeah, so that's what I want. Andre Eclohammer. I find it hard to read these names when it comes up on the screen in that text. I don't know why. Andre Eclohammer. All right, great, fantastic. Thank you so much for hitting that subscribe button. That's quality. I love to see. By the way, anybody who watches who looks at the channel an awful lot will have seen these subscribers coming through quite a bit. Even though I used to be a man. Oh, what a great advert! Remember to check that out after we're done here. By the way, Iron Brew. Everybody in the world loves Iron Brew. In fact, all of the Iron Brew adverts are pretty good. If you look at my channel, you'll see, if I just jump on over here, even though I used to be a man, maybe the advert isn't that good, but it was so good for me because when I saw it, it was just such a surprise, and I remember watching it on TV at the time and laughing my face off and stuff. I don't know. If you look at my channel over here, you'll see my subscriber numbers, 9,967. Wow, that's weird, Rocky. You were at 1,967 like the other day. In fact, since September, you've been above 1,900. What's going on there? Well, actually, what you'll find is that if I go look over here at my analytics, oh, by the way, big reveal for everybody. The amount of money I've made off of YouTube in the last 28 days currently stands at $80.11. That's it. You know, that's why I do this. I do it for the $80.11. Every day. If you took the amount of time that I spent making YouTube videos today and yesterday, and I worked in the shop that's down below my flat there on minimum wage, I'd have made more money doing that, you know, than doing this, which takes years of experience to get to. It's funny that, isn't it? Anyway, actually, no, that's not true because Dragon Master donated me $60. So there you go. That's not actually true. But it would be true normally. Subtitles, no. Subscribers. I want to show you my subscribers numbers. Now, obviously, what this means is that people are unsubscribing who are not, you know, wanting to be part of the crowd, and people are. So so I don't care about the numbers so much. I love seeing that you subscribed, Andre Clawhammer, because it means that you want to be here for this content, and that's what I want, more than just numbers that don't mean anything. How do I find out my subscriber numbers? I want to show you the chart because it sucks. It's interesting in the way that it sucks. How do I see it though? I'm not amazing at this. Subscribers there. Then let's go. So look at this. Like, I lost 3 subscribers on the 8th of December. I lost 2 on the 6th. I lost 1 on the day of the all-time high. I lost 2 on my birthday. You know, so I did that live stream on my birthday. You were all there and you watched it. I talked about how I was going to be opening up this birthday card from my mum that I still got sat here, all this sort of stuff, all this great crack, good fun. Lost 2 subscribers that day. You know, so 365 days. This subscriber performance now is back as bad as it was when I first started the channel. So, you know, go figure, right? Go figure. Anyway, this is interesting. I wanted to look at a couple of these different coins, like VET, which is flicking around here between positive and negative. Now, I know I looked at this recently, and we talked about the potential for a 50% upside gain on us. We're right in this liquidity zone. Okay, cool. So we're doing all right. We're below the VWAP line on the weekly chart, which kind of doesn't really make any sense. It literally doesn't make any sense to say that. We're all right. We're doing okay. Big range here, finding our feet at the edge of that zone. That's good to see that we're sticking within it. At this triangle, can we get a breakout? Well, we had a fake out here. Look at that. It's another fake out coming right in at our fake out target area. Is that, well, I probably said this. No, actually, no, this was our fake out. This was, actually, I can see. No, I can't see. I don't know what I said was the fake out target on this thing, but we did it anyway. I don't really like that triangle. Was it on linear that did it? Aha. Everybody in the world likes Iron Brew. I do. Me too. Everybody in the world likes Iron Brew. He does, she does, we does. Yeah, still waiting for this to resolve itself. I mean, what did we say? Like, we essentially said that trading it within this range is going to be what you want to do until you break outside of it. And as you can see from today's price action, that's essentially what's happened. It does look like the rest of the market that it wants to go up. This is an equal opportunity triangle, but the prior trend up to this point was up, tentatively speaking. Of course, we did have that downward trend there, but then we got a sort of head and shoulders in here, shoulder, head, whatever, neckline where that blue line is, pop towards the top side, full measure move off the back of that, consolidating ever since, coming in here with a bit of a twin peak pattern, having dropped down to give us the potential for a cup and handle type. Not really, but whatever. And yeah, if we move above this zone, then there's clear confidence that you'd be breaking, as well as breaking outside the liquidity. This is the type of thing that you want to see to get through a zone like this to get towards the top side. So yeah, that's a nice one against Bitcoin. This is against Bitcoin. So since this is against Bitcoin, let's look at VET USDT and see how well it must be doing, because it must be doing well, right? Must be doing well. Is it going to load up? This is VET USDT. Oh, this is VET USDT. Oh, that's why it's linking onto this list, because this is my Binance BTC list, and without realizing it, VET USDT is existed on that. I have to take that. I have to get rid of that. Sorry, guys. What about VET versus Bitcoin then? Since I thought I was looking at VET versus Bitcoin for a second there. Sorry about that. I made that list of things, but clearly I in the hundreds I had to put on here, I made a mistake. Oh shite. Excuse me. Sorry, excuse my language. As you can see, we've come down to here. Is this what I said was the fake out zone? Yeah, it was. So we've come down, we found support. Yeah, this has done the negative. That sucks. This is an Adam and Eve type thing. This is your neckline. This is the zone for it here. I'm somewhat skeptical about taking a move down, to short this in this market, right now, even in the face of this here, because this is the fake out territory that we kind of anticipated. We have got a lower low in terms of the wicks and whatnot, compared to there, but in terms of bodies, we've not closed out the day yet, so it's too soon to say. Are we doing it on the 4 hour though? I imagine we probably are. Yeah, so then we can look for divergences here out of interest. Fart, shite. So we've obviously done it without the divergence there so far in terms of these little points here. But of course, this is overall an uptrend, or sideways at this point. On the bigger time frames, it's overall this has been up, and we've not closed out. We have closed it on the 12 hour. So this is the point to look to, and it's not divergent. And if you want to think about this as being lower, was that lower? No, it was higher. That's just consolidating. I hate looking at divergence during consolidation periods. It strikes me as rather redundant overall, although it's not redundant, and there is a reason to do it, and that's why you'll see Crown doing it in almost every video that he puts out. You'll see the prices consolidating, and you'll say, "Oh, look, there's hidden bearish divergence." You're thinking, "Hey, how does that work?" There is a point in doing it. It works. It's just not my cup of tea. Or how I define it, right? So it's not how I define it. I look for it during trending moves. Anyway, we've come down here. It's not so great, but that's obviously a result of Bitcoin. Yeah, whatever. I'm still pretty positive about this. This is because Bitcoin's had such ridiculous price action recently that none of these charts make any sense. And instead, this parallel channel that I've drawn on doesn't make any sense anyway. Busting out of it, these zones doesn't touch properly here, doesn't touch properly there. Was it on log it I did it? No, the chart doesn't even change when I flick between them. No, there's nothing to be said here about this chart other than the fact that the Bitcoin USD pairing must be going crazy at the minute, and sure it is. Whereas these ones actually are positive against Bitcoin. Litecoin, for instance. So if you're on BitMexico right now, for instance, you might be trading this. Oh, look at that consolidation type pattern that you've got on the go here. I mean, like you've got to be aware if you are trading this that until such times as we've really properly broken that line there, that we're not necessarily doing anything super fantastic, Excuse my German. Got to be aware of that, at the minute, trending towards the top side. Is there hidden bullish divergence? Tell me there's hidden bullish divergence. There is in the RSI, but hidden bullish divergence. So that's good. See what I mean about how you can do this? Like, I just said it. I just did it. I just exampled it. So there you go. Like, that's why. you could obviously make the case then as well that this isn't drawn in right, and it's more of one of these wedges, in which case that's a positive pattern because of these lows. 1, 2, 3 there in that sense. Hidden bullish divergence as we come in for this point. Touched off the top end and the bottom end during this range on this particular bit of chart. And now looking towards whether or not we can break out here on our third push through. Is that possible? It is. What is this again? Litecoin. In which case, if we break out towards the top side, we're looking in at sort of 0.005. So 5 milli bitcoins per Litecoin, as I call it. Been a while since we've been up at those levels. Again, though, it's the dollar pairing that's leading the way for these things. When it comes to the proper shit coins, there's a chance that it's the Bitcoin ones doing it. So this VIA thing, for instance, there's a chance that it's traded on Binance more than anywhere else, as so many things that trade on Binance are. And then there's a chance that it's traded on the Bitcoin pair more than on the other ones, as so many things are, blah, blah, blah. There's a chance. What a crap looking chart though. There's just like no liquidity in this market, obviously. Like no candles, big moves, no candle, big moves, nothing, move. There's no liquidity here. There's nothing to really give you that support. So if we're seeing that this is actually coming in now and a bit more, the volume has only just started. Let's go back to the history of it. We've had volume recently and none, then some here and none, then some here, then none, essentially. And that's the way this stupid coin works. So if we can see this thing sustain itself and a bit more come in, there could be a good chance of having a rise up the way and continuing on and benefiting from the move. But this is there's almost no point in looking at these things, which is why you'll find that very few people really want to look at them if they're like in terms of things like Crown, for instance. Another thing to talk about Crown, I don't want to make this like a Crown episode, is that during the bear markets periods of 2017, 2018, he would look at coins and say, and occasionally look at them versus Bitcoin, quite a lot in fact, and then he evolved away from that and started saying that he would, in a bull market, would prefer to look at the coins versus Bitcoin because it's more Bitcoin that you want to accumulate, right, etc. And I agree with the general idea that he's putting forth there. It's just that these are such bullshit markets that you can't really tell anything about them really overall, and you don't know if it's all fake or not, and the volume and where it's coming from and everything else, because there just isn't any, as you can see. There isn't any. But if we can see things going on there, that'd be quite cool. This is an obviously relatively unknown coin, and it's have a really, really strong trend towards the top side. That's pretty good. VWAP showing us in terms of the 1 hour time frame that is, finding its feet as support here. Easy to make trades off the back of this. I mean, like, again, as an example, if you're just thought, I'll take a trade off the VWAP, you'll often see this in terms of technical analysis out there. I very rarely talk about it, but there you go. It's because I talk about enough things as it is. Thanks very much. But you'd be able to manage your trades in this sort of a way. You can see here's a 5-to-1 trade that you would have already have cashed out on off the back of that, if you were kind of thinking like, I'm going to be really tight to the VWAP, but I'm also not massively looking to take a massive amounts of profit. I just want to do this several times throughout the day. I'm going to ride it up, take the majority off your position. If it comes back down again, you start looking like you think it might go down the way as it looks just now, then you just take the rest of your profit. And you could have done that several times. Several times. Obviously, you get some failures, and on the assumption that you're going long on this market right now. I mean, these are failed shorts in a sense, and the wicks going above them towards the top side. But you can see here that there's very few wicks that are really extending far down below it. So it's all towards the top side. So you can see how this makes it easy to trade. And this might make it into your arsenal, this type of technique, if what you want to do is hodl in terms of the long-term perspective, and then trade in terms of like 15-minute, 5-minute charts or whatever. If you're not interested in swing trading, you're just looking to be a scalper / intraday trader, then there you go. There you go. I don't think it really takes much more explaining than what I just said there now. Now I could talk about this for an hour and you'd know all about it. But who could be arsed with that, right? Right. Yeah, I'm right. Cool. Jumping back over towards Bitcoin. Put on the 15-minute chart, have a wee chit chat with everybody in the group, and then kind of tune out, because what are we talking here time wise? It's 11:11. Oh, on the 11th minute of the 11th day, blah blah blah. The war ended. You got to wonder though, because it was Europe was 1 hour earlier, so it was actually 11 minutes past 12, wasn't it? Churchill, you fat bastard. So, night everyone, he says, Artie Pyle. Night, man, good to have you here. Dragon Master says, good night all. Good night, man. Great to have you here. Thanks so much for tuning in. And that's cool because we're obviously kind of coming towards the end of the audience type feeling. Whatever, people are looking to tune out. What's up with KDoc having all his messages deleted? Was that Nightbot? Did Nightbot attack KDoc somehow? What happened to KDoc? Even Nightbot isn't happy, lol. KDoc, questionable judgment. Stop spamming emotes. Warning. Oh, I wonder what it was. I missed it. And they've all been removed now. That's sad. Lols to all of that. I have to get up really early. I'm out. Good evening all. Good evening, Tass. That's cool. So we can see that everybody's kind of bleeding away off now, and we can kind of wrap things up then here, and it's a natural denouement to the stream. Thanks very much then to everybody that's tuned in. So I'll give it a few thank yous here as well as we start off, right? I'll just kind of scroll up and get a couple of ideas of people who maybe haven't been mentioned by me so far very much. Damo, by the way, great to have you here during the stream. Really do appreciate it. Damo's a great guy. If anybody's interested, he's in the Damo knows an awful lot about chain analysis and that sort of thing. He's really good with all that sort of stuff. He's in the Discord. You can fire him a message at some point. Do it in public because nobody likes a private message, eh? Nobody likes that crap. But say in there in the Discord, hey, what do you think about this or whatever? I'm sure he'll talk to you. He's a great guy. Oompa Tass, Tass. I actually like the saying Oompa Tass. If everybody in the clan Oompa, Tass has got the best name. Simple dollar cost averaging. There you go. There's some tip for you. Worth bearing in mind, Emmanuel, when he said we are all agents of our own deception, so to do it well is not an easy task. That's very true. We are definitely all agents of our own deception. I like sleep like a baby when I'm 100% in BTC. Can't sleep when I'm 100% in cover. Lol. Too true. Yeah, man. Yeah. Beanbag beside your chair so you can sleep. That's a good idea. How much too much Bitcoin to own allocation wise? I mean, it's hard. You're talking just in terms of cryptocurrencies in general, aren't you, Damo? You're not like saying how much is too much to own, compared to when you add up the value of all the food in your fridge and the bills you're paying and the wedding ring your wife wears and the car you drive to work. I mean, how much Bitcoin is too much to own compared to your life in general? Well, 100% is too much to own because man, a fella's got to live, fella's got to eat. But then, how much is too much to own in terms of your allocation? It's hard to say. I mean, it's. I understand when people talk about things like how. I mean, we've seen it here with the markets today. Recently, 100% has not been too much in terms of the markets recently. That's just the way that it is. We can see that on the charts. But how much is too much? Because you're talking about only people who talk about this are talking about it from a hodling perspective. I mean, that's the only perspective that's possible to make that make sense in. So I would say that too much to own would be you'd be exposing yourself 100% to one asset. But the point is really, can you find assets which are uncorrelated or somewhat? I've got a somewhat different distribution. So in terms of things like how much should you own? You should own it. You should probably think about, now not financial advice again for the YouTube gods, but you should probably think about certain things like how we've seen certain charts operate in the past. So how much Litecoin is too much to own relative to how much Bitcoin you own? Let me just stick this on the weekly chart so you can get a quick snapshot of how much of it. Here you go. Historically speaking, owning any Litecoin since 2019 June, every penny you spent on Litecoin since June 2019 instead of Bitcoin was a bad decision, right? For instance, okay, just to put these things into context, because this is kind of what you're getting at there. How much Cardano or Algo compared to Bitcoin? Is it a good idea to own? Meh. All-time lows, not good. How much Link compared to Bitcoin? Is it a good idea to own? Well, I mean, suddenly you're looking at a very, very different picture, are you not? So find these things. I've given you one example. Fine, and I already know that I already know that you personally know this. This is kind of just a message to everybody, not personally to you. But find these things, and then you've got assets which are which have got an indirect are uncorrelated. So when one goes up, maybe the other one goes down. When one goes down, maybe the other one goes up, etc. Having all your money in Bitcoin and then choosing something else like Bitcoin Cash in terms of diversifying isn't going to work, you know. In which case, you would have probably, statistically speaking, have been better off having all your money in Bitcoin in the long-term perspective. You know, given like on any year to the next, it's about finding the assets which actually can appreciate against Bitcoin in the longer term, or indeed if you're looking at something trending for a while. But that's slightly different to hodling, slightly different. So there's that sort of a thing to look to. I mean, XRP versus Bitcoin. How much XRP was the right amount of XRP to own at any given stage? Well, given over here in January 2018, if you spent $100 on XRP, it would have cost you an awful lot. Well, let's not talk about that. Let's talk about over here in December 2018 when we saw the end of the real disgusting bearishness with Bitcoin. Yeah, ever since that day, really shite decision. Now, you can make little arguments and say, but if I'd bought some over there in the start of November, compared to now, I'd be up 159%. It's like, yeah, sure you would. But this is a trader who could do this. A hodler can't do that. It's just not compatible, because they hodled it from here and they're already down however many percent. And what they're looking at is saying, well, I'm down 83% now, and then it goes up and they're like, oh, I'm down 60%, and then they don't sell because they're hoping that it goes up the way eventually, you know. So it just doesn't work. You've got to think about your mindset and all that sort of stuff. Artie Pyle, you did well being frugal as hell. Dragon Master, Spain has some great places also. Good, you're totally correct about that. Scrolling down to the chat then to kind of catch up with the most recent stuff before we kind of say cheerio to everybody and all that. Even Nightbot wasn't happy. Yeah, that's me caught up again. The crown is unified. You're right, Impa, but it's the Scottish line that absorbed the other, with James V of Scotland becoming James I of England. Well, you know. Yep. So it's the in terms of if Scotland gets independence, who gets to keep the royal family? You know, in terms of the crown, it really should be Scotland that gets to keep it if it has to go one way or the other. In terms of the actual family themselves, you're more than welcome to them. We don't really need any more Nazi sympathizers in this country as it is. Thank you very much. And we also don't need any incest or pedophiles. Not pointing any fingers anywhere at all, especially not at you, Prince Andrew, you pedophile. Allegedly, I don't know, might not be. I mean, this is just purely alleged. I've got absolutely no idea if he is or not. It's not me, I wouldn't know. It's just a bit, you know, Jeffrey Epstein says he was, right? So there is that. I think he did, maybe not. I don't know. Anyway, disregard everything I say because all of that was satirical and definitely not. You know, there's no defamation here. I didn't defame anybody here at all. At all. All I'm saying is that if you're English and you want to keep the royal family, you can have Prince Andrew. We'll chuck in the other. You can keep them up. Keep them. It's all good, right? It's all good. But we want the crown back, and we'll go and find some stewards to stick on it, right? And this is sober Rocky. Yeah, I know. Yeah. Right, cool. Okay, so the last bits of chats is that we've had is that KDoc, the FBI agent in your phone, is going to pass on your details. We're talking about this stuff. Rocky KDoc was wondering about your experience of apps for trading UK stocks. My experience for apps for trading UK stocks is that you could look to, for example, none of these are advice or whatever. If you're looking to just do CFDs, you don't mind that the company is a bit scammy, quite untrustworthy, will delete your account if you do scalping, which they call illegal, and all that. Then you can by all means use Plus 500. Very easy to use app, very easy, and all that. And you deposit money easily, trade with it easily, open and close positions very easily, all that sort of stuff. So there's that. Although of course, maybe you don't want to support an Israeli scam. Maybe you don't, right? Maybe you do, right? I've got no problem with it being from Israel myself, and that I've got no problem with it. And I also don't really have much of a problem with it being a scam either. I have it and I use it occasionally, not much. Another one is Robinhood. It's like Robinhood, but for the UK. I'm pretty sure. I think maybe the Robinhood itself has moved over to the UK now as well. Not 100% sure on whether or not Robinhood's available. I know that like there was like Robinhood, and I think that was like a cryptocurrency Robinhood style one as well. There's other ones as well. That freetrade.io would probably be my current recommendation, which is really like the Robinhood for the UK in terms of that sort of thing. So if you're looking for that would maybe be it in terms of my sort of 3-2-1 recommendation on it. What else is there? I mean, there's other ones like there's other places that you can do it. There's other places you can do it. And by the way, as well, if you are in the UK, don't forget that there's always the option of spread betting. Interactive brokers, interactive brokers. There you go. Really good. They're actually, sorry. If you want interactive brokers, good. Yeah, I mean, like these guys, like there's a lot of good choice out there. But if you're looking for the sort of the things that you feel like you're in with the crowd in terms of America with using Robinhood and all the rest of it, then free trade would be your idea. If you're looking for a company that's like regulated and has existed for more than 10 years and is trusted by thousands of high wealth individuals, interactive brokers are a good one. It just depends on what you're looking for. Robinhood, Robinhood free trade, isn't it called freetrade.io? I know that invest commission free. Investing in one of the best ways to grow your savings. Make it simple, beautiful, and free. Download the app and sign in seconds. I mean, obviously, as well, I would love it if there is whatchamacallit for this guy, a referral code. So if you do go ahead and use it and you find a referral code thing, fire me a message so I can figure one out and give it to you or whatever. But there's these sorts of ideas if you're looking for something that's like, an app that where they think it's important on their website to have JavaScript enabled so that their image moves as you move your mouse left and right, and a background which goes from different colors. And if you think that these things are important, and let's face it, they kind of are, right? They kind of are. Then you've got that's that side of the coin, and then you've got you've got this type of thing as your other end of the scale, of course, as well, in terms of if you're just looking for a company that's clearly trying to target sort of mid-level professionals in UK working environments, white collar people above the age of 40, right? That's what you're looking for. Then there's this one here, and of course in terms of commissions, then what you're looking for here is that they have actual commissions versus the sort of the commission free, technically commission free, but you're looking at spreads and stuff like that. So it really comes to I would look into the cheers for that, Kevin. I would look into a bunch of these different. I would look into them, and it depends on your use case. Obviously, when you're looking at fixed rate pricing for commissions per share or a set percent of trade value, if you're looking for that, you're going to have to bear these things in mind in terms of how you're going to trade. Commissions when it comes to intraday trading or scalping, for instance, actually for scalping, when you're looking at commissions for scalping, is a bit of a bitch. Unless you're trading with volume, of course, and you're looking at a set fee. I think these guys, of course, do it like it's a commission per share or as a set percent of trade value. What's the difference there? Really, if you're looking at commission per share or commission per trade value, that's two ways of saying the same thing. There are other ones out there that give you fixed fee for a round trip, regardless of the amount that you're getting, I think, as well. I don't know them all off the top of my head, mate, to be honest with you, and that's why it's kind of easy to kind of go along the lines of this sort of thing, and you also, by the way, grow further with your investing 3% interest on cash limit orders, your stocks and RSI, and access more stocks with your free trade plus membership, all for $9.99 a month. So if, for instance, you're looking at something and you're saying that $9.99 120 quid, So 120 quid. How much money would you need to have in your account in terms of 3% interest on cash? How much cash would you need to get this $9.99 month membership and it not cost you anything? That's another consideration that you might have. You might be worth looking into as well. Okay, I can't be bothered doing the maths on that, but somebody who's good at maths will be able to work out what $9.99 a month, how much money you need to have in your account, 3%, yada yada. But you get the point, right? Get away. Oops, come back. Alert on link crossing this price. Okay, I must have set that up at some point. I think I set that up during the live stream yesterday by accident. So what's it actually doing? Is it just ditched down versus Bitcoin? Yeah, it has. And oh no, it's not. It's come back up. Where was it before? Let me just see. I think it's just the body of it's just come back up, right? Or not? What is that? Whatever. This meant something to me, I think, maybe whenever I did it by accident. I'm really not sure what it could have possibly been referring to. Maybe this is an old alert as well. I don't know. Whatever. I'm not going to waste time on that. Cheers, pal, says K-Doc. You're welcome, buddy. You're always welcome. When are you raffling off the PS5, Rocky? Do you reckon that's a good idea? Should I do something like that? I don't know if that's really a good idea, to be honest with you, because I've said this before. There's something going on here with this channel that we have people joining up to subscribing all the time, but the number isn't growing. I see it all the time, getting subscribers all the time, and I'm also getting an equal number of people unsubscribing, so that my net subscriber number is really low, the lowest it's been all year. And it really took a big decline after I started doing things like a Satoshi giveaway on the channel and stuff like that. I don't know how good that necessarily actually is for the audience, because it might undermine my attempt to be oh, I really messed this chart up, didn't I? To be fair. What is it? Fair? Not to be fair. No, to be might undermine my sort of the chat that I have about whether or not you, for fuck's sake, whether or not you need to, whether what I'm trying to get out of YouTube or whatever. I don't want to have subscribers for subscribers' sake. You raffle away a PlayStation, you give away a few million bitcoins or whatever you do, you give away a prize, 100 quid or 500 quid or whatever, and you get people turning up just for that, and I don't really care about them at all. So thank goodness for that. Right. What did you say there, TradeSpotting? Looks like bullish divergence on the DMI there. We're coming in for these lows in this little period time here. I don't know if I was on the same time frame at that point. Definitely not the weekly. Look at the 4-hour time frame here. These lows. No, this is going on towards the top side. That's not bullishly divergent in terms of the DMI on the 4-hour. 24-hour? No. TradeSpawn would know this, but this is the negative line, the pink line here, and it's going towards the top side. So when it goes towards the top side and the price goes towards the downside, if you were looking at it on the RSI, you'd be like, that's divergent, but it's the DMI, and what you want to see is this just shows you how strong it is. So the higher this line is, the stronger it is, which means that this being above the previous low here means that it's not divergent. It was on the top of the charts there, so I can see. Oh, the 15 minutes on the other hand was maybe what you were looking at when you said it. Yeah, there's bullish divergence on the 50-minute DMI as we see these things coalescing. If we can see the price continue towards the top side, you also have the handy position of the ADX being up here. So a nice flip around in terms of the trend could position you with a strength of trend in terms of the ADX to get a nice follow through towards the top side. That'd be quite nice. Said the word nice too many times there. What about the RSI here in terms of these lows? Didn't come in with any divergence really. What about this area here? Is there hidden bullish divergence up there? There isn't. What about just here? Nah. So while that isn't actually technically, it's not really actually divergent because this isn't lower than it is over here. So I take that back. There isn't that divergence. But should we see the prices go down, any more there, then there could be. Don't even know why I've got this chart up. Why I've got this chart up? Shouldn't have this chart up. I'm going back over to the Bitcoin pricing. 22,724. So we're seeing this negativity. Okay, so the initial chat that we had at the start of the day about whether or not you could see the start of the show here, but whether or not those broader patterns that I drew around the price towards the upside could be seeing that we have a potential pullback at the minute has evidently been accurate so far with regards to these small term timeframes. Essentially, during the show here, we can see that we've come back down to the VWAP again, not busted below it, but this is actually what I was looking in terms of the hourly time frame here. I was looking like we could push down below it. Of course, this will be the same on all the time frames and all the rest of it, but we're coming up to, we've got half an hour left on this one. A nice hour at least closing below it would be interesting. Going back the way, when was the last time we did anything like that? Well, the prices came up all the way up towards 19,533 on the 15th of December, and they dropped down all the way down to 19,000 thereafter. A $500 move when we went down below it, but we didn't get any follow through. So first off, you'd be looking for it to close below, and then you'd be looking for it to get follow through. Ideally follow through that takes out, say, this low over here at 22,000. If we were to be trading off the back of this thing, you can see here again, like that the last time we had any sort of negative movements with regards to this was during the period between the 6th of December and the 9th of December, when we had a little bit of downward price action with relationship to the RSI, to the VWAP here. There's a little period there between the 4th and 5th as well, I suppose, but we can see that we're staying above it. By the way, volume weighted average price is what the VWAP is. Volume weighted average price. And what it does is it takes the price. It starts off by taking the price from the start of the day here. So every day it comes in and it just puts the VWAP line at where the price was, the opening price, essentially, I think, wasn't it? I think it's the opening price, right? And then throughout the day, what you're looking at is it takes the calculations from all the different prices that it was traded at and gives you like an average price for during that day based on where the most volume happened at. Is an interesting enough one. For anybody, leave the fucking site. Volume weighted average profile, VWAP is, or VWAP if you want to call it that, is a trading benchmark used by people that averages price throughout the day based on volume and price, is what I was talking about. It's important because it provides traders, key takeaways: average price, peers single line, intraday, 1 minute, 50 minutes, so on, similar to how a moving average looks. However, of course, it's not a moving average. Retail professional traders use VWAP as part of their thingy. You've still not said anything here yet. I came over here to find the insights. I've already said all of this. Adding VWAP to the chart calculations for you. So you get your high, you get your lows, and low, and you get your close, and then you divide it by 3. That's what the calculation means when you're on, I've lost my tab. Oh no, I'm not, I've got it back. When you go here and you bring up the options and it says inputs and it's HLC3, that's what that means. That'll do in terms of my explanations for that. I'm not going to go into too much detail on it. I've heard some anyway, yeah, let me know what you think about that, about the thing. Been trying to buy a PS5 for months, sitting in a PS5 queue on the website right now. Really? Is it that bad? I didn't know that. I didn't realize that. If I'd realized that, then maybe I'd be more inclined to raffle one off. But then, of course, what one? The one that I get myself in a queue to buy or whatever. VWAP for day trading, stocks fantastic. For BTC, slightly less fantastic. It is. It's fantastic. It is. Yeah. And again, all these things come down to that same chat where some people try to be dismissive and some people try to base their whole life around it. But it's just an interesting commentary on the fact that you've got this self-fulfilling prophecy aspect about these things, and of course, that's what we see quite a lot. In in the world. Yeah, not gamed since PlayStation 2. I find it really difficult to get back into it. I've got this PC here, which is obviously good enough to use to do games on, and I think I will play some games. There's a new heist out in Casino on the Grand Theft Auto 5 online that I think I might play. I'm so not like that bothered about games anymore. It's hard to be bothered about them much when you've got the greatest game of all, right? I'm joking, but it's true. It is hard to be bothered about games whenever you lead what is rather like, you know, if you worked in the pie factory and 9 to 5 you were just putting lids on top of Scotch pies, and a new pie comes along and you take a wee circle of pastry and you pop it on top of the Scotch pie, and a new one comes along, you pop your pastry on top of the and a new one comes along, you put pastry on top of the you'd be gagging to get home, steal a car from somebody on Grand Theft Auto Online and fire down some jets and everything else. You do this sort of thing throughout the day, you get to the end of the day, you think about things like having a bath and reading a book and going to sleep. At least in my experience. But yeah, I'm thinking about getting back into the old gaming again a little bit, just a little bit. Not particularly bothered. Also, you know, I'm more inclined to sit on eBay looking at microphones and stuff like that, you know, without the real intention of actually buying one, or reading reviews on websites. Pie Factory, heart. And now I want a Greg's Pie. I tell you, I know. I admit. I telepathized that over to you there, because I actually was just thinking there about 15 minutes ago about how I could really do with a Scotch pie. Scotch pie would be nice. I had an episode on one of my technical analysis videos on YouTube opens up with me talking about Scotch pies. Let me just see videos. Go back. We gotta go back. Kate, we gotta go back. I could bring up my video. I'll try and do it, then I'll tune it. 50 videos on per page. Put 50 videos on per page. Keep clicking right, and you can see there's some videos from October. You know, like, if I'd been working in the Greg's Pie Factory instead of doing this, because I don't trade when I'm doing videos as well, because so theoretically I could still be trading just as much as or whatever if I took the exact amount of hours I did to do all of this, worked in the Greg's Pie Factory, then came home, I'd have net much more money. So obviously the reason for me doing this has got nothing to do with money. It hasn't had all year. I wouldn't have still kept doing it if it was about the money. But I do think that money in this capitalist world that we live in is a direct correlation to success, right, and quality and value and everything else. So when people come along and they see people donating to the stream, then what they're going to get from that is this impression that this is something worth watching. I honestly think that a lot of people watch Mitch Ray because they tune in, they see that people are donating money, and they think this must be the place, right? Now I've got that song stuck in my head. God, I'll not sing it so none of you get it stuck in your head as well, but I'll just say the name. This Must Be the Place, and the band Talking Heads. That's one to go and look at later on. I'm trying to get back all the way towards sort of January. As you can see, hundreds and hundreds of videos, hundreds and hundreds and hundreds of fracking videos. I made them all unlisted, by the way, but they're still there. I think I'll probably make them all public again. That might be affecting my subscriber numbers, I don't know. April. Eventually I'll get back towards February or January. Oh, I actually bought some Beyond Meat, made a little something from them, vegan pound. Yeah, you know what, by the way, Beyond Meat burgers and all the rest of it, and it's not like Beyond Meat have got they've got the IPO, they've got the branding, they've got the stock trading. What's Beyond Meat's thing again, by the way? We look at Beyond Meat. Interesting. Traded it a bit here, didn't trade it ever again. And then stopped thinking about it. But it would have been nice to have traded it up the way there. Beyond Meat though, what are we looking at here? 24-hour chart. VWAP line in the background there for anybody just tuning in at the minute is completely useless. Obviously, we've just filled in that gap. Oh, it's always about how you react once you've got to a gap, by the way. So anybody that's trading this at the minute should be aware. Well, for one, they should be aware that the market's closed and that it's not actually trading. But they should be aware that we filled the gap here at the end of the day. It'll be interesting to see how market's open for this one tomorrow. Beyond Meat was a good one for trading for a wee while. It still is. You can still see. I mean, you can look at this chart, right? This is another chart which is fairly attractive for trading where you're sat here at the minute looking at this sort of thing. Potential, of course, there. Retest of the 200 simple. It's the first time since it came into existence at the price, came back up to retest it, went down, gapped up above it, well, gapped from it up above, then we came back down, retested it since in order to make that gap, and then found our way up towards the top side. You know, there's a potentially good setup for us here, providing that we don't feel the need to come in and fill in this gap over here on the price and here. That would be your third retest, or your second retest of the 200. That would be my entry price for this one. I'd probably hold out, I'd probably employ patience with this one, look to get in at around about this level. I'll just stick a measured position on here, so that if I do ever come back in this in the future on the show, we can see how this would have worked out had I bothered doing it. Looking for like 5 to 1 as a rough idea. That'd be interesting, wouldn't it? As a trade idea. Don't want to be taking out our previous lows in terms of the body closes and whatever. This volume wick after the gap, we can ignore that in a sense. This gives us an easy enough risk management point of view if the prices come down here. Now, of course, as well, I'd also be tempted to FOMO into this like everybody else would be and all the rest of it at certain times and blah, blah, blah. But I'm only looking at this on the 24-hour time frame, and I'm talking about this from a broad perspective without the intention of actually trading this thing ever, by the way. But it's interesting like that. Feels like USD is going to plummet against the euro. Do you think so? I mean, this is interesting. Again, by the way, to anybody that's tuning in, I don't do this normally. I don't look at stocks normally on the show. I look at these things in my life, and I never really look much at Forex, by the way, but as you can tell from my favorites list here, that I very much do look at Forex, and of course I trade Forex, of course I do. Oh fuck, I just changed the order of it again. I didn't want to do that. God, I spent time making this all in the order that I wanted it, and I just changed it. That's so annoying. Why did I do that? I do that from time to time. Can I undo it? No, I can't. That's so annoying. Where are we? Euro USD. Whoa, we're high. I guess I see what you're saying there. You mean as in because the USD is going to get more value? Yeah, I mean I've been looking at this for a while. I would say so. The trend's your friend, though, mate. If you're are you trading this, by the way, at the minute? Or are you just thinking about taking a holiday over to Europe or something like that? You know, or whatever. Are you? I wonder. This trend is your friend. Okay, the dollar's been shite for ages. Let's just put some context on that. Here is, I've clicked in the wrong place because I changed the order of my list. Where the hell is USD JPY? There it is there. A lot of people trade JPY USD for some reason. When I say a lot, I mean the vast minority. They totally don't. It's not a big thing. This failed, as you can tell. I was charting this recently. This failed, and it failed in the way that was easily anticipable. We came in here putting a lower low. The way that this is shaping up, it wouldn't be surprised it's divergent. Yeah, bullish divergence there on that low. Previous low compared to its previous low was not bullishly divergent. At this point here in this one, we did get bullish divergence. A move came in here as well with this one that moved us up towards, you know, a nice 2% move. By the way, Forex 2% is quite big. You know, just so you know, for anybody that's casual viewer, Damo probably knows this. This obviously then has got this, this potential structure here of this, you know, and euro dollar then, like we said earlier on, one of the most well traded pairs in the world. And by the way, look at the volume down here, just so you know, like this is what the volume looks like on a Forex chart. Okay, volume on a Forex chart. And it's not the only one. Look at all the volume, all the forex charts here. When you're looking at volume, look at this. Look at this. So when you talk about big volume coming in at lows here, etc., you can see it. It's real. This is a thing. This is actually a thing, by the way. So despite the fact that we talk about this in terms of crypto land, let me just draw on some context. Now, this is obviously where the most volume exists. This is what you've got in terms of Bitcoin, right? And that's where the most is going to be. Looking at other coins like Band, you got this inconsistency, right? You got the inconsistency, and then and as well you've got the huge drop-offs where there just isn't any. Obviously this is all done on a relative scale as well, so the fact that there's this standard deviation is what makes that interest is the interesting thing about it. Over there on forex land, just bring things back into context for you again. This is what volume's supposed to look like. We're a million miles away still. So when people say we're early in crypto, you very much are. You can tell just in terms of the sheer liquidity of these things that there just isn't any. Anyway, moving towards the top side, bearishly divergent. Yes, bearish divergence here. So we're seeing a nice bit of bearish divergence. Looking at certain correlation type things, like at the while we were coming in here on the way up the way here, we were doing it without divergence. That would have been hidden bearish divergence if you were looking at it that way. Actually, but there's between these two highs here, 1, 2 high here, and we moved up without the divergence on the DMI, a little bit on the MACD. We've actually had MACD divergence this whole time, because this has been anticipating. And you can see the triangle that's here on the MACD. I don't use the MACD signal line, as regulars know, and all the rest of it. You can see this concept is obviously quite clear in the go here, with regards to the tightening nature of this. So you'd obviously expect to find a wedge on the charts here, some shape, size, or description. And just drawing this in here, you quite clearly can see that there's quite clearly can see, I say, but you don't really quite clearly see shit because of the way that came up there. But you get the idea. The rough idea that didn't really properly work out. But you've got this sort of wedge on the go here on the euro dollar pairing, and you also have it on the USD JPY pairing. So what we're looking at here is the relative strength. What's curious then at this point here is how are we going to see things handled in and around one of these other coins if you're also in it forex. You might be going to be looking at the 24-hour potential for a death cross here on the euro GBP pairing as we come towards the denouement of our negotiations with the European zone. So what you could actually see is the euro tanks a bit versus the dollar, but without actually losing any of his own strength relative to, say, things like the GBP pricing. So if GBP tanks versus the dollar, that wouldn't be too much of a surprise coming in with this death cross if it does happen. If it happens, we've got hidden bullish divergence. No, we don't. Or we've got visible bearish divergence. In fact, these no, we don't. So there's that, and then you would then look towards something else, like for instance over here on the euro Japanese pair. So you can see it, right? Cool. So we're coming towards the top side here. Managed to do that section with the divergence between these 2 points here. Also no divergence if we go up a bit. If we don't, it's an bearish divergence. If we see a cup with handle, that would be within the realms of expectation, I suppose. So so you wouldn't want to see the prices going back down below. Oh fuck. My language in this episode's been bad. I'm gonna have to sort that out. Sorry. Excuse me, everybody. Come back. Ooh, I didn't want that in there either. Wanted it there. I only want to get the 50% area. I could have just used the measuring stick, I suppose. 124. If we see prices coming back down here and retesting the 50 simple moving average here, could get a really nice move with this. If we see a retest of this node on the VPVR, drop off here, come back up, push up the way, on the proviso that we don't just simply do it now. Okay, and if we do it now, then nice profit taking target comes in 2 cents above where we are just now. Lovely jubbly. That would be a fantastic move if we were to see that, and that would be strength of euro versus the JPY. So if we did see that happen, then it'd be even better because it would show a bit of weakness of the JPY pair. Let's have a wee quick look in terms of going around the carousel then and make a comparison between JBP, JPY. Do I have that on my list here? Pretty sure I do. Let me just sort them by name. At least that's better than the other one. Yeah, cool. So if we could see this going up the way, then it'd be the perfect storm, the perfect forex storm. Oh, and we've got consolidation here and a pattern as well to boot in amongst the this zone here. Oh, how lovely on the potential setup for what we have here. So yeah, if we see positivity towards, you know, a topside move here with this one, then it could be the end of the Asia Pacific war, right? You know, we're going to look at the zone, and Okinawa and all the rest of it will come to an end potentially for anybody trading this USD JPY pair soon. That would be nice. That would be nice to get a resolution on this. Of course, if we don't, by the way, if we don't, then just, you know, bear in mind, and that's totally possible. If we don't, then we're looking at the potential to come on down, at least to retry these other areas at 100. Talking about a 3% drop in the price there, that would be shocking, and of course wipe out. You know, you'd have stopped out long ago. Maybe there's shorts on board for that one, but then going all the way back over to where we started with the proposition that Spidey Monkey demo came in with here, is that we're looking at about to have a death cross here on the weekly time frame. I mean, a golden cross on the weekly time frame on euro dollar. So let's anticipate a retest of the moving averages. Let's just go back and cast our mind's eye back. Got a cross here, retested, golden cross, negative price action, right? Okay, look over here, this is Forex, we know this is real. Negative cross here, we were off to the races already, though. That's one of those exception times. Golden cross here, came back, retested it. Death cross here, we obviously continued down the way, tested the 50 simple, etc, etc. If we get a crossover here and see a pull down the way, what would be coming in terms of the measured move, just in terms of context, not in terms of like expectations or predicting the future, but simply looking down to as a retest to where that area would be off the measured move of that if it was a wedge and we broke down the way. No need to trade outside the wedge. The beauty of Forex, and obviously the implication with huge leverage, is that you really don't need to look beyond a 3% move. Is ridiculous in terms of Forex land. That's totally fine, and you could be looking down here, a nice move with the potential to go from 122 with a nice profit taking target first coming in at 120. That's where I would look to take profit at as a retest of this, and I'd actually keep my eye out on where the position of the 8 period exponential moving average was on this one, with the expectation, of course, over the next couple of days that this will move towards the top side and probably take profit shy of the 120 area, probably in about 120 and a half or 120.05. Sorry, not really letting up those 500 points. I wouldn't let those 500 points go probably on this one and take profit there, with a view to then perhaps taking profit with the rest of my position down there at 119, or indeed trailing, stopping my way out on any move towards the top side. And that's how I'd probably handle that when we look at it. So that's my way of handling Forex, right? Not my way of handling Forex. I mean, clearly I'm only looking at it on the daily time frame here. The next stage is to go down a level and look lower and try and figure out how things will be. I mean, for instance, here on the 15-minute time frame on the euro dollar pairing, what we're seeing is clearly this upward move with this bearish divergence here on that, the bearish divergence on the DMI, the potential for a cross here, but we're not there with it quite yet. But we have this ability to see a rounding over top with this slightly lower high coming in here, and then of course cracking down below 22,600, taking out the 36 period moving average there, the exponential, coming in here and testing this 50 would be a decent target, and it brings us back into sort of being within the structure of my badly drawn on wedge there. But you know what I mean, we'd be looking at being within that zone where all of those dreams of downside price action become a possibility. Of course, all of this could simply boil away, and we do have to remember that there's certain things that aren't the case. For instance, we don't have the negative trend on the go. We're clearly in the middle of a positive trend, and we're only coming into the chop zone just now. So there could be, you know, volatility with regards to retesting back up to the way, or trying to struggle through the markets. But we can see right here at this potential neckline on the 15-minute chart that you could actually get in on a move here to short this down and simply take profit with this nice 100 or so pip move. You know, if you were to go for a full lot, you're looking at making $100 on a movement down there just simply to retest that wedge, for instance, as an example. And that's how you kind of do Forex, right? People who talk, I mean, for instance, Crown talks about Forex on the daily time frame as if that's how he's trading it. It isn't. It isn't, and but he only talks about it on the 24-hour time frame if you've been watching Crown's Forex Fortress videos recently, then that's what you'll have seen. Of course, that gives you that massively misleading technical analysis in terms of positioning and entry and everything else. So I just wanted to clarify that after I gave out the technical analysis, which is what you would look to, right? Because this is how you would make your decisions. Of course, then you're looking at running on the way down the way if we break past these areas, taking out our low, our previous low, of course, in terms of this initial move is this area that we're at right now with regards to the 122,595, but I'd really be looking over there to 122,394 if I want to try and test the 122 area. I would need to take that out with a bit of kind of downward momentum at that point there. Then I'd be able to have a sort of a 150 point difference between my entry and or my stop, which is in profit. Even at that, you know, I'd be in profit with 100 points between me and the stop and the current price, and that's how you look at Forex in terms of the trend, how you look at Forex in terms of the entry, and how you look at Forex in terms of managing your positions. And that's me retiring from Forex. I'll probably never come back to do anything anywhere near as detailed about that with regards to Forex in the near future, because it's a cryptocurrency channel, right? And you have to my business degree would tell me that I'm supposed to specialize, and of course I prefer trading. I like whatever. I love cryptocurrency, I love the technology, I love the atmosphere, I love the memes, I love the community, I love our community, and all that stuff, all that's good stuff. And I'm a trader, and I think that is one of the things that really makes the difference. By the way, when I give the shout outs to the Tezos community and I say to people that you can trade Tezos, you know this coin called Tezos and that exists in the world, you can trade this one. This is a good coin for trading. What do we see here in terms of the 15 minutes price action on this one? Is we've come down, we've tested off this blue line, we've moved up again. Had I been trading this myself, I might have taken a slight position there. We're up 7.78%, you know, in terms of a move or whatever. Nothing major. This is obviously small term time frame stuff and whatever else, but there we have it. You know, we found that support there with bullish divergence on the RSI and the MACD and the DMI, and of course the ADX flying away off to the top side without any continuation on the DM. Negative, of course, you know, with a potential then, and I'd say to myself, if we take out this area here, pardon me, at 231 on the taking out the 200 simple moving average, by which stage we'd have turned around the 8 period EMA, maybe have a positive slope, then I'd be happy for a trade towards the top side. And I'd be very, 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 very careful in around this area where we're looking at that 231.58, because of course this is where you'd likely see failure, because we're in a current downtrend and have been since 4:15, and the current time is of course 11:30, and that would be your current downward trend. But if we did see a movement outside of this zone, then you're looking and saying maybe we have the ability to take on something along the region of this in terms of a movement up the way that would take us in line for our 50, potentially for our 50 period moving average, coming in there at 238. And if you were trading this along the lines of Forex and using the same leverage and perhaps on a Forex account where you could do both, then what you would experience is far greater volatility and easier to trade and better money making with your moves, you know, because you can experience a 10% move and whatever else, and you can manage your risk the same way, but you can get more ability to scale into positions and be more flexible with your trading when you're talking about cryptocurrency through a Forex platform. If you're looking for a Forex platform, by the way, please go to my my affiliates links in the in the Discord and whatever else, and then jump on over to evolve.markets, which is actually a really decent cryptocurrency and Forex trading platform. And of course I have a referral code stuck in there. Here's your fees. No fees for your deposits or your withdrawals. That's always good to see when you're trading in cryptocurrency as your base currency, because this can be a rip-off point for people in terms of certain markets, so that's fantastic. Of course the minimums exist, you know, but I'd say that 5 milli bitcoins, you know, the equivalent of whatever that would be at the minute, is probably all right in terms of your minimums, you know, for withdrawals. No minimum for deposit, of course, which isn't the same to be said for everywhere. And then in terms of your fees, you're looking at 0.075%. This is not on a per lot basis. This is percentage whatever. It's not on a round trip basis. It's not on a per trade basis. God, finally I got there in the end. Crypto 0.075%. So obviously you're paying higher fees there if you want to do that. And you can trade Tezos through this platform, for example, or you're looking over here at 0.0035% if you're going to do Forex. Okay, it's the same as well for indices and commodities, all available through evolve.markets. If you're looking to do Forex trading with a really decent platform, I'd recommend it. I have an affiliate link. Nobody's ever used it. So, you know, if you want to go, and I've had people say they would and whatever, but if you're genuinely interested in doing stuff like that, then there's your genuine answer for somebody from the most genuine position that I can genuinely do on that one. Interactive brokers give 40x leverage on Forex. Oh, did I not tell you what your leverage is on this one? Obviously, to an extent, you choose your own leverage, because and just like interactive brokex, just like interactive brokex, a lot of that's going to come down to your margin, right? So they give you up to 40%, up to 40x. Your opening margin requirement is at a 40x basis, but in terms of maintenance and running your account, it's on a cross margin basis. One of the confusing things for people who are new to trading or been trading for less than 5 years, for crying out loud, to be honest with you, is when you transition between different markets. And if you're looking at and then the way that they manage their leverage, so it's not isolated. It's not isolated like you get on sort of the likes of BitMEX or Bybit, which is of course sort of your bowling lanes, padded bowling lanes, safety style margin requirements. It's cross margin, right, with an ability of going up to 40x, and it's down to you how you choose to manage your positions. Over here on this one, does it tell you the cryptocurrency? Does it tell you how much we get? I mean, I want to show you that is that the leverage here. I want to show you the leverage. This is just showing us the markets. Trading's evolved to do leverage up to 100x. There you go. So you can get your 100x leverage on your Forex if you so desire. For instance, now I'm not telling people to trade that way. I'm not, but be aware that that is the case. And when it says 100x and it says up to 100x, what that essentially means is that it's probably that you really don't get a choice. You open it up and it's at 100x when you open your position. It's about you to decide how much money you have in your account, because it's cross. Effectively, it uses your entire its portfolio margin. Whatever. Skipping on, clicking that. Daily close, Rockstar. Oh, cheers, man. Daily close. What are we looking at here right now? Oh, 2 minutes. All right, great. Time to wrap up. Daily close on Bitcoin. Daily close, ladies and gents, everybody, members of the jury. Well, it's the most negative daily close. It's the most negative daily close. That you could have anticipated on the day, I suppose, given that we came up towards 24k, right? I mean, we're down $1,500, we're down $1,300 from our 1,000. We're down $1,000. We're down $1,100. God, from our highs earlier on today. This would be the first red day that we've had in a while. Obviously, looking all the way back over towards like that weekend back there on the 11th. So really, we're this here day could be the first, you know, of it could be the first of many. It's unlikely given the trend, you know, statistically speaking. We know the key areas to look out for. It's where these lines come in at. If we see follow through down the way, I'd expect to see a bounce at 21,843. If we then were looking for our next profit taking target, it has to come in there at 23,758. Next profit targets towards the top side have been discussed previously, but you are looking as high as potentially 26,000. The next area towards the downside thereafter, if you did break past this, would actually come back in it again. This 8-period exponential moving average in and around about the 20,500 area where we spoke about 20,800, where we spoke about before the move up there during yesterday's video, and then of course down the way towards this 19,800 area would be next. This is a red candle starting off the day today, which is obviously not a big deal really, because the day's literally just started, but but when we go down the way towards the 4-hour time frames, we can see that as we came in towards the end of the day, we had a few red candles, and that's the first time that really that's happened so much in a wee while. If I just change the settings on the chart here, here's something that you might not know that you can do. Let me just see where the thing is. Average lows, highs and lows, block price, scale, data. Where's the appearance? Is it appearance? Background, blah, 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 blah. There's just something you might not know you might not know you can do. He says, as he kind of laughably doesn't actually find what he was trying to tell people about for a few hours. There's your session breaks for you, so you can see a session break. There isn't a session break in cryptocurrency, but it just comes in on every midnight. A couple of red candles going into this with a bit of a pullback from the high of the day, spending 8 hours running down towards the downside before we ticked over. Didn't do that yesterday. We did that the day before, kind of, but not much. You look at the girth of these candles and all the rest of it. We didn't go down past. We didn't go down much. We didn't. Whatever. Didn't do that then. We did it here, but they're all just doji candles. Didn't get this movement. And then, as you can see, every other day, really, we've started off, and within the first sort of 4 to 8 hours of the day, we've had a nice rise up recently. So I suppose if you're thinking to yourself about, I'm going to go to bed now because it's around about midnight time, and I'm going to get up tomorrow around about sort of 8-9 o'clock in the morning, blah blah blah, what you're looking to see is, when you open up your chart, is to see, did you actually get this green candle falling through towards the top side, or are we looking at things in a way where we have to say that maybe we're going to have one of these days which is maybe not so positive like we saw last week. We'll have to see how things go, but there you go. That's how you get your session time for you on there. On the 4 hour, doesn't make as big a difference in terms of looking at things. On the 1 hour, you can see that the dynamic that we've had today has been one of these up and then down days, which we didn't have the day before. We didn't really have the day before, and we didn't really have the day before. We did have it over here, and then we didn't get follow through. So what I'm talking about is whether or not we get follow through. We didn't have it then. We didn't have it then, and then in these other times, it's about that was the downward trend action. So we're looking to see here at this point if we get follow through. Movements down towards this zone, and need to see it clicking in again at 21,800, or else of course things get rather negative rather quickly, but not from a massive macro term position, just from a sort of where was best to sell, where's going to be the best to buy, how we're going to ride the wave of this trend. That takes me full circle, having mentioned the thumbnail, chat, and the title of the video itself here, and I'm going to then be able to move on and tune out. Let me just make sure I've not missed any questions or anything else. The volume is just mind-boggling on Forex. It totally is. It's mind-boggling on Forex. Absolutely. It's really interesting, and it's really... It means that when you think to yourself that you're going to trade with the trend, that there's something there. It's like Forex can be quite good. It's cool as well. I didn't know you traded Forex myself, Demo. It's cool that you do. Killed it, Rocky. Thank you so much, Demo. This has been a little bit of everything in today's episode, right? We did Bitcoin, then we did Ethereum, then we did Chainlink, then we did Tezos, then we looked at ZEC, then we looked at XRP. We also looked in today's episode at some other coins, such as VET with its Bitcoin and dollar pairings. We also looked closely at other ideas like Tezos and Link with the Bitcoin pairings. We talked about the historical relationship with with the coins against Bitcoin, and how you would look for the correlation in your portfolio if that's what you're thinking about. We talked about the difference between hodling and trading. We talked about what it is to be a trader and how to become that, and what your goals should be independently in order to become a self-reliant, and how to be a good trader, what the number one skill is, and we talked about that in detail. We talked about Forex. We looked at the reasons that volume is important, and looking at the contrast between that and the crypto markets that we're used to. We looked at some stocks. We even looked at Beyond Meat and talked about gaps during that period, and where would be reasonable places to take profit, to enter into trades. We talked about risk to reward in today's episode. Nothing that we spoke about was predicting the future, although a lot of it looked like it. We put on a parallel channel around about the Bitcoin pricing, and we actually put 2 of them on the Bitcoin charts to look towards areas in the future where we could see profit taking happening. We looked at the Fibonacci extensions, and we talked about price profit taking targets towards the top side. And I reminded everybody to never shame themselves and always give yourself a pat on the back whenever you take profit. Nobody ever went bust taking profit. We're all about the war against the fishes here, not just feeding your family for a day. We want to take it to them and actually drive them back into the oceans, and that means you're going to need to take profit from time to time. Now as well, we also talked about we're all the way around the world with Forex, looking at the USD pairing with euros, saying is there going to be a pullback versus the in the euro dollar, and how would that function, and how could we see this happening with regards to the relationship, the interdependency amongst different currencies. We actually did this by looking at the USD, the euro dollar pair first off, then we moved on to the USD JPY pair, and then we looked at the USD or the euro GBP pair, and then the euro or the GBP JPY pair, and then back on again towards the euro dollar to go all around the world to make a point about how you would structure yourself with regards to understanding the trend. Then we broke it down a bit further, went down to the low term timeframes and talked about how you would actually manage an entry in Forex, and then we talked about managing a position as well with regards to Forex. So we have done a little bit of everything that people talk about when it comes to trading. Actually, in fact, the only thing we haven't talked about is commodities. I did say the word commodities though when I talked about evolved up markets and said that you can trade them there. We also talked about trading stocks and the different apps that you could use in the UK. Of course, these apps are available mostly worldwide, but you know, we talked about these sorts of things, and we talked about, well, we talked about so much stuff, right? And it was frickin' tastic. It's been a wonderful episode. I really have enjoyed it. If you wouldn't mind hitting that like button, I swear to God, I do appreciate these things. I genuinely do. It actually, you know, makes me feel good to see it, and so I really, really, really do appreciate it. And what I really do appreciate as well is you taking the time to spend it with me here. I see people like Patrick Pellegrino coming along here, going hard on the stream today. Yes, thank you. I really did put in the effort. I think I'll probably take it a little bit easier tomorrow. I will do the in-depth technical analysis on a Friday that we do, you know, every Friday with a look towards the weekend, but hopefully try and scale it back a bit. You know, yesterday's technical analysis was super advanced. I wanted to be quite intermediate today in what I did, and I think it did actually kind of more or less stay within that between the Monday and Wednesday idea. You know, Monday being beginners that I did, Wednesday being super advanced. I think I kind of did stay in there mostly, but there was areas where I went beyond it, even at the top of the show where I talked about swing failures on the RSI and how that didn't happen on the Bitcoin USD pairing. So big shout out to folk like Tradespawn, who's been here the entire time. Big shout out to folk like Demo, who's been here the entire time. If you yourself, Patrick Pellegrino, tuned in earlier on and I didn't give you a shout out at the time, I apologise for it. And we've also got other people that came along like Tanner Osborne shouting out killing it Rocky, because we were doing some fantastic TA at the time. I really do appreciate it. We've got K-Doc, who always comes in here with his Scottish humour. By the way, what K-Doc there is a Scottish humour. You might sometimes as like an American read the stuff that K-Doc says and think, hey, hold on a second, no, that's Scottish humour, it's all good. You also might see stuff like Demo, he's Irish, he lives in San Francisco, international perspective here on the channel. And you've got the likes of Zoner, who's been here with almost every live stream we've done so far, as well as the other regulars. These are all regulars. And you've got Dragon Master, who was here earlier on, who is talking about my buddy is up to be in the Cobra Kai season 4. How about that, says Dragon Master. Fan-frickin-tastic. That's awesome. I'm super happy about that. That's quality. Do you know what, actually, one of the members of the Discord, a really nice guy, great guy, one of the members of the channel on YouTube as well, he's called Fez, really great guy. If you see him in the Discord or whatever, he's not super active at the minute. He's doing some renovation in his house, and it's difficult life's difficult enough, and then when you introduce plaster dust to life, I tell you what, it becomes almost impossible. But he's a really nice guy, and he's good friends with that Indian actor who was in things like so many things. Recently, it's that one where they're in space. They're trying to go. They're in space. Something in space. A spaceship. Is it going to Mars? I think it's going to Mars. Not really. Oh God, what was the TV show called? Big TV show came out recently to do with space. Not The Expanse. Not the documentary with Elon Musk about Mars. another one, and he's an Indian actor. He's really good actor, and he's friends with him. Anyway, it's cool to know people that know people. That whole 6 degrees of separation thing's awesome. If you don't know what I'm talking about, Google 6 degrees of separation. Incidentally, by the way, if you want to know, I used to have less than 3 degrees of separation to the Pope. How about that? That's a good laugh. But Trade Spotting met and went on a personal walk with Dalai Lama. How about that? So they're not personal friends. Let's be honest about that. They're not pen pals. But for a moment there, I had 1 degree of separation from me and the Dalai Lama. You don't get much better than that. So then we also had Artie Pyle coming in here, and he was talking about being a trader and getting into trading, and that's super awesome. And we talked, and I hope it gave some people some confidence. We had Navin Ethan who came along here, and he kind of set me off on one when I talked about the regardless of how you feel in terms of whether or not you're a quick learner or a slow learner, that's got nothing to do with your success as a trader, and it's all going to come down to your discipline, your psychology, your commitment, and your willingness to try, and your consistency with learning. And as well, it's going to and that people who describe themselves as being slow learners often are described wrongly. They describe themselves that wrongly, and people who describe themselves as fast learners are often just full of hubris and arrogance. I don't take somebody's personal statement about their own ability to learn as being important at all, and I know that Navin Ethan is well on the way already to becoming a really good trader. We also have AB Lopez, who came along here earlier on and poked me with fun when I said the cats when I was talking about loving my friends and all that stuff, and poked some fun at me. And we had other people such as Simao Goncalves or Gonsalves or Goncalves or I'm going to just say Goncalves, but I'm pretty sure you don't have a hard C in there. It'd probably be Gonsalves. Rocky, can you talk about the 4-year halving cycle? I can. I'm sorry I missed your message earlier on. I'll do it tomorrow, or I'll do it some other time. Hit me with that message again, and we'll talk about it some other time. And then again, Impatas, and so many. All of you people deserve a great big shout out. If I've missed your name off the list, then I'm sorry. I'm glad I gave a nice little roll call at the end. It's always fun. And yeah, great, nice one. I did have the Dalai Lama, a dilly dally. Tradesman says, I did have a dilly dally with the Dalai Lama. Try saying that 10 times fast. Anyway, that's quite cool. You're not talking about the uni you spent. You're talking about me here, aren't you? Yeah, Tradesman's talking about me there. Quite modest. Worked in one of the world's largest banks. Started relevant businesses. Did all uni. Spent years working on his TA and psychology, all to be able to one day help us. Yeah, well, that's it really. And a lot of hard work. By the way, for everybody out there in the world who's watching along at the minute, we all have ups and downs in life. We all do, and trading actually, is a catalyst for a lot of those ups and downs. Let's be honest. Working on your own psychology is really important, and hopefully, everybody can take a little leaf from my book and hopefully become level-headed with their trading and stuff like that. I try to really put out, while I'm not doing self-help and I don't explicitly tell people, I am very much manipulative in the way that I present my episodes, and all the time I try to manipulate you. I'm very Machiavellian and very manipulative as a YouTuber in terms of trying to give you confidence, right? In terms of every other aspect of that sort of thing, I let it go out the window, but that's what I want to do, and I put a lot of effort into manipulating your psychology slowly across time so that you get that confidence and you grow, and I hope that has an effect, and of course that's all good. And yeah, that's it. It was all mostly jokes and over a cup of tea. Yeah, that's cool. You did have a really, you deserved to meet the Dalai Lama that time, and it was during Northern Ireland peace talks. You deserved it. He recognized your character and decided to go talk with you. So that's what happened. You deserved it. Don't sell yourself short. Yeah, it's a good one for a dedicated video. Great, cool. Okay, cool. Nice one. Oh wait, what's a good one for a dedicated video? What was a good one for a dedicated video? Were you talking about the Forex stuff or something like that? Let me know what, or was it the halving cycle stuff or what? Just qualify, just Just clarify that for me there. If you're still there, Damo, what's a good one for a dedicated video? Or are you talking about getting me and TradeSpotting on the screen, or just even TradeSpotting himself, just to go and talk about what it's like to meet the Dalai Lama? That's probably, it's on a lot of people's bucket lists, and we're talking about people who are right at the very top echelons of the world, that have achieved almost everything that you could possibly want to achieve in life, still have that on there as their bucket list, and they don't get to meet, and they have to make an appointment months in advance, and it's maybe only for 15 minutes. The fact that TradeSpotting got to walk around with him for quite a while and chat personally in a one-on-one situation is good. The stock to flow is one for a video as well. Okay, cool. That's one we'll do. The 4-year cycle. Yes, indeed. Okay, cool. Nice one. All that good stuff. I have already talked about stock to flow before, but it was a piss take video. It's not worth looking into, to be honest with you. It really isn't. It's just it was just a bit of fun, a little bit of character assassination for the guy. I mean, I have got zero respect for the guy that made the stock to flow model because he is anonymous. I just how can you respect somebody who's anonymous? How can you? How can you? It's as easy for me to have respect for this cup as it is to have respect for somebody who's a nameless, faceless individual. In terms of the idea behind it, I think that there's a lot to be said about it, but I just think that I'd have a lot more engagement with the whole topic if he wasn't anonymous, and I sense that there's a lot of people out there in the world who are actually more inspired by the fact that he's anonymous because it's like a branding thing. He's like the Banksy of crypto coming up with this big model, and I just think it's all bullshit in that sense. But anyway, yeah, a hedge fund guy from Amsterdam. That's what he calls himself. He is definitely from Amsterdam. I don't believe it though. I don't believe he actually works in a hedge fund, right? I don't believe it at all. Okay. I don't. Not 1% of me believes he actually works in the financial industry or ever has. Okay, I don't believe it. I know that's what he says about himself though, but he's anonymous, and it'd be so easy for him to prove it. Just stop being anonymous. What difference does it make? Zero. Is he going to have people hounding him down the street? No, he's not talking about the stock to flow pedophile model. He's talking about the stock to flow model and say, why be anonymous? It makes no sense. And he says, oh, it's because I don't want people coming to me and talking to me about stuff. Look, mate, your voice isn't hidden in the videos. Your silhouette is visible. Every single person who works with you or whatever who sees any of this will be able to recognize you really easily. I could probably take your videos and change the brightness and contrast on them and everything else and get to see a rough outline of your face. What's the point of being anonymous on the internet in live videos doing one-on-one conversations with people? It's a bit of a joke. Now, if I'm just being a bit cynical and I've missed something and it's like, old people who didn't understand Star Wars back in the 70s or something, and I'm just being a grumpy old fart, I apologize, right? Because that may well be the case. I just think it's stupid, right? Just like Crypto Face, the guy that wears the mask and does in Crypto Face, and I've got a mask on my face and I'm doing crypto. I think that's stupid, right? I think it's stupid. Okay, I do. I think that's stupid. I also think if you're going to come up with an idea for an indicator and then you call it something like cipher, that's stupid as well. Come up with a new word. Stop reusing words. The taxonomy, the trading technical word, you could get a dictionary, right, for trading, and it would have 3 pages on it with 100 different words, but every word would have 10 different definitions at least, like when used in this context, it can also refer to, stupid stuff, right? Anyway, that was a bit of pent up energy I got out of me there. You can see the prices have dropped down to 22,590. It's not the most enthusiastic start to the day so far, but what can you say so far? It's a bull trend. Is this offering up as a buy opportunity? Well, potentially. This little kind of toppy bit here isn't so great. We have this little, in terms of the 1 hour time frame, 15 minutes is probably looks like a head and shoulders type idea. Well, this sort of idea with a neckline just here. I think if we do break, it's just a briefly sort of, if we break 22,413, the chances of us going down to 21,789 double, really, in terms of just how I'm looking at it. So we're more than twice as likely to get there if we move an additional if we move $150, the chances of us moving another $600 have gone up by a solid 50% in my book, is how I would look at that right now. If you want a quick summary of the TA in a way that I think you could probably run with. Anyway, did Plan B downvote one of your videos? Plan B, again, fuck's sake, Plan B. Probably, Probably, he probably did. If he's ever seen me talking about him, I most certainly would get a downvote from him. Plan B, fuck's sake. I hate him. I don't know what it is. I don't know what it is, right? I don't know what it is. It might be partly some strange, unknown prejudice that I have inside myself towards men from the Netherlands, right? That I don't even know about, some hidden thing in the back of my head, because I know, having been to the Netherlands and spoken to a lot of men over there, and being kind of disgusted with their history during a certain decade in the last century, disgusted with it, and then their subsequent denial of it and the so-called neutrality and stuff like that maybe has some sort of influence over me. I don't know. That's a good idea, Rocky. Should get other YouTubers on here and hold their faces against the coals. Maybe I should. Anyway, I think that the stock to flow model is good. It's just named wrong, because if you look at what is the stock to flow model? Gold, right? Bearing in mind this is, from these commodity markets back in the days where this idea came from, right? Gold stock to flow model simply tries to measure the scarcity or abundance of gold. It does this by understanding the stock and the flow of gold. The stock is the amount of gold that has already been mined and currently exists in the marketplace. The flow is the amount of gold that mined each year, right? Now, a departure point. So we understand what it is. What's it for, right? Okay, what's it for? So there's flow, there's stock. Gold stock leveled out for the past few years. However, it's a steady decline since 2008. Is a good predict. Many different factors affect the gold price, especially in gold is priced in terms of. This is a random website that I've not read this, not researched this at all. We're going to go through this process together. Either at the end of this, I end up eating some humble pie and have to go way off and have a wee cry on my own, or you kind of get the point that I'm making about this guy and this model and the name of it and everything else. It's going to go one or two ways here. I honestly don't know which way it's going to go. Many different factors affect the gold price, especially when gold is priced in terms of fiat currency tethered to nothing. Therefore, Bitcoin may be a bit. Oh shite! This article here is talking about Bitcoin, so it's obviously and Plan B. Right. This is the wrong. That's the wrong website. I'm sorry. We're going to have to go with a neutral source that isn't. I don't know them from David. So or from Adam, and I don't want to talk about Bitcoin. I want to talk about gold. Where can we find one? Like if I put in Investopedia here. For the actual stock to flow model, stock to flow ratio, monetarymetals.com, right? Okay, cool. This is maybe, not written by somebody who has only ever invested in cryptocurrency. Stock to flow ratio is the amount of a commodity held in inventories divided by the amount produced annually, is a measure of abundance. Gold has the highest stock to flow ratio of all commodities, and as a result it should normally retain in backwardation as there is no shortage of gold. That's the point of the stock to flow model right there, which is the opposite of the point of the stock to flow model that Plan B put out. Anybody who worked in a financial institution for any degree of time would know this, and probably wouldn't have made their own thing such a meme with regards to the stock to flow. Now, I understand it, and it could be that, translation problems and everything else, and it could also be that he's deliberately chosen to do it from this point of view of making the point that it's scarce and going to run out and all this sort of stuff. He's making that point, and he's using it to do it. But however, stock to flow is not a predictor of price in the world where it came from. A guy came from that. There was a world that existed that had a stock to flow model in it. Then there was a guy who claims to have come from that world, and he claims to be a hedge fund manager, and he's so big and has so much money attached to him and so much experience and everything else that he has to stay anonymous. He has to stay anonymous. Can't have everybody find out who he is or what hedge funds he runs or his success or his track record or any of that. Can't have any of that. No. Or for him to be able to give financial advice to people using his accredited and insured, financial advisor status and his ability to do that in an accredited way, or rely on any of that. Instead, he has to go anonymous, and he has to talk about how the price of in the future of this asset is predicted by a stock to flow model, which is not what this is for. In fact, it's the stock to flow shows you about how much the price of something is likely to be affected by an increase in supply. If there's a supply of an asset such as gold, or a commodity such as gold, it can be assessed, and we think that there's going to be 1 gold added to the supply of gold every day, and that there is 100 billion gold already, and we're going to add 1 gold to the 100 billion gold. How much is the price going to be affected by changes in supply? None. It's not going to be affected. That's the stock to flow model. It helps you understand that gold, therefore, is a store of value, because changes in the supply of it will not affect the underlying price of the thing itself. Therefore, through the stock to flow model, you can make the assertion that gold is a store of value. Right? That's what it was. You take it and you put it into Bitcoin, you change the whole reason for it, and what you're talking about is how there's an asset, which the whole thing, he didn't invent this. Satoshi Nakamoto came up with the idea in the first place, and he says, and Satoshi Nakamoto in the fucking white paper is talking about how this is going to work, and he describes what would be the stock to flow model. And then fucking 10 years later, or 7 years later, you've got some random Dutch guy who comes along wearing a baseball cap in a shadow in a video talking about how he's a fucking hedge fund manager and he's come up with a stock to flow model. It makes no sense, right? If you come up with the supply to demand or Satoshi's vision model, right? The Satoshi's vision model is the stock to flow model. There's a better name for it right there. Why is it a better name for it? Because it's not misappropriating the name from something that exists in the world already, which is to do with price stability in the face of supply changes. So if you found a mine in the world that had 2 billion, 200 gold. You get, at the minute, there's 1 gold added every day to the gold in the world. If you found a mine at the minute that had 200 gold, how much would that affect the price of gold? Not much. Why? Because of the stock to flow model. What does that mean? Well, it means that gold's a store of value. Why? Because if the supply of gold were to suddenly go up by 3%, then your value hasn't just suddenly dropped by a ton. Whereas, what does it mean if you were to introduce 3% more Bitcoin onto the market today than had been introduced yesterday? What would happen? What would happen if you changed the stock to flow on Bitcoin? It would get fucked, right? So what would happen if you took the 150,000 Bitcoin that Mt. Gox are going to be giving out to people and you dumped them onto the market in the next couple of days? What would happen? What would happen? Let's look at the stock to flow model. It says it would be fucked, right? That's the stock to flow model. If you want to use it like a stock to flow model, you don't use it to predict the future in terms of price. It's just not what it's for. Therefore, he doesn't work in a hedge fund. He isn't a hedge fund manager. Everybody that interviews him doesn't challenge him on this, and it's all bullshit. And I currently patiently await the other side to that argument, because I don't know what it is, and I can't get past this point of view without just simply relying on other people's points of view. Need to dive into the Celts plan B uses seems almost the inverse of this. That's what I'm talking about, right? So what would you call it, mate? What would you call it? Damo, what would you call it, right? What would you call it? You're from Ireland and you live in America. Because you're from Ireland, right, you like soda farrell, okay? You like soda bread. You do. You like it. You like a soda bread. You like a wheaten loaf. You like a soda wheaten loaf. You like a soda farrell. You like a nice chunk of bread, right? Then you go over to America and you say you've invented bread. Again, this is bread. This is the bread. You're from Ireland and you had bread. And you go to America and you're like, here's bread for you. I'm from Ireland. I'm going to be anonymous though, because I don't want you to know where from in Ireland or my name or any of my accreditation. I don't want you to know any of that. And I've got this thing that's called bread. And people say to you, what do you do with it? And you say, well, back in Ireland with bread, what we did was we cut it up, we toasted it, we put a bit of butter on it, slapped a bit of bacon on it and ate it. Now I've got this bread, and what you do with it is you fucking fling it out the window and you don't eat it at all, because that's not what it's for. And I'm calling it bread. Yeah, I don't think so. I don't think you'd call it bread. I think you'd call it something else, because it's not what it is, right? So there you go. I just put things into context there, and that's my personal opinion on it. And I'm obviously far too animated. I don't know, what is it today? Why am I like this? Why am I like this? I don't have an answer for you. I'm too emotional today in this episode. Too emotional. Far too emotional. Anyway, cool. It's been it's been a pleasure. It's been an absolute pleasure. I've loved talking to you all. I really do. Every time we do one of these episodes, I love the live stream format. It's been fantastic. Let's just see. The linear regression function in market value equals 3.3 times the linear stock to flow plus 14.6 can be written as a power law function. Market value equals exponential 14.6 times the stock to flow to the power of 3.3. Yeah. Good. Nice one. And just a quick question for you. See this bread that you make and then you fling out the window, and you don't cut up, you don't toss, you don't put butter on it, you don't put bacon on it, you don't eat it. You just take the bread that you've got and you fling it out the window. Can I ask you, do you put baking soda in that bread or not? Just out of curiosity, sorry, that's extreme. I am interested in the maths behind it. I am, and I don't think the guy's an idiot. He hasn't done this and everything without being an idiot. He hasn't at all. It's just that if he were to say at any point along the way, there is this, that website I looked at first that says the stock to flow model, blah blah blah, and then it started talking about Bitcoin, and then it went way off track, and then I didn't want to read the website anymore, right? If he instead presented this thing and says, there's this model in gold which says, because gold is so abundant, that if more or less supply comes onto the market, its ability to affect the price of gold is minimal, and therefore gold is a good store of value. And I'm going to make a similar model for Bitcoin, but I'm going to actually change it so that instead of being able to we can use it to predict the future. I'm going to call it stock to flow, but that's not what it is. This is different to that because this is how we're using it. If he talked about it in that way at all, then I would think, yeah, cool, this guy used to work in a bank. As it stands, he doesn't. And that guy probably can't even spell ABN AMRO, never mind working there in the past. Let's get this soda bread. Yeah, totally. Anyway, I am interested in those maths, and I do think it's true. And I think that if you take the supply of any asset, right, anything in the world at all, and you look at the availability of it versus its price, and given it, if it is a desirable product, that you will be able to chart it out. And I would say to you, how about we did the same thing with something else in the world? And I think would you yourself apply the stock to flow model, given your understanding of it and where it came from, given that it only exists in this commodities market, that's the only place it ever existed before, and that nobody ever talked about the stock to flow in any way other than in that context until Plan B came along and said a completely different thing. Would you then think it's fair at this point, given the evolution of stock to flow as a term, to look into really expensive bottles of wine? And think to yourself, how much should I go out and invest right now in really expensive bottles of wine? Because there's a distinct stock to flow relationship with these bottles of wine. I mean, if I look back over here and think about, for instance, this Chateau Margaux 1787 that was sold for £225,000, when at the time that it was sold, the insurance companies doesn't tell you the amount of bottles that there were. But anyway, I think it's pretty clear that there's a diminishing supply of these bottles. I think it would probably be pretty easy for anybody to go back and say, well, look, there used to be 100 bottles of Chateau Margaux, and back then it cost you 100 quid for one bottle when there was 100. Then a year went by and there was less bottles of it, and it cost you 110 quid for a bottle. And now we're in the situation where there's only 10 bottles of it less, and at this price it's going to probably cost you £1,000 for a bottle, or 200 grand, or 300 grand. Do you see what I mean? Do you see how this is like everywhere in every aspect of life anyway already? And what he's really done is he's taken something we all know to be true that exists, which existed in the white paper for Bitcoin in the first place, is the entire raison d'etre for Bitcoin's existence and how it works with the plan for Bitcoin. And then he's changed and he's like, oh, I've got this unique insight. I have this unique insight. Right? Well, anyway, I tell you what, I've got a unique insight into expensive bottles of wine now. I think you should probably put me on YouTube. But however, I'm going to wear a baseball cap. I need to use a fake name, and I need to sit in a shadow, because if people found out about my expertise when it came to pricing out the future value of a diminishing supply asset such as rare bottles of wine, or for instance Picasso paintings, or anything which has a hard finite value, anything at all, cobalt, or even for instance, or what? Not cobalt, but not cobalt. What am I saying? You know, like that metal that's really, really expensive that goes in phones. Is it cobalt? I don't think it. There's a really expensive metal that goes in mobile phones, that's in all the mobile phones we use, that African slaves die every day digging up. You know that stuff that we put in our mobile phones that African slaves die every day digging up? You know that one, but African slaves, right? I'm not being racist here or anything. This is the literal fact. You know that metal that African slaves dig up, which has got a finite supply. It's one of the rarest metals on Earth. You know, you could probably apply something more to that. Now, would you do that or not? Given that the stock to flow model is to do with the volatility of it as a relationship for its store of value, probably not. Was there an opportunity in the past? Probably was. Could you also make out some sort of thing and say, like, if you were to take the amount of cobalt that's in the ground and we figure out how much there is in the world of it, blah blah blah, could you do the same thing? Yes, you could do it with uranium, you could do it with anything. It's really stupid and pointless thing. So that's what I think. And what he's done is he's garnered success off the back of it. Now you also find, if you go and look at Plan B's own website, you know, with the stupidly professional name, 100 million, what's his stupidly professional name? I love his professional name. I love his name, which screams I work in a bank. 100 million USD. This guy works in a bank. Definite history of financial services, this guy. Oh, it's 100 trillion USD, is it? Right, and then you go and look at his you look at the way that he's then advanced this thing as well. Then you start to read the absolute worst. Stoned off your... Yes, he lives in Amsterdam. Yes, he did. And he wrote this article, believe it or not, inside the Grasshopper cafe. Can you believe it? He wrote it inside the Grasshopper in Amsterdam. Yeah, he did. It's not... Yeah, I know, you wouldn't think so. Not from the way that he looks, his socks, his name, his website name, or the content of what he says. You'd never think that he was completely stoned off his face when he says things like, the classic example of phase transition is water. Water exists in 4 different phases: states: solid, liquid, gas, or ionized. It's all water, but water has totally different properties in each phase. Let me ask you a question, Plan B. Have you ever looked at water? Yeah, but have you ever looked at water on weed? Anyway, you can read through his articles and it's complete bollocks. All of it is complete bollocks. Now, is the guy smart? Yes, he's smart. Is he good at maths? Yeah, he's good at maths. Has it got any basis in reality, what he's saying? Not really. And is he clutched this? Yeah, kind of. And was it completely wrong, historically speaking, in terms of his like the first edition of the stock to flow model? Like, if we look at stock to flow model from a couple of years ago, like, what if we go like stock to flow model Bitcoin, and we use search tools to do this? Tools, anytime, custom range, and we say we want to look at examples from 2016 to 2018. That's quite generous of me going as far as 2018. What articles here? So we want to find an article from back then, which hopefully will tell us the price of what Bitcoin should be at right now, given how he said it would have been in the past, just to see the efficacy of the model. This is a whole fucking article that's been written on it. This is how deep this guy's scam goes, and why it shouldn't be called stock to flow. Come on, give me some predictions. What's the point in writing all this crap out if you're not going to predict what the future price would be? What's the fucking point? If you can do it yourself, if anybody out there who happens to still be tuned in, which I'm sure there's very few of them, is if you could find what he predicted in the past, the stock to flow model predicted the price of Bitcoin would be, that would be cool. Also, there's another problem with it, is that after a certain point, because it's maths, is based on this going up exponentially against a logarithmic supply, right? You're talking about an exponential increase in price against an exponentially decrease in supply. Actually, the maths behind it and that formula they put out very rapidly move into the infinites. You know, very rapidly. Like, by the time, like, Bitcoin is at an infinite price about 75 years before it's finished being mined. Let me just see if we can find an example, though. Where does it put us in terms of the future price? Do we have any future predictions that are within touching distance on this article? No, doesn't look like it. Has this got this? Has this got it here? No, that's not it. Here's a different one by someone called Lewis and Smith. Anyway, it seems to be some different sort of stock to flow style model thing. Anyway, to say that it's inaccurate is wrong. To say it really is because it's based on because it's an analog for the entire raison d'etre for Bitcoin, right? So to say that it's inaccurate is wrong. To say that it is named inaccurately is also kind of wrong because it is about the stock and the flow. Okay, it is. That's what it's about. And the people who invented the stock to flow model for gold don't own that forever without it. You know, like I say, taxonomy and trading. There's 50 different usages of every different word. Like the word divergence, you'll find that all over the place in trading, and you need to know the context. So can I accept that there's a use of something that's been used in the past? Yes, I can. And all that I can, right? And all that I get it. But does it deserve the attention that it's got? No, I don't see a single thing off of this that makes it deserve the attention that it's got. I just wish I had an easy answer for you, but the internet doesn't want to tell me what it is. Where does it say 55k? What's this picture look like? I wanted to find an example from the past so that you could see just how wrong it was in terms of its predictive qualities. Here we are coming towards 2021, and we're up there. You know, I mean, it's achievable. Okay, that's achievable. That's achievable. That's achievable. If I'm wrong about this, by the way, and it has been correct all the way along historically and hasn't been edited to catch up with what it says, then I absolutely take it back. There's just some key numbers. There's 55,000 after the next halving. Yeah. Where though? Anyway, if the price goes to 55,000 after the next halving, then that's just, you know, that was the design of the thing. Like that's why people initially got excited about Bitcoin. When people told people about Bitcoin back in the day, it's why they got excited before the stock to flow people came along, and just, you know, completely annexed all of that idea for himself. And the way he did it is he put some numbers around it, and really it works in this period of time in terms of showing you this is the supply, this is the amount of something, this is the demand, assuming a more or less consistent supply of demand in the face of a more or less consistent, precisely exactly consistent diminishing of the supply. Then it's easy to calculate, and it doesn't need all these maths. And you can do the easiest way to calculate this is quite simply to go over to TradingView. Go to the Bitcoin pairing. This is the easiest way to come up with a stock to flow model. Go on the monthly chart. Oh, go to something like the BLX index, so there's more history. Where is it? Bloody BLX. Right. Go on the BLX index, and you just do this. There you go. There you go. Now, it didn't take me any maths or difficulty to do it, and I think I've got a fairly good stock to flow model now. It's not going to be 100% accurate. I don't think it's fair for anybody to say that anything would be 100% accurate. Just like your man 100 trillion USD plan B would say that his own model is not going to be 100% accurate. Of course it's not. But I think my model's pretty good. It's pretty good so far. I think it's pretty good. I think that's pretty good. There's my stock to flow model for you. Anyway, that's enough piss taken. I'm going to catch you all later. Thanks so much for everybody tuning in. I've said that about 1 billion times. I suppose I don't really need to say it anymore. Thanks so much to Andrew Clawhammer for having, or Andre Clawhammer for having tuned in today and subscribed. Pardon me. Yes. Bitcoin current price 22,808. seems to have picked itself up off the floor from that 15-minute time frame thing that we're talking about there, which makes sense as well. That it would, it was in it around about an area of support and resistance where that neckline was. This is going to be a zone 60% of the time those ideas fail. So there's that idea for you. And that's all good. Nice one. Excellent stuff. Right. Okay. Love you all. Catch you all next time. I'm not actually going to bother sticking the thing up on the screen telling you when I'll be back. I'll be back again tomorrow. If you're watching this, I'll be back again tomorrow. I'll be back again tomorrow. Okay, cool. You'll see it. Hit that like button, hit that notification bell, and all that good stuff. I'm literally about to hit the end stream button. I'm super glad to not see anything popping up on the screen right now demanding attention. So that's great. If I've missed something happening along the way, I missed anybody's questions, then cool, I'm sorry about that. I'm totally fucking wrecked.